dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and it's turning out to look like a morning which will be slow and steady, all things considered. Someone asked me this morning, do you think the war is over? I said only Trump knows, but it seems like we're not going to go back to the state before. Neeraj, you can't stop laughing.
So yeah, viewers, I'm going to reveal a small secret inside, but it's brilliant how our lives have moved from a Trump post to a Trump post. It's quite stunning, really, that the markets move, geopolitical moods swing all around Trump post, isn't it? And we are factoring and trying to figure out when is the next Trump post coming and what it could indicate.
20 years back, if there was a Black Mirror episode, would you have believed it?
Yeah, I don't. But you know what? It's not just a Trump post. I think what markets are reacting to is also real data, right? So there's, for example, LSEG tracks the number of ships actually going through the Hormuz. And it's still about 1 or 2 a day. So the blockade is still on. The fact is that the blockade is still on. There's 13 million barrels of oil that have been displaced in the supply. And I think the Trump posts are more part entertainment as well.
Yeah, by the way, just wondering if you guys think, and I know you track this much more closely, but maybe you have a thought too, that is the blockade turning out to be a lot more effective for the US than the bombing has? Because in effect, if Iran may control the neck, but if you can't let the blood flow from the arteries, which is the either end of the or the main end of the Hormuz, then it doesn't serve any purpose, right? And US is kind of controlling that.
No, so if you're saying is the blockade turning out to be more effective than the bombing they did as a military tactic, it's the timing of the blockade. If they'd started with a blockade, then they would have been bombed. The Iranians even now can go and attack these US destroyers or US ships there. They're choosing not to. There are talks happening at the back end which seem to be working out. That's the reason. So the first day of the US blockade, since you mentioned it, and this is something that caught my eye, the CENTCOM, which is actually managing the blockade, the United States Central Command, puts out a report every day of what has happened in the blockade. And then they said there was X number of Iranian ships which came, I think 4 or 5. They came, they gave them a warning, please don't come through. They turned around and left. None of the US forces had to board those ships to enforce a return. That need not have happened. So it's not just happening that the US turned up in that area and then everyone was like, oh, okay, this is really worrisome.
And
this has happened after a while.
Where we are at this moment is a complete different situation with regard to Iran's armed forces and availability of missiles, etc. At least,
you think they have less?
As per the US claims of...
Come on. I mean, they've been saying that from the day one. I've been hearing that the army is gone, the air force is gone, the navy is gone, but I mean, we saw evidence to the contrary. Okay, here's what's happening in markets this morning. All US markets closed in the green, pretty much erasing all losses since the Iran war. I think Indian markets are some way away from erasing those losses, but US markets definitely seem to have done that. Key indices in the green. If you pull up futures, then at least nothing alarming being seen in futures as well. Completely flat. Netflix was one story that stands out. Its shares tanked about 9% after market trade in the United States. Numbers were decent for the quarter, and the founder, Reed Hastings, has announced his exit from the board. That could be one reason, but frankly, he stepped down as CEO a couple of years ago as well. Treasury yields rose even as weekly jobless claims came in lower than expected. The 10-year was at 4.31%. Crude prices fell on hopes of extended ceasefire, but the Hormuz blockade has tightened supply. There's an agency called the ING. They have estimated 13 million barrels per day have been disrupted. So the Brent was at about 98.41. So if you compare 24 hours ago, inched up slightly higher, but at one point Brent had touched $100 a barrel and then has pulled off, especially after the Israel-Lebanon ceasefire was announced by Trump, in the hopes that that's part one. Remember, one sticking point for Iran was that Israel should stop attacking Lebanon. That ceasefire has come into place. So that's, I would say, one green flag to look out for. Let's pull up Asian markets for you. And they started off a little weak sentimentally, really. And that is where the question mark comes on how long this will last. Nikkei, Hang Seng, Shanghai, all down between 0.5% to 1%. This is the latest of what Trump is saying. So Trump is posting, he's speaking, there's a lot coming out of it. We have to sift through what it really means. In the latest, Donald Trump says the war in Iran is going along swimmingly. Listen in.
I will say the war in Iran is going along swimmingly. We can do whatever we want. And it should be ending pretty soon. It was perfect. I mean, it's perfect. It was the power we have, our military. We have the most powerful military anywhere in the world. I built it 4 years. Stock market is good. The oil prices are coming down, and it's looking very good that we're going to make a deal with Iran, and it's going to be a good deal. It's going to be a deal with no nuclear weapon.
William Lee, Chief Economist at Global Economic Advisors, joins in right now on the show. William, great having you. Thank you so much for taking the time out. Now, in the last between 12 to 16 hours, I lose count sometimes of how many posts Donald Trump has done. He's put out a barrage of posts saying that things look much better. We are set for a peace deal. Maybe there are talks over the weekend, etc. Iran has agreed to whatever he said, so on and so forth. What do risk markets or risk assets make of this? Are we truly towards the end of the conflict?
Well, just look at what's happened to the U.S. markets today. They are at historic highs. They've gone through historic highs. And so I think there's tremendous confidence in the U.S. financial markets that the conflict and the strategies that are being put in place are the appropriate ones and will end the conflict soon. Now, there is a disconnect between the financial markets and the crude market as we see it. As you say, there's a huge shortage of immediate delivery crude. And certainly you're noting that the Asian markets are still tanking. Shows that the brunt of the shortage of oil is going to be felt in Asia, India, China, South Asia, all of those areas which are become so dependent on this, the Strait of Hormuz as a transport point for their energy supplies. So there are imbalances in the world, but as far as the financial markets are concerned, especially in the United States, they're looking toward earnings and not the conflict as a source of risk and a source of elation. And actually, what you see is that the new highs that the equity markets have achieved are showing you that the conflict, I think, is being looked through. And I think the robust growth that we're expecting for the U.S. economy is going to be put in place fairly soon.
That's interesting. So, and good morning, Mr. Lee. So, therefore, you don't anticipate that there's going to be too much of a disruption. And a few people are now penciling in the possibility of a slowing growth towards the end of 2026 for the US. You don't have any concerns that that will come to pass either. The job growth concerns that have been raised recently are not a problem?
No. That's not what I said. I said that the robust growth that we're anticipating will be in play, but I think the robust growth will show up much later. I mean, the immediate problems and vulnerabilities in the U.S. economy are exactly the ones you point to. The K-shaped recovery that we have, the fact that so many consumers have been taxed by the higher energy prices. They don't have the resources of falling back on a stock market wealth to boost their consumption because 10% of the population owns 90% of the equities in the United States. So that skew in ownership also represents a skew in who it is that's being hurt. So certainly the higher energy prices are hurting a good chunk of the U.S. economy. But what I'm saying is that the investment boom and increase in productivity, which has led to, I think, the prospect of boosting potential GDP in the United States by easily 0.5 percentage point or more, and that's long-run growth. Those are the bright elements, I think, that are still in place. The disruptions that we're talking about are going to be distributed around the world in very uneven ways. As I said, Asia and Europe are feeling the brunt of the immediate energy shortage. But already you see that with the blockade in the Strait of Hormuz, there's a huge convoy of tankers that are going around the Horn of Africa toward Latin America and the United States to pick up energy supplies and bring them from the United States, which is a net energy exporter. And so I think the shortages that you're feeling now will be dealt with, but probably will take some time to put in place. So for me, the immediate vulnerabilities are exactly where you guys are sitting in Asia, and in India in particular, where propane gas is being rationed because your supplies are being cut off. And I think the strategy that's put in place now is to put maximum pressure on the Iranian regime in order to come to an agreement. Because all we have to do is have an agreement, and the Strait of Hormuz starts to open up, and traffic starts to resume immediately. And the insistence on Iran of having sovereignty over those straits is one of the huge stopping points for relieving the tension that you guys are feeling right now.
Yeah, well put, William. I'm just wondering if there is any indication that you are seeing of Iran actually willing to negotiate, because a lot of what we're hearing from the last 3 or 4 days as the ceasefire deadline ends is from the US administration. And all of the conversation is, oh, it's going really well, it's going swimmingly, was the latest today. But is there any indication that Iran is actually willing to relent on some of these points, especially control of the Strait?
That's a great question, because one of the things I noticed when they had that huge delegation with the first set of meetings where things fell apart is that it was pretty obvious that no one had the authority to negotiate. And what was clear from the vice president's report is that they had to go back to find out what it is that they can and cannot accept. So it seems as though the talks are still on, and that's the good point. The strategy that is needed to bring the talks to some kind of fruition is going to be internal in Iran. They've got to feel pressure from their own citizens to say, look, we are no longer able to export oil. The amount of money that we were getting, the trivial amount of money that we were getting before has also been cut off. So I think those are the kind of economic pressures that are really called for to bring the negotiations to fruition. What you were saying earlier, by the way, of how the military strategies have converted into an embargo and an economic blockade, that's exactly the shift in strategy that was needed, because first you eliminate the ability for them to attack our blockade, and then you say, let's blockade them, because their resources depend critically on the ability to export oil. And now that they cannot export oil, that's even incentivizes more they're being more forthright at the bargaining table.
That the analysis that we had, as amateur as it was appropriate. Thanks so much for taking the time, Mr. Lee.
Thanks for having me.
All right. We keep saying we're not geopolitical experts, but sometimes we see things that geopolitical experts also see, and so that's the long and short of it. Let's talk about what happened in trade yesterday. And you had foreign institutions that continued to buy small amounts of Indian equities, but the net buy figure standing at 382.36 crore rupees on Thursday. And domestic institutions were the big sellers, in fact, relatively speaking, 3,427 crore rupees worth of selling on a net basis. The benchmark Nifty 50 ended about 0.8% off the day's high and down about 0.14%, and HDFC Bank was the biggest casualty, losing as much as 1.8%, accounting for a large bulk of the decline for the Nifty 50. The other large banks also fell, but to a lesser extent, and the Nifty Bank as a consequence dropped as much as 0.4%. The IT index continued its relative outperformance, gaining about 0.9%. Whether that continues to be the case today or not is another question altogether. Defense, metal were the best sectoral performers, and the broad markets actually outperformed, ended with sizable gains. Market breadth improved in the last hour of trade. There was a pocket of strength in the mining counters, and GMDC actually stands out as a big winner in trade yesterday, rising as much as 20%. There was buzz that there would be some action on rare earths, but we've not really heard anything beyond the big announcement that was made a short while back.
Yeah, but on that one, I mean, the series of announcements that have happened for rare earth for the last 3 years kind of stand testimony to that, right? I mean, and this is probably that pivot nodal agency through which the government is trying to do everything. So no surprise that sporadic moves in GMDC will keep on happening, even if it's not backed by earnings right now. I think the promise of the future that entices people. If you think of it on the macro front, there is not too much that has changed. Oil is at whatever, circa 93, 94, or Brent at 98. Dollar index is same. Almost US yields are the same, so no big changes on the macro, and that's why you probably have a quiet start in the offing today. But you know, the markets are signaling continued risk appetite beyond the large caps, and which is why yesterday, while the large caps did what they did. I think the broader end of the spectrum did really well, as Alex pointed out, right? Look at the small cap index and how well that one did. So for the Nifty, you have to believe that a credible resolution of the conflict is the key re-rating trigger. I think the Abacus guest yesterday put it very well that, you know, a portion of the rally, a rightful rally, is behind us now on the Nifty, which bakes in the current geopolitical situation. Now, if there is a resolution, then you probably see the next re-rating trigger for the Nifty. You never know. There is metals, and therefore, if you look at specific counters, we've been talking about metals all through. A 15% month-to-date up move in metals already. The BSE Metal Index or the NSE Metal Index is up 15% in the month of April alone. So people are recognizing this inherent factors. If there is a bit of a rally today as well, who knows, towards the second half of trade, you might see some profit booking heading into the weekend. But the core underlying for metals remains very, very strong. And of course, keep on looking at defense contractors. I think the opening up of avenues continues across continents. We'll talk about that a bit later on in the show as well, about what Europe is doing on the defense front too. But keep an eye out for that cohort of stocks. I think India is not the only game in town now for them. There's some bit of size that they have, some bit of expertise that they have, and therefore the world could be their oyster. So keep an eye out for that cohort. People are seriously paying some heed to that.
You know, it's such an exciting story. One Make in India story, I think two to just watch as financial journalists over the last few years, which has been very exciting. One, of course, is defense. Going from a nation that had to import everything and whose own defense production and prowess was never seen as anything to be taken seriously, let's be honest, to an export-oriented force. And the second is the production of mobile phones.
Oh, yes.
And the fact that, I mean, any iPhone you now buy is a Make in India iPhone over here. And
in large parts of the world.
And maybe in large parts of the world. So that kind of change, these are two things that have changed in front of our eyes. So that's pretty cool.
Yeah.
Just wanted to interject and add that sort of perspective.
No, such a brilliant perspective. I think yesterday I read a headline that India has exported $2.5 billion worth of phones to China. I mean, I was amazed. This is super stuff. So yeah, point timely.
Okay, other factors to look at in the markets today. Obviously, a classic wait and watch mode is going on. You know, since we're talking about all of these geopolitical signs, there was a post yesterday that talked about how the Iranian government has asked for virtual school from the 21st of April within the country. 21st of April is also when the 2-week ceasefire deadline ends, and people are putting 2 and 2 together on that. So everyone is waiting and watching. Having said that, the Nifty did manage to close above the crucial 50-day EMA. That's 24,189, and we've been talking about that since yesterday, how that is so crucial. This is a victory for the bulls. Now, as long as we hold the 24,100 to 24,000 zone, the structural trend remains positive. 24,400 is the immediate ceiling. If the Nifty clears this on a closing basis, we could see a rapid move towards 24,700 to 24,800. For the Bank Nifty, the banking index is showing more hesitation than the Nifty. Resistance at 56,500 and 57,000 could see significant supply on rallies. Supports at 55,900. Puneet joining in with more now. Puneet, take us through what's happening on the derivative space.
Well, thank you for that. Well, yesterday we did slip in the red, down almost 120 points at one point in time, but then recovered quite a bit. So we are still above the 24,000 mark. 24,200 also very, very close by. We'll just need some more historical day evidence in that sense to continue to build that as a key support level. 24,200 continues to be that for now for us at this point of time. The Nifty Bank too above the 55,500 level, but we've been highlighting that between 55,500 and 57,200, there's not too much of a support that's seen for the Nifty Bank just because of lack of visibility of days essentially at those levels. So we'll continue to monitor once again in terms of earnings tomorrow. Two big giants, HDFC, ICI coming on. So the Nifty Bank will be in focus on Monday most certainly at this point of time. In terms of foreign investors buying yet again, but not with too much rigor, 382 crores. And in terms of the index long also and the put call ratio, very stable compared to what it was yesterday as well. So index long continue to be over 20% and have been at that level for all throughout the week this time. The open interest distribution was also showing up interesting trends because we've seen increased interest between 23,500 and 24,000 across key levels, especially for the puts. So hopefully this near-term support is here to stay. Given that 400 to 500 points below, you're seeing active put interest being built up now. You also see that within the gainers, Godfrey Phillips in the open interest gainers continues to be one stock which has seen long build up throughout the week. And this time also around an 18% uptick in open interest. Angel One on the back of results will be something to watch today as well as covered by Alex. But largely a very important trading session continuing to be for players that have done well. So Nifty Metal, Neeraj spoke about. Nifty Auto is up 8% since April 7th as well. So those two cohorts have done well for the Nifty. So continue to monitor all of those individual plays as we go into the earnings season.
Okay, thank you for that, Puneet. Stocks that we're watching today, well, Wipro is the first on my list. If you look at the ADR and any indication of how Wipro has done overnight, you're going to see a bit of a downtick on that stock, about 5% down on the Wipro ADR. Here's why. Revenues for the fourth quarter consolidated Q on Q were up about 3% and not too far away from estimates. EBIT was up about 19.74% as well. EBIT margins were up 242 basis points at 17.25%. Net profit was up about 12.27%. So then now what's the issue? Here's what's not working. Revenue grew just 0.2% quarter on quarter and missed street estimates. The first quarter FY27 guidance is what is the pain point? It's guided at -2% to 0 quarter on quarter constant currency on the back of client issues and a softer first quarter. BFSI and Americas too has dragged sequential revenues lower. The top client revenue declined sharply, down 8% Q on Q. And I must say this is excellent analysis by our IT analyst Jasmeet that I'm putting out for you right now. This has also marked the third consecutive year of constant currency revenue degrowth. That is FY26 was -1.6% versus -2.3% in FY25 and 4.4% in FY24. Brokerages are also bearish. No upgrades trigger visible post results. They've also announced a buyback. Must say that about 15,000 crores. That's the sixth buyback for Wipro and the largest ever in terms of size. The price is at 250 rupees. That's a 19% premium to the current market price. And they will buy back about 5.7% of their equity, which is 60 crore shares. Not the largest that they've ever done in terms of percentage of equity. But even if you had to see some impact of the buyback news in terms of a positive trend, will probably happen closer to the record date. So today might be a poor start for Wipro. Loads of notes. I've picked one. This is what Kotak Securities has said. They've maintained a sell with a target price of 190, and they say quite a few cracks visible. Revenue miss driven by BFSI and healthcare verticals. Inline margins. Organic growth guidance stands at -2.8 to -0.8%, below expectations. They expect growth underperformance to continue in FY27 and FY28. Valuations are inexpensive but justified due to underperformance. So all in all, it's going to be a bit of a poor show for Wipro, and maybe you will see the rest of the IT pack also seeing some of that pain. Do watch out for the conversation with the management at 8:30 this morning. HDFC Life. So HDFC Life, I would say thumbs down if you're looking at what's going to happen today and the quarter they reported for. Might be a little more positive if you're looking at what the next financial year could be. So it depends on how you want to see the glass, half full or half empty. Here's what's happened. Net premium income up 9% for the quarter. Net profit up 4.7% at 497 crores. Morgan Stanley puts it well. They've maintained an overweight with a target price of 745 rupees. But they talk about the miss in VNB, that's value of new business, and it being a soft quarter in the fourth quarter. VNB growth for Q4 was -8% year on year. So you've seen a contraction in value of new business. This has weighed on the stock. Valuations have derated sharply. Modeling a gradual recovery in FY27. Strong track record and attractive valuation drive their overweight rating. Macquarie, meanwhile, has also maintained an outperform with a target price of 900 rupees. They're saying it's a tough quarter and a tough year, respectively. VNB was also affected by surrender charges and the GST impact. if you want to look at it a little favorably, you can say that these were things that were out of the control of the company. With most of regulatory changes done, VNB should expand at 15% CAGR over the next 3 years, capital raising to improve solvency margin by 900 basis points. So, like I said, if you have a future perspective on this, then maybe you can analyze the stock a little differently. VA-Tech Wabag is the other one. So, clarification on the on what was driving the stock price yesterday. It was about 5% up yesterday because of reports of large contracts that they have won in the Gulf. So, they've clarified that there is no 600 crore Saudi contract, and they've awaited an order award for a Kuwait desalination JV project. So, the Kuwait project is definitely there, but they still have to get the LOA for it. The Saudi project is not there. So, you might see a bit of a reversal on that momentum.
Right, and interesting, and Wipro is going to be a big talking point. So let me just run through the stocks that I've got. Waaree Renewables, it's a pretty strong growth number that they've posted, particularly on the top line, 131%. This is on the heels of several quarters of that kind of a run rate, and margins have dropped sharply year on year, but more on account of the high base of that comparable quarter. It's in line with the last 3 quarters, and they've actually maintained the margins higher than they had said that they would, which is above 15%. It's actually improved 10 basis points on a sequential basis. So very good set of numbers. Watch out for it in trade today. It was already up about 2.5% yesterday. Angel One, a pretty decent set of numbers given the context, and revenue growth of as much as 9.3% sequentially. That growth despite relatively tough operating environment. It's not been the best quarter for markets, and broking revenue contribution from F&O actually saw a small uptick to 47%. They have had better broking realizations and better NIIs, both of which drove their PAT performance. I picked one brokerage note on Angel One, that's Citi. They've maintained a buy with a target price of 340. Strong Q4 print is what they're saying. Client trading activity levels remain robust. The average realization per order were marginally up across most categories, and retail activity levels remain robust. Finally, I'm talking about HDFC AMC, and this is on the back of a note. Morgan Stanley has maintained an overweight and hiked its target price to 2,975. It says it's a good operating trend. Operating profit was in line and SIP flows were strong. So good set of numbers.
Watch out for the Adani Group stocks. The first set of names on my list. CCA has dismissed the allegations in the Adani Solar Biof has found no violation of the competition law. Not being adhered to, if you will. The CCA also clarified that the Adani Enterprises and Adani Green Energy cannot be considered dominant in India's power market. So watch out for some of these, could be interesting. Adani Energy Solutions is the other one as well to keep a focus on. RVNL has emerged as an L1 bidder for a 967 crore construction project. It's the East Coast Railway projects as per an exchange filing. Keep an eye out. Maybe this one has a bit of a reaction today. Let's wait and watch. And VST is the queer one. And the reason I say this why, because their Q4 update on a standalone basis, if you just look at it optically, looks out of this world. Revenues up 30%. EBITDA margins at some 45% versus 20%. I mean, which company can do this? Literally, profit up 120% and 116 crores versus 53 crores. Splendid performance on the EBITDA front in particular. Volume growth was about 3%. But if you just peel the layers a little bit and think of what could have led to this, revenue was bump up was account of an increase in GST, and they took some price hikes up front before the actual number came in, and the margin improvement was probably on account of pre-buying of raw material at cheaper costs, as a result of which this happened. So keep in mind, may not react necessarily as constructively as the margin uptick suggests. But let's go across to Hiral, who is in conversation or going to be in conversation with the Wipro management, arguably the IT stock of the day. Hiral.
Absolutely, the IT stock of the day. But it's very interesting to see, because if you have to look at the numbers at the first glance of it, it seemed to be pretty much in line with what the street was estimating. However, with the way the ADR has reacted and what you've seen in terms of the commentary that has come in, that is giving you some bit of jitters. Now, on a sequential basis, your constant currency growth has seen an uptick of around 0.2% versus a 1.4% that they actually saw in the third quarter as well. The BFSI segment and the healthcare segment, these are the two segments which have actually seen a degrowth. Now, healthcare, you have to take it with a pinch of salt that usually the fourth quarter is a seasonally weak quarter for healthcare, but the downtick in terms of BFSI is concerns when it comes to one or two clients. The total booking is at around $3.4 billion versus $3.3 billion in the third segment as well. I would want to take you through the other important aspect, which is the buyback, which is one of the, maybe not the largest, but it's coming in after 3 years. Now, depending on the acceptance ratio, it's going to be interesting to see what happens on that front and whether the promoters are going to participate in the buyback as well. In terms of regions, now your Americas 1, that has remained absolutely flat, whereas your Americas 2, which is a larger portion of the revenues as well for Wipro, that has seen a degrowth of around 2.5% as we speak. But now let's connect with the management as well, who's with us. We have Srini Palya, CEO at Wipro, Aparna Iyer, CFO, and Saurabh Govil, CHRO, joining us on the show. Welcome to the show, ladies and gentlemen. Always a pleasure to speak to all of you, as always. Srini, let me take my first question with you. You know, if you have to take cues from the way this quarter has been and, you know, what you've seen in FY26, what is it actually telling you in terms of FY27? Because the question now is not about only performance, it's more in terms of how the structure is shifting.
So first and foremost, if you look at our current Q4, the results that we have declared, three of the four SMUs have actually shown a sequential growth, whether it's Americas 1, Europe or APMEA, and they have shown 3 consecutive quarters of sequential growth. I think we had a challenge in Americas 2 of 2 specific customer issues. One was a client changing the direction. Other one is where we won a large deal, but we have not been able to ramp up enough. Second, if you look at the pipeline as of today, it is very secular across the industries and across the markets. And that gives me a good comfort that, despite the geopolitics that's going on, trade and tariffs that are going on, the clients are being very resilient and they're investing in IT. And these areas are AI, data and cloud, which is very predominant. So to me, the opportunities going forward is not only, leveraging AI for reimagining the client process, but also demonstrating AI in their run and operate and change and transform programs as well.
Okay. Srini, 2 pegs that I pick up from this answer of yours is in terms of your geopolitical concerns as well as AI. We'll talk about all of it, but let's talk about the Middle East exposures that are evolving amid this kind of uncertainty. Are you seeing a slowdown in client activity if you have to talk about Middle East? And if so, is it going to be in the interim or for the next quarter? Because on a regular basis, operations will be looked at over the next 3 to 4 months.
No, you're absolutely right. Middle East, there are uncertainties. And I think, we should maybe wait and, I'm sure the clients are waiting and watching what happens in the next couple of weeks because wars are typically don't drag on for too long. Having said that, the clients are, watching across our Middle East region. And it's actually business as usual, both in terms of how we deliver and the projects that we are working on. Maybe 1 or 2 clients are relooking at in the context of the impact that they may have. We will get a much better view after a couple of weeks or post the final outcome of this war after the ceasefire.
Okay. And Srini, talking about individual segments as well, BFSI, healthcare, we have seen a degrowth that has come in on a sequential basis. Now, you mentioned about a couple of large client issues. So is it the client issues which have impacted? And do you see a spillover happening maybe in the first quarter or even for that matter, second or FY27 as a whole? How are you looking at that impact spill?
So if you look at specifically from a healthcare perspective, it's kind of seasonal for us. Typically quarter 4 is a lot of member enrollments and happen, and quarter 3 and quarter 4 for us that comes down. But the pipeline in healthcare is robust, and I think that's not something that there is a worry around that. As far as BFSI is concerned, while we have the pipeline, while BFSI in Europe and BFSI in APMEA have done well, I think our specific challenge has been in Americas too, especially the 2 client issues that I talked to you about, Hiral.
Got it, Srini. Taking from what Srini spoke about AI as well, Aparna, let me take this question with you. Are you seeing, AI, cannibalizing on the legacy revenues of the business, or the reverse is where volumes are picking up and that will come in and offset AI cannibalization? How are you looking at that?
A lot of the deals that we are seeing in the pipeline are vendor consolidation, cost takeout led still. And clients are using this opportunity, looking at their existing work that's being delivered to say, how can we drive higher productivity, create that savings so as to be able to invest in AI. So the opportunities that AI will bring in terms of just reimagine AI and the absolutely newer expansionary piece of work, we're starting to see early green shoots. But right now, I think what is the dominant trend is around vendor consolidation and cost takeout, which in itself is a significant opportunity. A lot of decision making continues to happen. Srini spoke about the pipeline we have, very good pipeline across markets and industry sectors. And, there is a huge opportunity at the moment. Will it come with its higher share of ask on productivity? Certainly. Does that also come with volume uptake and expansion? Yes. We've seen that like a mixed bag. In certain cases, these deals play out to timelines. Absolutely, the volumes then tend to compensate. But there could be those one-odd deals where, we've had some delays in how those deals have, ramped up in terms of the volumes. So I would say that overall, it's right now not deflationary to be called out. Obviously, it's still early days, and we will have to wait for the opportunity around expansionary piece of AI to play out fully.
Okay, so that's an expert. Thank you so much for that. In fact, over to you, Neeraj, Tamanna and Alex, because the question from here on is going to be what happens, are you going to see a re-rating that is going to come in terms of IT, and what are valuations actually indicating?
I'm going to take that, Hiral, to Sandeep Agarwal. Also, a note here for our viewers. Full conversation will be seen on NDTV Profit at 9:50 this morning. So stay tuned for that. Sandeep is, of course, fund manager and co-founder at Sovilo Investment, but lives and breathes IT. No one understands it better than him. Sandeep, we spoke about Wipro before the results. Were you disappointed?
No, see, obviously, there was not enough expectation also. But let me put it this way. See, this is not a sector issue. So I never read Wipro results as anything to draw with sector, because now I think 16, 17 years, barring few quarters in between, they have not always underperformed the industry in terms of growth, and also the peer set. And this is despite multiple experiments with multiple CEOs which they have gotten, both from internal and from external. What they have done phenomenally well in last several years is they have done very good execution and maintained margins, but they have not been able to get revenue growth at all. So I think this is one stock where it is very hard to give any comment related to industry or anything. They have never surprised. Only thing which has always worked in their favor has been a very, very reasonable valuation today, 2.2 lakh crore, out of which 50-60,000 crore is approximately the cash. So, what is there to market cap is only if you see 160x of cash. And from that perspective, the stock looks very, very cheap and
might be having a little bit of an issue with Sandeep's feed. We'll get our team to let us know when he's back. In the meanwhile, the point that he was making on the valuations were, of course, joined in studio by Parag Thakkar as well as Kush Bora. They were both nodding their heads for different reasons while Wipro was being spoken about. And Kush, I think, has a point to make on the technicals, no?
I'll tone it down.
No.
ये Wipro कभी भाई बनता नहीं है technically, मतलब बहुत rarely बनता है. You remember that conversation? Infosys, TCS, HCL Tech, and then you directly skip to Persistence and Coforges of the world, right? So
rarely ever does Wipro give you that strong signal of a buy, even from a technical standpoint. You would have rarely heard me कि नहीं Wipro technically strong है, यहाँ से buy कर लो.
So therefore, Sandeep, you were making a point, but I do want to ask, just a day back or 2 days back, you were talking about being much more positive on the IT space. Should it have been IT in brackets X Wipro?
Yes, absolutely. So, because we cannot give stock specific call, I am very clear that the index level IT will do phenomenally well. What we don't like is the ER&D play. Now, obviously cannot name one company here and there, but I think, there is a good money to be made at the index level and also the IT services piece broadly. There will be companies which are expensive, there is low growth and all that. We have to exclude them. But still, I am not positive on ER&D. So avoid ER&D, buy anything in IT. Best is to buy the index.
Okay. Sandeep, that says it all. Ex-Wipro also says it all. So we kind of get the gist, guys. I don't know. I don't have anything more to ask Sandeep because he's given everything that he would have wanted.
No, so I suppose, Sandeep, then the only question really is that will you see a negative impact on the rest of the IT pack and the Nifty IT today? And if you do, because people will see this as hit from Wipro, would you use that opportunity to buy the Nifty IT?
So, I will put it this way that after COVID, now the time has come when next 2 years there will be a good PAT and EPS growth in the IT sector. So there is no reason to be negative at the index level in the IT, and there is no reason to be negative in all the stocks. I think it is a much comfortable and better level. Now you can debate that EPS growth is coming because of rupee depreciation, but I would say it is a combination of both revenue growth and rupee depreciation. So time to, I think, make decent money from here in next 45, 60, 75 days. I don't know, 2, 3, 4 months, because IT is a sector which very quickly resets itself. So I don't know how long you get an opportunity, but I see that in next 2 years, the EPS growth will be 15-16%. And if that is the case, then there is a good 30% upside at the index level.
Okay, so but keep an horizon of 2 years. Would you participate in the Wipro buyback if you had an opportunity?
No, we don't do all these things. We have very selective mandate to buy stocks.
I mean, from the point of view of our viewers, Sandeep, the reason, people are watching this and they're wondering that whether the Wipro buyback is exciting or not. Any view there?
No, it is exciting. See, that is the best what management can do. There is low growth and the stock is at abysmally low valuation. So they were distributing cash, and that is the right thing to do in my view. That is the way I would put.
Okay. All right. Thank you so much for that, Sandeep. The quick and short view on Wipro. I think we agree over here on this table as well that Wipro has been a bit of a disappointment.
Yeah, it has been a disappointment. So, for example, next quarter's guidance is very soft.
Yeah.
So, valuations, as Sandeep also pointed out, valuations have always remained attractive for Wipro. The only thing is that growth just does not come due to whatever reason.
Okay, so I mean that's the short and short of it, I guess. On Wipro, we'll see how the market reacts to the numbers. We have a lot more stocks to talk about, and we'll do so on the other side of this very quick break. Stay tuned.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaning.
welcome back. I want to pull up the implied before we get our ideas for the morning. It's a mild downtick, and all of this will frankly settle. Don't expect any fireworks one way or the other. From the long and short of it, that's our word of the day, I suppose. What you're expecting to see on the geopolitical front is simply that things stay as they are. There has been no big move as far as the war is concerned. Parag Thakkar and Khush Bora with us. Parag, what is the exciting idea that you're seeing this morning?
So I'll repeat once again. Last time, ICICI Bank is my top.
Sure.
Yeah, because now results are there. So now it is not. It will not be fair for me to continuously talk about that stock. Your viewers will also. ICICI Bank. It is my top holding in the portfolio and the highest conviction table thumping buy.
But you have to thump the table when you say.
Thump the table.
Okay, so what has changed between your last call on ICICI and this one? Why now a review of it, or what has anything new come to fore?
The new thing has come that the credit growth data has come. The credit growth data has come, and the 60% of the banks have declared their business updates. So if you just do your numbers, ICICI Bank and SBI will report far better credit growth, loan book growth numbers than it was expected by the market. And deposit growth also was very good, as reflected by HDFC Bank business update. Because in the last, in March month, the deposit accretion was very good. So deposit growth is there, loan book growth is there, margins are stable to positive or range bound, I would say. And asset quality for this bank is absolutely fine. So I would say that one can start penciling in 15-16% EPS growth from next year. And P is as usual 11 only on FY28. So I would say that, and subsidiary value keeps increasing.
All right. Now, one would say, why is this important? Well, over the next minute and a half, I'm going to tell you why European defense spending higher, or that spend moving higher, is important. Now, first, the crux of it. The defense supply is turning into a policy-backed inevitability. I'm not saying this is an option. It's inevitable. And it's all, the numbers are there for everybody to see. So what is Europe doing per se on defense? NATO allies and Canada per se as well, by the way, have spent about $574 billion on defense in 2025, which is up about 20% YOY. On that base, that's not chump change, by the way. All allies have crossed the old 2% of GDP spent on defense mark already. The key is the new norms or the new agreements or the new thoughts suggest that the new benchmark is a 5% of GDP by 2035. Core defense estimated at about 3.5, but overall defense at 5% of GDP. And remember, while Europe may be slow growing, that GDP number also will grow. So in 10 years, imagine the quantum of defense spend that Europe as an area will do. Now, think of it this way. The inference is that the defense spend is not just about one war, but about a decade of rearmament. This is the big change in Europe. It was never this. It is now slowly becoming this. And there are some telltale signs here. Very quickly, I'll tell you. A Czech defense firm, CSG, has about a 15 billion euro backlog. And remember, there is another 27 billion euro pipeline under negotiation. Rheinmetall's 2025 order backlog was 63.8 billion, up about 36%. You don't see these numbers usually if you scan back the last 1 decade of Europe. And why is this therefore important? Because there are a lot of Indian companies linked or having a pipe into the European defense infrastructure. So keep an eye out for some of these over the course of the next 1, 3, 5 years. They may win an order today, they may win an order next year. Difficult to say, but the likes of Bharat Forge, Tata Advanced Systems, but the Tata Group, Dynamatic Tech, Azad Engineering, BEL are some of these firms which are already approved suppliers in that ecosystem. And you might very well see the order books of some of these swelling on the European side in the times to come.
Got it. All right. Very interesting piece, and certainly a reason why you should keep the defense back in focus. Let's go across, though, at this moment to Somit Sarkar, who is joining in, as he usually does, to tell you what he's hearing from the dealing room chatter. Somit, there are fits and starts of foreign institutional buying. I'm just wondering whether that lends a little bit of positivity, or is there going to be a little bit of quiet ahead of the weekend?
Let's a few buy flows that we are seeing on the FI desk. But yes, the mood continues to remain positive, but not much big movement is expected. Market is most likely to consolidate in the current range only is what dealers have indicated. Not big moves they're expecting on either side when it comes to the benchmark index. Stock specific action, firstly on Sona BLW, there are buy flows on the large HNI desk. The buzz on the street is that the company could sign a supply tie-up with a large global EV company. When it comes to Spark, again buy flows on the HNI desk. The buzz on the street is that there could be a positive news flow regarding one of its drug going forward. So keep an eye out for Spark as well. The stock has been gaining for the last couple of trading sessions. For Diamond Power, the buzz on the street is that the company might announce a fundraise very soon, and this might as well be at a higher price compared to the current market price. For Sunflag, multiple dealing rooms are recommending their clients a buy call, and this is a positional buy call for 15 to 20% upside is what dealing rooms are indicating. And lastly, when it comes to Havells and Polycab, dealers are recommending a paired trade on both the counters. They are asking their clients to buy Polycab and sell Havells, and this is purely based on the Q4 earnings.
Okay. So a lot of ideas there this morning, and we're all about ideas. Kush, you haven't given your picks yet.
I haven't even given my index view. If I can start
What
with that.
is this? It's 8:50.
If only the guys knew what we do off camera behind the scenes.
No, it's all studying the screen. What's wrong with that?
Go for it. Go for it.
Yeah. No, so let's very quickly just start with the recap and where we are now. So yesterday we spoke of a few pointers. Let's see how that panned out and where we are today. We spoke of consolidation on the index. Still on. I still maintain that view that there could be some more consolidation for the index to come, at least for a day or two, if not more. Then it depends on how the ICICI result plays out, how the war negotiations play out. But for now, consolidation mode on the index. We spoke of RSI being in the neutral zone. It's now starting to flatten out a bit. So that also further suggests consolidation. Resistance for the Nifty still at the 24,300, 24,500 mark. We retraced bang on from the 24,400 level. So that resistance still remains. In fact, a few more technical points get added to that. 50-day moving average, some Fibonacci retracements. So yeah, that range still remains. A move above that 24,500 will put the Nifty in a fresh uptrend. Also, remember we spoke about the 24,200 straddle. Yesterday we went, we swung about 200, 300 odd points, but again we closed very close to the 24,200 mark. That is very much at play. And now what's happened is, yesterday we saw some, day before we saw some put writing. Yesterday the call writers got aggressive. So be a little watchful. I think the range could well remain about 200 points from where we are on both sides. So 24,200 to about 24,000 to about 24,400. So consolidation is the broad theme. The simple idea is that you don't create fresh long positions because the momentum might be missing. Bias is positive, so you could continue to hold. Also, one interesting point on market breadth. At the at the lowest point on NSE 500, the number of stocks below the 20-day moving average were at about 465 at one point in time. Right now, it's flipped completely, and you have about 460, 465 stocks above the 20-day moving average on NSE 500. Mild signs of overheating. Maybe it could correct a little bit. On to the stocks now. All long calls, by the way. Aurobindo Pharma, Nava and Pokarna. These are the three calls. Targets and stop losses on these. Aurobindo Pharma, 1415, 1480, 1345 is your stop loss. So that continues. Nava, 645, 665 targets. 605 is your stop loss. Pokarna, 945, 965 targets. 900 stop loss. A quick mention on GMDC. We discussed this stock 2 days ago with very clear technical reasons. A lot of other stocks have also gone on and hit target 1 target, so I'm not going to go to that. But GMDC stands out. If you still hold positions, good idea to book partial profits at least.
Okay.
खुश तो बहुत हो गए तुम.
So GMDC book partial profits. What did you make, Parag bhai, of HDFC Life?
So muted result. And interesting thing is that they are facing competition even in the HDFC Bank channel. So that is one thing which is worrying.
Can you elaborate on that?
So I just read the note that they have said that even in the HDFC Bank channel there is a competition and they don't want to compromise VNB margins, And so they have actually pulled back. They have actually compromised some of the business. And they feel that the other players who are doing this competition will not, this cannot sustain for long. This is what they have said.
So there's some extent of cannibalization within the broader
so that is
family.
a competition problem. As we saw in ICICI Lombard also on the auto side, there was a competition. Here in HDFC Life we saw that. So I think that's a problem. So the results were muted, quite muted.
Yeah.
Do you like life insurance as a business? It's not done anything, as Neeraj pointed out yesterday, I think, and it's not just one business; it's all of them put together.
Absolutely. So SBI Life only remains the investable. I'm saying HDFC Life, Wipro Life, both are great institutions, but somehow right now near-term business momentum is missing.
Yeah, even though long term, since listing, SBI Life is the one that has made money. The others have kind of just moved around. Okay. Some more stocks, and then a couple of queries that we have as well. But first, let's get in Mahima to talk about some of the other stocks that one should keep on your radar this morning. Mahima, good morning.
Good morning, Neeraj. So I'll start with Alok Industries, which has come out with its Q4 numbers. Overall, in terms of the key highlights for this one, margin was impacted due to higher cost of raw material, and higher losses was led by a higher base in Q4 FY25 as well. The company had higher other income in Q4 FY25 as well. In terms of where the numbers go, revenues just saw an uptick of around 2.2%, EBITDA significantly down by around 23% at 6.3 odd crores. Margins took a hit of around 22 basis points, and net loss has widened quite a bit at that 186 crore versus that of just 67 crore earlier. Two banks remain in focus, Axis Bank and DCB Bank. Both of them have announced that they'll be considering fundraise. Axis Bank on 25th of April via equity and debt, and DCB Bank via debt and QIP is something that they said on 24th of April. CESC is another counter that is in focus on the back of news flow coming in, where company has signed power purchase agreements for 600 megawatt. Now, the power purchase is for wind, solar, hybrid power with 4 hybrid power developers, and this includes a 300 megawatt power purchase with Purva Green Power, and all PPAs. So all of these power purchase agreements have a tenure of around 25 years. So all of these counters, remain in focus on the back of news flow coming in.
Wow, a lot of them, and certainly the energy space doesn't. Mahima, thank you so much for that. And certainly the energy space doesn't quite stay out of news. I mean, the things keep on coming. Actually, speaking of that, CESC was active. I think a lot of other stocks were active. Kushbora, I want to get you on the charts on some of these, including the Adani Group stocks, because I think Adani Green, Adani Enterprises had a fundamental trigger as well post-market hours yesterday. That CCI has not found any power of dominance or dominant power positioning usage, etc. from the group. Standard disclaimer, viewers, that the Adani Group owns NDTV as well. But the stocks have done well in the last few days. Can they do more?
Yeah, so if I were to, I wouldn't rank per se, but if I were to pick out stocks from this space, right now, Adani Energy very clearly stands out. What a beautiful breakout above the 1050 mark, continuing to gain strength. I know it seems like a number, quite some time ago where it would have hit, but not more than 4 or 5 sessions ago, right? So good momentum. I think there's still some, room for this one. Adani Green also closed above the 200-day moving average and continues to gain strength. So I think these two you could very well continue to hold. Adani Enterprises had made lower high, lower low formations for the last 3 weeks. It's broken that, but it now stares at the resistance around the 2300 mark, which is a 200-day moving average resistance. I think once that is taken out, there is some supply zone also around that area. Once that is taken out, there could be fresh momentum building. So maybe beyond 2300 is when you consider enterprises. But Adani Green and Adani Energy going strong. You could hold if you have positions, or you could add with stop losses about 2.5% lower on some of these names.
Okay, watch out, Parag bhai. You energy transition.
I think Adani Group is the best way to play the energy transition. Yesterday also we were discussing that Adani Green, Adani Energy, Adani Power, all these stocks, and Adani Ports, of course, is not an energy transition play, but as a fantastic asset, I would say. So I think definitely Adani Group is a clear energy transition play and best infra play, in fact, apart from L&T, if you ask me.
Got it, yeah. And I was doing some of the math, and again, viewers, just remember that standard disclaimer we've already given. But Adani Power, if you look at the numbers just 1 year forward, don't even look at the cash flow print that comes out 3 years out. Just 1 year forward, the stock trades at about 20, 21 times. We have companies trading at 50, 60, 70 times PE, right? This is not very expensive. And if you then take into consideration the cash flow situation that could come in for any of these, the EBITDA and the resultant cash flows, I just think the investable surplus with each of these firms to either expand or pay back to the shareholders is very, very high, that optionality. So something to consider.
Yeah, certainly. And I think this is so actually the interesting thing to me about these businesses is that they are all ramping up on capacity in a big way, right? But in 5-7 years, these are businesses that will turn into complete annuity businesses because they'll start returning money in a very, very big way.
Exactly.
And these are, I mean, not obviously I can't make recommendations, but then this is the time frame. And Parag bhai, you please weigh in the life of an infrastructure-led company that is creating physical infrastructure. While it is in the process of build out, is when you acquire it for it to eventually play that annuity game for you.
Absolutely. And right now you're in the build out phase, and I must say that the group has also now been very cognizant of net debt to EBITDA number at the group level, and which is very, very important financial discipline when you are building out such a large infrastructure assets. So it is not that it is very highly levered now.
Kush, you want to make a point?
Yeah, the only reason I didn't mention Adani ports like Parag did, because we were broadly speaking about the energy theme. 1575, 1580, that is the medium to long-term resistance zone on Adani ports. The trend is positive. There's a rising trend line support on this. Once it crosses 1575, 1580, this will enter a new leg of up move. So keep that on your radar. If you have that on your position in your portfolio, great. If not, you could consider adding.
Okay, pre-open rates coming in as well. Let's just take a look at what's happening this Friday morning. And you know what's interesting is that over the last week or so, at least the stress over the war has receded, but you've not seen some big uptick in the markets like you have, say, in the US markets. Even today, if you look at what's moving this morning, pretty muted on both the Nifty and the Sensex as well. Up in the green, no doubt. And of course, these rates will settle, but nothing great happening over there. GMDC popping again. GMDC about 19% up in the first tick. Remember, this is minute 1. So all of this will settle, but it did close at a 20% upper circuit yesterday. The Adani group stocks that we've been talking about are all up in the green. Adani Energy, Adani Ent. I'm seeing everything at 10% right now on my screen. All of them, and Adani Green, of course, Adani Ports as well, all of them buzzing this morning. So is Angel One. Angel One, and this is a stock that you talked about, Alex. Very, very positive updates and results coming in.
Yeah, and good set of numbers. I think what stood out to me was the fact that it's done it in a tough environment, right? So the fourth quarter was not the best quarter for the markets. But having said that, the realizations on broking has actually gone up, and the share of F&O has gone up to a certain extent in the revenue as a whole. Did you see the numbers at all?
Yeah, I saw the numbers. I like the numbers, definitely. And I'm expecting, so it is gap opening only. I expect a good positive move in my.
For some of these capital market plays, Angel One Plus, would you say that now is a good time to consider on the charts?
On the contrary, I would now suggest profit booking.
On Angel One.
On Angel One, on Motilal, because they've had a good run. Especially Angel One is now coming up at the resistance of 330. It's not been able to take that out. Angel One is a range play right now. So if you see on the upside, you've got that 330 mark, which has proven to be a resistance not now for the last about year or so, maybe more, in fact 2 years. And on the downside, you have this 200, 220 zone, which acts as a support from where you see buying emerge. So if it crosses 330, you consider. I still remain constructive on the AMC space and the exchanges, BSE and MCX. So for me, those will remain a play, on declines. Angel One, Motilal, these are more trading bets, and once you've got some profits in these, you might want to take them off the table.
Okay. Angel One, I want to look at what's happening with Grow. I want to look at what's happening with BSE and the entire capital market space. If you're seeing some improvement there as well. Grow, again, not doing too badly. And BSE also 0.25% up. Overall, breadth is also looking pretty decent this morning, all things considered. But I want to focus on auto stocks. And this note from Morgan Stanley on auto is interesting. They're talking about conviction in volume and the upcycle keeping them positive on autos. They're saying autos are facing multiple headwinds, from cost pressures to risk of supply chain disruptions to tightening regulations. All that will hit Q1 gross margins, but the volume upcycle will enable OEMs to gradually pass through cost pressures. They've maintained an attractive industry view. M&M, Maruti, TVS and Hero are their preferred overweight ideas as far as Morgan Stanley is concerned. For TVS Motors, they've maintained an overweight and hiked the target price to 4,327 from 4,280. They've maintained an overweight on Hero Motor as well and hiked the target price. 6,537 is their target price now. And for Ashok Leyland, they've maintained an equal weight and cut the target price to 180 from 227. For M&M, they've maintained an overweight and cut the target price to 3,919. Hyundai also maintained overweight, but another target price cut to 2,114. And for Bajaj Auto, they've maintained underweight and hiked the target price to 8,920. On Maruti, it's maintained overweight and hiked the target price to 17,895. So autos could be in focus right now. Q1 expected to be soft. Sharad joining in now, though, for the big brokerage idea of the day. What's the big call, Sharad?
Well, Tamanna, it's Gujarat Gas will be in focus. Nomura has come out with this report, but of course, yesterday itself, Somit had also pointed out this entire setup. There's an upgrade coming in to buy from reduce, and the target price is set at 390 rupees per share. And they've stated that there is an opportunity coming in this adversity of times. Iran crisis might actually provide multiple tailwinds for the company. Why? Because there is a shortage of propane in these clusters in Gujarat, and because of that, the natural gas becomes important. Also, there has been a stock correction also, which provides an attractive entry point, and the outlook in the Morbi's ceramic cluster has improved meaningfully as well. Now, potential petrol or diesel price hikes is positive for the CNG demand, and the domestic PNG is getting tailwind from the government push as well. And overall, they are raising the FY27 EBITDA by 14% on account of increased margins and the volume offtake, which I had mentioned earlier as well. So that's why Gujarat Gas is in focus on Nomura's upgrade.
Okay. All right. Let's take a look at this on the charts as well. Up about 0.75% at the start today. Would you buy into it?
No, not really. For this one, the base has been shifting lower every 3 to 6 months, and hasn't really found a meaningful uptick. Again, like most of the other stocks, this one's also seen some recovery from oversold territories. But immediately, if you see, there are resistances at the 350, 375 zones. So yeah, multiple resistances and been a rank underperformer. Until a few key technical resistance levels are taken out, I think there could be some consolidation that could come about. Some triggers here or there could push it up, but for it to be a sustainable buy, meaningful levels have to be taken out, and the earliest one comes in at 380.
What about the railway pack? And there are few that have been buzzing on account of order wins. I think Neeraj pointed out RVNL. It's up about 2.1% in trade today. Would you buy into any of these? RailTel, RVNL?
No, in fact, if you recall, was it yesterday or day before where we said RailTel's already moved quite a bit, prime candidate for profit booking. We saw that happening yesterday on RailTel. Again, this pack as a cohort, doesn't really have that kind of steam. So I would actually take this as an opportunity to exit out of this if I was holding for, some time now, if they come close to my buying price. So for me, this is more of an exit opportunity, especially if you're, a medium to a short-term trader.
Parag bhai, since we talk about banks so much, since Axis Bank is considering a fundraise alongside the results, does it raise a bit of an event risk in going into the earnings?
So I was a bit surprised why they want to raise funds right now, but they are growing at a very good rate. This quarter business update 18% YOY loan book growth. Valuations are very reasonable. So I would say that but definitely I would also closely watch this event.
I haven't looked at the capital adequacy. Maybe we'll have to check that.
They'll be around between 14 to 15.5%. They are not as highly capitalized as ICICI and HDFC.
Yeah.
And Kotak, of course. So Kotak is about 20%.
Maybe they're capitalizing to fund that future growth.
So there is no problem with that. The only thing is that at this time to come out with the... But let's see. They are growing faster than the system, no doubt about it. They have proved it.
All right, so Axis in focus. The street not looking too negative about their fundraise announcement, at least this morning and at least as of now. I want to see what's happening to Wipro in the pre-open session, and Wipro has ended with about cuts of 2.5%. So you're going to see a bit of a gap down. This could actually intensify when markets do open. HDFC Life, again, Another set of numbers that failed to please. To put it mildly, about 2% down. Same for Alok Industries. I want to see what happened to VST Industries. The numbers actually looked pretty decent. Alok Industries also 1.5% down. VST Industries about 13.5% up. Robust set of numbers over there, and the street is rewarding it as well. Apart from that, we were talking about a RailTel, and yes, some profit booking is being seen over there. Godfrey Phillips also looking good, maybe because of what you're seeing from VST Industries numbers in the same space. So Godfrey Phillips also looking good. Angel One about 3.5% up. Anything exciting that you're spotting, Question, that you would look at after the pre-open session?
Yeah, so Pokarna, the call that we had before the pre-open session also, opening strong. I would also be a little constructive on Aurobindo Pharma. Ended very close to the high point of the day yesterday, flattish kind of a start. So these couple of names, and GMDC, just to reiterate, I mean, if it does give you another big opening, you might want to start taking money off the table gradually, if not at one go.
Got it. Nilesh Jain, VP, Head of Technical and Derivative Research at Centrum Finver, is joining us. Thanks so much, Nilesh, for taking the time. What ideas would you look at? We've already seen the close of the pre-open session.
Very good morning to you, Alex. Good morning, everyone. We have both the buy recommendations. So first of all, we are bullish on EMS space as a whole. We have seen a very good momentum in Ember, Dixon, and Keynes Technologies. So out of all, Ember is looking better place, and we are expecting a move towards 7,900 to 8,000 on the upside. So keeping a stop loss below 75.50, Ember is a buy. And apart from that, Godfrey Phillips, yesterday we have seen a very good build-up on the long side. On technical front, it is on the verge of a breakout. So if it breaks about 2180, it's a buy for upside target of 2300 plus. So one can keep a stop loss below 2080 and go long in Godfrey Phillips as well.
Okay, so interesting names there. And Nilesh, from the defense pack, is there something that stands out as a trade because they have rallied a bit? You could even recommend booking profits there. Is there something in that bucket?
Well, Neeraj, the ideal strategy would be to keep booking profit at the high level. We have already seen a V-shaped recovery. It has rallied almost in last 7-8 consecutive sessions. Although the undertone looks positive and looks bullish, but not advisable to chase the momentum at the high level. So better avoid taking any fresh entry at the current level. If at all you get any meaningful decline in the stocks like HCL, Mazgaon Dock, and Cochin Shipyard, these three stocks remain our preferred bet, but not at current level. Buy and decline should be the strategy.
Okay. Keep an eye out for maybe possible profit booking into some of those. Now, Vari Renewable Technology should come up on your screen, and then we get Vari Energies on the screen as well, because Vari Energies is certainly doing well. Vari Renewable had good results, but the margins, I think, Alex, came off a bit, and maybe which is why this just
a bit. I mean, on year, yes, but sequentially it was okay.
Sequentially it was
10 basis point improvement, if anything.
Okay.
And they had guided.
You saw that March quarter last year
was a high base.
Bumper, 27% margin.
Yeah,
I think they're normally doing 19-20%.
Correct.
Margins.
And in fact, they had guided in a conference call ahead of Q4 numbers before. So
that
15% ke upar we will maintain it.
So they've done much better than
that.
Your thoughts on both of these group companies?
So basically, I don't track this space so closely, so I would not give you a very, and I don't own the stocks also. So let me pass this to Kush.
Let me pass this to Kush.
Gladly.
Like a hot potato.
We'll take it on. नहीं बहुत अच्छा rally हो गया है. Now, daily setup पे, weekly setup पे, it's approaching overheated territories. You're better off booking partially and holding the rest. The reason for that is, just because it's overheated doesn't mean it doesn't have more legs. So यहाँ पे profit book करो closer to lower level. So on Vari Renewable closer to about 1,000, and on Vari Energies closer to about 3,200, 3,250 is when you can re-enter whatever you've booked. So book partially and then you could re-enter. On the medium term setup, the trend on both of these have turned for the better.
What's really hurting also in this session is Jubilant. And not surprising after their business updates as well. It continues to be, I believe, there is a brokerage note on it as well. Jubilant Foods about 3.5% down. So is Varun Beverages. So is Campus Active. So I'm just saying that consumer trend also looking fairly negative. This entire space is an avoid in your view, Parag Bhai?
No, it will be stock specific definitely. For example, I like Marico in this space a lot. That's my.
Would Marico be in the same category as Jubilant Foods?
No, I'm just saying consumption space.
Consumption space. Anything you like in anything you like in the
I don't
QSR
own anything,
space?
but of course some of these stocks will be interesting at some price points for sure. We'll have to and see.
That's the most generic thing in the world. Every stock will be interesting at some point, at some price point.
The stocks have corrected also. That's what I'm trying to. So some of them can become interesting. So for example, if suppose Jubilant Food this quarter was bad, the LFL growth was bad due to LPG thing only. If that is the case, and if it is going to revive from here, then the prices can be interesting.
I don't know. It depends.
I don't own it, by the way, but I'm just saying.
So, at what valuation would you say Jubilant, and quick answer, would be attractive?
So, I would say that between 35 to 40 PE is something where 1 year forward, I would say, is where I would be interested.
Okay, so we're winding down. Nilesh, last thoughts on a single stock that you might have seen in the pre-open sessions. This is beyond the stocks that you've already recommended.
Well, out of all, I believe Apollo Tyre would be one stock that should be on the radar. We have seen a very good base formation. So if you get any dip towards 440, 442, that can be a good entry point. Even at current level as well, one can initiate a fresh long position because we are expecting a move towards 455 to 465 on the upside. So one can keep a stop loss below 436 and go long in Apollo Tyre.
Okay, Kush, 5-second answer. Top call.
Pokarna, and the targets on this one 945, 965, stop loss at 900.
Pokarna is Kush Bora's top idea. I think Lish liked some of the tire names as well, but profit booking recommended in some of the defense names. But here's how the markets are starting this Friday morning. Flat, maybe with a downward bias. No, actually you call this flat. Not really a dramatic downward bias. Yes, about 0.5% or 0.25% kind of a downtick after a reasonably good rally that we've had. But I wonder if the advanced decline is right. Mid caps are flat. Small cap index should come up on your screen too. Let's see what that one is doing. That's 0.2% higher. So very impressive breadth really for a sluggish market start. Not bad at all. Let's get the heat map up on the screen. See what is Wipro doing on the red corner. Is it amongst the top losers? It is in fact the top loser. 3.25% lower. Buyback, etc. not quite helping. HDFC Life 2.36% lower as well. Wipro has, you could argue, some collateral damage to HCL Tech, Infi, etc. Nothing dramatic, but a bit there. Tech Mahindra too. And metals are taking a bit of a pause. Remember, 15% done. Over 15% done in the month of April alone. I mean, a breathtaking rally. Some bit of pause could happen on a day when the markets are pausing. Some more red than green, but what is in the green? ITC, up about 1%, I dare say. Is it VST Industries rub off? No, don't worry, not saying that, but it could well be. NTPC 1.39% higher. Trent has some uptick. ONGC has some uptick. No apparent reason. Crude prices are stable really. BEL, Adani Ports, etc. In the market, in fact, moves marginally the green as well. So, Tamanna, not much really here. I mean, HDFC Life and Wipro, arguably, the two names which are maybe making a newsworthy move.
But not being punished that badly, I would say. Wipro not being punished that badly for a forecast which is a downtick as well, and third consecutive time of reduction in revenues in constant currency. So that way it's not half bad. India VIX is also benign, not moving too much one way or the other. Let's pull up the small cap and the mid cap, because where is that positive advance decline ratio coming from? Mid cap 150, completely flat. The small cap is where the action seems to be, about 0.5% up, and breadth is, like we mentioned, quite positive. So the makings of a recovery definitely, or a rebound, are there in the market this morning. Let's pull up the sectoral heat map for you and see what's buzzing and what's not. You have metals which have a bit of softness that they're showing, and you saw that in the pre-open session as well. JSW Steel among them. You have Hindalco also, which may have come off. Auto stocks are about 0.25% down, but even Nifty Metal Index is just about less than 1% down. FMCG stocks are doing okay. It's a middling off the path, I would say, a quiet start to the markets, if nothing else. I want to pull up individual stocks and let's see what's happening there. We've been talking about results, and results season has begun. Some of those numbers are now coming through. Let's see what's happening with an Angel One robust set of numbers. HDFC Life, we saw that they haven't really done too well. Waaree Energies was okay. Angel One is about 4% up. I want to bring back Wipro and of course VST Industries. VST Industries 16% up right now, and that's really the winner of the morning. Alok Industries was not a great set of numbers, but revenues at least were in the positive. That's about 1% up. The Adani pack is in focus and for a variety of reasons. Adani Total now about 1% up. Adani Green is mildly in the red. Let's look at Adani End and Adani Power. So a mixed bag over there. Positive brokerage call on Gujarat Gas, and that was our big brokerage call of the day, and that stock is popping about 5.5% up. I want to look at Jubilant Foods if we can very quickly, because there is a downgrade from Morgan Stanley which has come in on Jubilant Foods. So we should take a look at what's happening there. That's also 1.5% down. It's as if everyone's taking a breather or maybe wanting to start off the weekend early. I don't know which one it is, Alex.
Yeah, you said it, Tamanna. Actually, there are a couple of stocks in the broader markets beyond what you've mentioned that are doing well. GSPL, Gujarat State Petronet, is up about 12%, one of the top gainers in the broader markets. Redington is up and about. Engineers India is moving up as much as 4.3%, and one of the top gainers from trade yesterday, Shipping Corporation of India, is up and about today as well. Yesterday it made quite the up move. It's up a further 4% in trade today. And MGL, you heard about Gujarat Gas, but Mahanagar Gas is also up about 3.4%. RVNL reacting to that order win. I do want to ask about Shipping Corporation of India as well as GSPL. Are these tradable ideas, Kush?
Shipping Corporation most certainly is. There have been multiple attempts at breakout, above that 275, 280 zone. That's finally come about this week, and the stock's gaining ground from there. Very healthy volumes. Even previously, the stock attempted a breakout above these levels. The volumes were very healthy, and then of course the war struck, and the stock was consolidating with a negative bias on thin volumes. I think SCI is a good, tradable idea despite the kind of move that it's already had. So one of the rare exceptions where the stocks run up but still makes sense to trade. Positionally, I would suggest a stop loss at the 280, 285 zone, and on the way up, enough and more momentum for the stock to go to about 315. And 345 zones. So yes, this one still has strength, very healthy volume accumulation. If you have, hold. If not, you could still add.
Okay, I want to go to Nilesh very quickly on a couple of stocks. One, GMDC, which Kush has already said book profits is falling as we speak right now. So it was down about 1.5% after the market opened. It's now down 2.5%. So would you book out? That's one. And two, specifically on GSPL, up 13.6%. Would you ride that rally?
Well, Alex, first of all, GMDC, we did play the upside move, but not advisable to chase the momentum at the high level, as Kush rightly mentioned. It's better to book profit, although the undertone looks strong, but the risk and reward is not looking favorable to chase the momentum at the current level. So ideally, fresh entry could be done somewhere around 750 to 710. If at all you get any dips towards that particular range, that can be used as a buying opportunity. But overall, the broader structure looks positive for 750 plus kind of target as a positional bet. Now coming to GSPL, looks like a strong pullback move with a good volume participation. Yes, quite possible that we may see a follow-up move towards 295 to 300 as well. But again, having said that, it's already up close to 15%. So with this kind of a spurt, the risk and reward is very much unfavorable. If somebody is already holding the long position, can ride this rally up to 295 to 300, keeping a trailing stop loss at somewhere around 275. But fresh entry, I would suggest to avoid.
Okay, let's look at Jubilant Food. We were talking about that downgrade from Morgan Stanley. It's been downgraded to equal weight from overweight, and a target price cut to 486 rupees from 693 rupees. Why is that? They see more risks emerging to earnings growth in the near term, likely weak underlying demand in Q4, a weaker macro consumption environment, and a higher base in the first half of FY27. Negative operating leverage and higher costs due to the LPG supply constraints could keep margins lower, they say. With absolute valuation still high, they see limited triggers for a stock outperformance. Having said that, not too negative on Jubilant Food is what the street is right now. Nilesh, is this a counter that you track on the charts? What would be your view here?
Quite volatile stock, and we are not tracking that closely, but it's an avoid because it has not broken out. We have seen a lot of underperformance. Constantly, it is constantly forming a lower top and lower term formation as well. So it was merely a pullback that we saw till yesterday. But again, looks like more sort of a range bound. I would rather wait for a break above 466. If it breaks 466, then it's a buy. Otherwise, it's an avoid at current level.
Okay, thank you so much, Nilesh, for joining in. Just before we let you go, any view on VST Industries, Kush? VST Industries, just because the way it is popping, and of course the numbers were also decent.
Okay, so good volume accumulation, but massive move already, and resistance is around the corner. So more of a hold rather than a fresh buy. And after this kind of a bump up, from a near-term momentum perspective, becomes very difficult. So the risk-reward ratio not favorable, but definitely something that you can hold. And I think Nilesh was being a little modest about Jubilant Foodworks. My answer is more direct: becho.
Yeah, it's not dropped that much though, Jubilant Foodworks.
So chance hai na, abhi
chance
becho.
Hai to bech do. Okay. Parag bhai, have you looked at VST? Any view on a VST?
So basically, I hold ITC in this pack, and in ITC, there's great margin of safety at this price. Next 1 or 2 quarters might be a little bit muted because they've increased the prices so much that volume degrowth will happen for sure. But on the other end, the FMCG business is doing very well. So I would say that ITC at between 295 to 305 is a good margin of safety buy. But one should have patience because 1 or 2 quarters might be slightly tough.
Yeah, it's fallen 30-35% in a very short period of time.
And you'll get 4.5% dividend yield.
Okay. All right. On that note, gentlemen, thank you so much for joining in. Always a pleasure, and happy Friday to you.
Thanks. Same to you.
All right. Now, at a time when uncertainty has triggered a risk-off bias in the markets, Ramdev Agarwal, the chairman and co-founder at Motilal Oswal, spoke to us about the gifts of staying bullish in the special town hall chat with our managing editor sitting right next to me, in fact, Tamanna Inamdar. He spoke extensively on India's growth story, substantiating the long-term game of investing. Take a look at a portion of that conversation.
I want to ask you a question very, candidly. In the last 5-6 weeks, when all of this war stuff started coming in, we saw crude go up to 110, 119, no idea, people are talking about 150. Was there any point at which the bull inside Ramdev Agarwal was scared or worried?
No.
Were you worried?
No.
Not one single day?
Why I'm telling you? Because ultimately, we are not in the, this is not our war. We are indirectly impacted. Iran itself is just about 0.3% of global GDP. First, when this kind of thing happens, I go and see the Wikimedia. How big is the country which is under destruction? So Iran is just about $300 billion country. Okay, why it became so serious is because of Gulf of Hormuz, where a lot of this oil comes out and 15-20% of oil moves, petrochemical moves, your LNG moves, your plastics move, helium moves. So those things, I mean, so many rich countries are sending their petroleum products out. So that became a issue, and then oil started climbing. And we are 70-80% energy importer. So directly and indirectly, that is started hurting the company's performances, supply chain, and the cost structure. And so like plastic products are up by 30, 40, 50%.
Yeah.
So obviously the packaging cost, so wherever packaging intensity is there, those companies have to pay. And can they pass on immediately? Obviously not. So it brings inflationary pressure. Government is absorbing to some extent petrol, diesel hike, but how long? After elections and all, they will also kind of reconsider this. So that will take away my purchasing power out to whosoever is supplying the energy. So to that extent, they'll be hurt. And hence the corporate earnings will be hurt. So if my corporate earning was to grow by 15% next year, that might grow at 13%, 12%.
But it didn't bother you beyond that?
Yeah, and market had already corrected. So what is there to bother?
Okay, we're going to mix it up. Kush Bora for our question, and then of course we'll come to others over there. Yes, Kush.
Very good morning, Ramdevji. Two questions, in fact, if I can be a little greedy. One, typically these war-driven or event-driven bottoms, make the base for the next bull run. But with FII participation not returning, do you see that happening in the next 1, 2, maybe 3 years? That's the first part. And the second part is we've already seen that the retail participation, direct retail participation in markets is starting to dwindle. So in part you've already answered this, but how does retail approach this? Typically you see when the markets are rising, retail comes in, and when markets go down, retail exits. So how does a retail participant and individual approach this? Asset allocation, or still continue and have that faith in the markets and still keep on investing?
I don't know, so many questions are there, which one to? So I'll tell you, see, market is going through a structural change. In last 5 years, say till 2020, it was very FI dominated market, and Indian institutions were not that strong because retail flow was very, very limited. Come 2020, and instead of 300,000 customers, we are getting as a system 3 million customers, 10x, and till last month we got it. Okay, so this is structural shift of the Indian market, so DI flow is staggering, and it will keep becoming bigger. I don't have any doubts. Maybe for 6 months, 8 months, it could slow down. But if you look at say 5 years henceforth, it will double. If it was 5 lakhs or 7 lakhs this year, it will be 2x of that in 5 to 7 years. So that will keep increasing. There is no doubt about it. Now, what FI will do? FI will keep selling. My sense is they'll keep selling till India stays here and the world stays here. Okay, they are the only arbitraging machine between India and rest of the world.
Yeah.
Because we are not allowed to go out. In fact, I wrote to one CIO, somebody, that please open we should also be allowed to go out in a limited way through ETFs or something, so that the level here is little lower.
Yeah.
So that FIs don't have any encouragement to go out, and actually they have encouragement to come in. So that you open the two arbitraging machines, one through the FI and second through the domestic, in a limited way. So that is work in progress. So, but then what will happen is that India will remain expensive, and India will keep getting DI in a very, sequential way, increasing number. As the GDP rises, the contribution here will come. Third, what has happened is the interest rates have come down. If you look at your savings deposit, you get about 2.5%, 3%, something like that.
Yeah.
So obviously there is no encouragement. Your inflation is 3, 4%, 5%. There is no encouragement to the people at large to actually go and deposit in banks. And now digital system and the marketing of mutual fund Sahi is so intense that people are getting aligned to sending money for stock market. So I think we are passing through multiple forces, most of them positive, except for FI is going out.
Well, it was a beautiful conversation yesterday. The snippets of it were pretty interesting too. You can catch the whole conversation on all of our social media handles as well as the YouTube channel as well. Listening to Ramdev almost at any given point of time is really lovely. So do watch out for that. Okay. Now, let's try and talk to some corporates. The first one is John Cockerell. It bagged a major 300 crore order from JSW Steel Coated Products, strengthening the order book visibility. Before we get the management, Mahima Johnson with the key details. Mahima.
Right, Neil, so as you rightly mentioned, I think the main talking point today would be the 300 crore order win that they've gotten from JSW Steel, and it's to be executed by May 2028. Just to give viewers a brief, the company follows Jan to December period in terms of their accounting. The project is basically for manufacturing of continuous galvanizing line. In terms of order intake and backlog, FY25 order intake rose to around 862 crore versus 300 crore in FY24. Year-end backlog reached around 1190 odd crore, which is up 74 odd %. In terms of the key growth engines for this company going forward, the first one is the way it is positioned in terms of India positioning as fast-growing major steel market. Focus on downstream processing as well as modernization and value-added capex is something that's going to augur growth for the company. The second one is value services, which contribute around 30% to their FY25 revenue. The expected contribution now will be 28% next year, but higher in terms of absolute terms. terms, and value services will contribute around 40% to the overall margins, and it's expected to deliver around 50% of group profitability going forward as well. And the third growth engine is coming from the proposed acquisition, which is going to proposed acquisition of the US group entity by 31st of December 2026. So these are the growth engines to look forward for the company going ahead, and of course the main talking point being the 300 crore order win.
Okay, Mahima, thanks so much for that. That's a small leeway into what the eventual conversation can be. Francois David Martino, Executive President and CEO of Business Industry, John Cockerill Johnson, right now on the show. Francois, did I get the name pronunciation correct?
Absolutely correct. Thank you very much for the effort.
No, just heard that name in the movie so many times that I kind of guessed it, but I'm glad that I got it right. Now, I want to start off not with the 300 crore order, but with a line that I read in one of the, in the con call summary, which said that the management is framing this end of restructuring, etc., everything done, by saying that what an investor is investing today is not the company we were, it is the company that we have become. Can you tell us what is the company that you've become? Is it a global metals platform? Is it something else? And what is the trajectory of growth for John Cockerill?
Well, we have been restructuring and preparing the future along 2025 with the entire team, not only the team in India, but the global team as well. And on 1st of January 2026, we have made a major transaction where we have acquired the rest of the metals industry activities of John Cockerill Group around the world, except for US, which integration is planned to take place on 1st of January 2027. So what we are pursuing in terms of mega trends in steel industry are based on 3 pillars. First of all, we want to propose the best available technologies for green steel and decarbonizing the industry and the world as well, while in the same time, we see a big trend in the electrification of the world. We see through electrical cars, we see through power distribution, through data centers, that the need of electricity in the world is immense, and therefore we are proposing cutting-edge technologies for electrical steel production. And the third, which is also along with decarbonization, is we are focusing on developing top-notch technologies in terms of reducing weight of cars and what kind of structure you can find around the world in building home appliance by producing advanced high-strength steels, which is the future of steel and will replace in many aspects other materials used today for some constructions.
So is my understanding correct that almost all of the businesses except for the US business have now been consolidated into John Cockerill India Limited, the listed entity that we are talking about?
Absolutely correct. So today, John Cockerill India Limited is a vehicle for global investment. So when you're investing in John Cockerill India Limited, you're investing in the global trend of steel. And we are able, through regionalization of our activities, whether it's in Europe, in Southeast Asia, in China, in US and India, to really capture where the trend is and where the market is promising.
Mr. Martino, good morning. This is Alex. And so I'm just trying to understand the capacity that you currently have, considering ex-US. Where is it concentrated? And when you talk about the 3 streams that you've spoken about, geographically, if you were to talk about where the orders are coming from, where do you anticipate that most of your orders will come through from?
Well, the steel trend is different from one region to another, and you have to be able to adapt to the market. We know that China is restructuring to reinforce their steel industry. At the same time, we know that there is a huge reindustrialization in the US, whereas Europe is fighting with decarbonization and low demand. So right now we have in India our absolute powerful execution platform with an office in Mumbai with 700 engineers working for worldwide projects. At the same time, we have in Europe our best scientists and technologists who are developing and putting in place the best technologies, which we are rendering available through our regions all around the world to our clients.
This order that you've gotten, this 300 crore order, which was the reason why we called in the first place, Mr. Martino, could you tell us a little bit about it, and also give in the context of the three streams that you spoke about, and what is the kind of trajectory that you anticipate to see, because your order intake in the year 2025 was up to 862 crore compared with 300 crore in the previous year. So it's a dramatic increase. Does that kind of dramatic increase in percentage terms happen in 2026 as well?
So we see with this order, first of all, let's frame this order with GSW. This order from GSW Coated Products, which is valued 300 crores, as you mentioned, is an important milestone for John Cockerill India. First of all, it's strengthening our order book visibility for the next fiscal year and 2028 as well. And it also confirms the trust that a leading player like GSW places in our technology, our execution capabilities, and our long-term partnerships approach. Has been incremental through the years with GSW. And I just want to underline that last year, GSW at Cockerill already trusted John Cockerill with a complete cold rolling complex. And this cold rolling complex includes a pickling line, 2 stand cold rolling mills, and a continuous galvanizing line. So what is important for our investors is that this is not just a large order. It is a high quality order in a segment where we see strong structural demand. Coated steel, downstream processing lines, and value-added steel solutions are becoming increasingly important in India. Demand from automotive, appliances, infrastructures, and higher-end steel application is supporting a broader capex cycle in this area. And we believe that this trend has real depth over the next 12 to 24 months.
Francois, we'll probably try and do an extended conversation at some point of time, but just for your viewers and your investors, it'd be important to know what's the revenue or profitability trajectory that you envisage for John Cockerill India, let's say over the next 2-3 years, because the numbers as they stand are not very impressive. So what's the trajectory ahead?
Yes, thank you for asking this question, because this gives me the opportunity to take out any doubts on what potential has John Cockerill. So right now we see that the market is extremely strong for downstream demand, not only in India, but worldwide. And the profitability of the company is linked to a minimum revenue, which we are going to achieve this year. And 2026, we see that as a platform for future growth in the future, especially with new technologies we are going to offer. So we have a unique technologies called jet vapor deposition, JVD, and we are going to confirm the first order in 2026. This technology is unique in the world, has been developed together with ArcelorMittal, and John Cockerill is the only one worldwide offering this technology and having industrial application already running.
So sorry, but just one very quickly, because we are slightly out of time, Francois here. What are the numbers going to look like? Let's say 2026 or FY27 as we do it in India, which is April to March, whichever numbers you may be following. But 2026, 2027, what could the revenue numbers look like?
We believe in a double-digit growth. So 2026 will show a double-digit growth.
Double-digit could be 10% and 99% both.
Exactly. So let's put something in the first part between 10 to 50.
Okay.
But it's going to be significant enough, higher than the market growth, and this is going to show the dynamic of John Cockerill. And of course, we expect that the profitability will be much better than next year.
Francois, wishing you all the best for more order intake, great delivery. Thank you so much for taking the time out and being with us today.
Thank you for having me. Have a great day.
Okay. Thank you. Well, 300 crore order win, some spikes out there, but it's a very liquid stock, frankly.
Yeah, I'm excited about this next piece because
it is or it isn't a very liquid stock.
It is a fairly illiquid stock.
Yeah, exactly.
Illiquid.
It is an illiquid stock. So I suppose that should be kept in mind.
Certainly. But I'm very excited about this next piece because of the artwork that is on display in the studio as well. And we're talking about cement companies and they're facing, like a lot of other industries, mounting cost pressures. But what are they doing at this moment? Because you're hearing some murmurs of price increases. Let's go across to Puneet first to set up this conversation, and then we'll talk about more details. Puneet?
Well, thank you for that. Definitely, one of the key aspects for cement companies has been the raw material price volatility, and definitely the pressure has been building on. There are two key questions that we're trying to answer now in the next couple of minutes. The first one being that if there are more price hikes that are required by the cement companies to already what has been announced, and the second one, what could be the quantum needed. So when you look at the fuel price mix, essentially now they have a diversified fuel mix over the last 10 to 20 years. A lot of investments have gone in from the larger players, of course, and hence you could see some volatility in certain aspects for certain companies. So petcoke prices continue to be volatile, and that's one of the major sources of fuel mix for cement companies. And CLS is anticipating that companies with a higher mix could have to pass on that price hike of almost $40 per ton for petcoke specifically, as well as 30% packaging, which is impacting across the players. Now, when you look at the table for all companies in this space, now specifically for the likes of Birla Corp, you are seeing a 70% mix for alternate fuel. So they are much better placed there. But for Ultratech, almost 45% comes from petcoke. But you compare that with another giant, which is Shree Cement, at 76% petcoke, you could see a higher impact for them, as well as for someone like JK Cement, which have a higher petcoke in their fuel mix. So alternate fuel players, much better placed. Coal importing players are also much better placed. But the petcoke price could see some impact for Shree Cement, as well as for someone like a JK Cement at this point of time. Now, brokerage firm BofA has actually highlighted this, that they are looking beyond Q4 headwinds at this point of time, because Q1 could also impact FY27 numbers. And hence, their anticipation is a 200 to 250 rupees impact per million ton because of the West Asia conflict. When you look at Jefferies, also multi-fold cost pressure, and they spoke to actually the managing director of Sagar Cement, South-based company, smaller player, and they are anticipating 2x of what impact larger players could be, of almost 450 to 500 rupees per ton cost impact just in Q1. Finally, Q4 generally for cement companies is a volume push quarter. You push volumes, dealers also have targets to meet, and hence this coming at this point of time is much more going to be an impact on margins for a lot of companies. So you're seeing, Nomura expecting, although a 7 to 8% organic volume growth, cost pressure will hit the companies in this point of time and continue in Q1. Finally, the final word of what we are putting out. Now, they might report volume growth in Q4, but it has to be seen contingent with the margin pressure in this particular quarter and Q1. Now, trade prices largely unchanged at this point of time. So you haven't seen that kind of price impact already being passed on. But Q4 expectations for Nomura is roughly 318 is what it's currently trading at, very similar to when the GST rate cut happened. And capacity additions will moderate post FY27. So you could see some impact because of ramp up also. And HSBC is expecting cement prices to be raised only after April. So it could be a good quarter in terms of volume growth, but the next 2 to 3 quarters could be difficult for cement companies. And hence you're not seeing a runway in all of these stock prices for cement companies at this point of time.
And the fact that price increases are required but can't necessarily be taken to that extent also adds pressure. Thank you for that, Puneet. Rajesh Ravi, institutional research analyst at HDFC Securities, with us on this conversation. We're also joined by Rakesh Arora, founder of GoIndiaStocks.com. Welcome to both of you. Rajesh, I'm going to start, with your take, with the story that we put together and the analysis that we put together. What is the extent of price hike cement companies need to offset these energy price increases and packaging price increases? And are they in a position to take those hikes right now?
Hi, good morning. As Puneet rightly, highlighted, overall cost increase basis the current spot prices of fuel and the packaging material indeed warrant a cost increase of 400 odd rupees per ton. And if that has to be passed on, at least 20 to 30 rupees per bag price hike is to be effected. Now, again, this whole price increase is not happening at one go. There are fuel inventories which companies have been maintaining, depending upon their balance sheet strength. And hence, in Q1, we are expecting the cost to go up. I'm talking mostly about the variable costs, including packaging materials. So they would go up by around 200 rupees per ton, and price hike of around 10 to 15 rupees per bag.
I'm going to come back to you. I'm going to come back to you, Rajesh, because your audio is breaking and we want to get that point clearly. So allow me to come back to you in a few minutes, and our team will try and fix your audio in the interim. Rakesh Arora also with us this morning. Rakesh, very good morning to you. It seems to be an input cost problem at one end and an inability to pass it on the other, isn't it?
So, for Q4, I think things are sorted. We got one results already come out from Novaco, and we saw that margins were up by 200 rupees per ton as compared to Q3. So Q4 results are going to be decent. Coming to Q1 FY27 results, companies have taken, 15 rupee kind of price hike, of which around half has kind of stuck. The key issue they are facing is demand issue. So after a very robust demand growth in Jan and Feb, March has been very sluggish and April hasn't really picked up. So there would be few more attempts to increase, prices. And, at the moment, there's around 300 to 400 rupee per ton kind of inflation that we are seeing. But, diesel prices haven't really moved up much for, retail consumers. It's moved up for commercial consumers. But, cement industry, the transportation largely happen through, truck operators who, buy it from a retail outlet. So diesel prices haven't really moved up, and we have to see how, those prices will move up once the elections are out of the way. So that's another overhang which is there. But, the cement industry is quite consolidated, and if they want, they can pass it on and maybe pass it on a little bit more. So that is what has been the trend historically. So there could be a little bit of lag here and there, but I have no doubt that it will be fully passed on.
Extent that you think needs to be passed on, Rakesh, what is your back of the envelope calculation?
So, around, 300 to 400 rupees per ton is, depending on which company you're talking about. If the company is in Central and East India, they're largely dependent on, domestic coal. They won't have a more than 200 rupee kind of hike. But the guys who are in South India or, Western India, who are dependent on imported coal or pet coke, they will have a, much higher, cost inflation.
So Rajesh, first of all, you were making a point, and I would invite you to complete that point. And just to the point that Rakesh has described, which is that it would depend on your geographical position as well, how much you would need to pass on. It would also, I guess, depend on your ability and the market share that you have. So is there going to be a disparate performance, in your opinion, based on what we know right now of the ground situation in FY27 on the earnings situation?
That's correct. How Rakesh put it, I agree with him. See, what would happen is that first of all, the cost pressure is impacting every company in this sector, and hence there is no denying that no one would want the prices not to go up, and the current price hike of around 10 to 15 rupees per bag, this would need to further go up if the overall cost pressure remains intact and doesn't cool off in subsequent period. And for sure, people who are more dependent on petcoke and imported coal will have to think through in terms of sustaining the price increases, and that is where the western and the northwest and southwest place will have a higher cost impact. However, on the most impacted cost in the overall fuel basket currently is petcoke. But and the earlier chart where Puneet was showing that Shree Cement has a higher share of petcoke, we should also be aware of that these companies, almost all companies today, are very agile in terms of their fuel mix consumption strength. So if petcoke is available at a higher cost versus imported coal, people will switch over to thermal coal, and hence the cost rationalization would happen. So the cost impact, irrespective of it is petcoke or thermal coal, everyone is getting impacted, and there is a small wait and watch, because the Q1 itself, the whole price impact is not impacting at least the top 7-8 players. So smaller players may get hit because of the lower fuel inventory, but for bigger players, the impact would gradually build up, and hence even cement prices need to go up. And that is where the last point, the consolidation should come in. The industry is far more consolidated, almost 10% point higher versus 2 years back, and hence less reason of cement prices not sustaining or going up. Yeah.
Rakesh, as a prospective investor, if you're looking at this space, and I'm not necessarily asking you to pick one stock or the other, but what I'm trying to get at is, if somebody is looking to add cement to their basket, is this a good time to get it? Because one assumes that there are going to be pressures on the margins heading into the rest of FY27, right? Based on what you've described as well.
So, first of all, the cement sector has underperformed. The cement stocks have underperformed the market in the last 1 year. And to that extent, valuations are slightly lower as compared to what they've traded historically. So that is one, relief point. And number two, as I was mentioning, that Q4 results are going to be decent. So that will be the tailwind that you have. Number three is that they've already passed on half of the cost increases in April, and maybe they might take another 1 or 2 hikes in May. So the impact would be probably fully passed on. Number four, what I want to say is that normally these cost pressures are transient in nature, meaning you don't expect them to last for too long. But cement prices, once they move up, they tend to stick. So, once the cost pressures relent, the margins will be much, much higher. And so investors can, utilize any kind of dips based on this kind of, cost inflation news to kind of build position into this sector.
Okay, thank you so much for that, Rakesh Arora there, and Ravi for speaking with us this morning and giving us a picture of the cement industry. From cement to IT, and the big story of the morning, of course, is Wipro. The IT major has delivered what is turning out to be a bit of a disappointment as far as the results are concerned, and that's largely because of their Q1 FY27 guidance. Hiral has had a conversation with the management. Hiral, take it away.
Thank you for that. It's interesting to see what's happening with the Wipro, because brokerages have been absolutely divided post the Q4 numbers. And the buyback is seen as a near-term support that could be coming in. Not the case yet. We'll have to wait and watch. But let's get in the management. Srini Palya, CEO at Wipro, Aparna Iyer, CFO, and Saurabh Goval, the CHRO, joining in. Welcome to the show. Srini, let me start the conversation with you. If you have to take cues from the way the fourth quarter has actually panned out, what is it actually telling you when it comes to FY27?
So first and foremost, if you look at our current Q4, the results that we have declared, 3 of the 4 SMUs have actually shown a sequential growth, whether it's Americas 1, Europe or APMEA, and they have shown 3 consecutive quarters of sequential growth. I think we had a challenge in Americas too, of 2 specific customer issues. One was a client changing the direction. Other one is where we won a large deal, but we have not been able to ramp up enough. Second, if you look at the pipeline as of today, it is very secular across the industries and across the markets. And that gives me a good comfort that, despite the geopolitics that's going on, trade and tariffs that are going on, the clients are being very resilient and they're investing in IT. And these areas are AI, data and cloud, which is very predominant. So to me, the opportunities going forward is not only, leveraging AI for reimagining the client process, but also demonstrating AI in their run and operate and change and transform programs as well.
Okay, so Srini, you mentioned about a couple of things, and let me pick up the Middle East exposure, the geopolitical issues that we are seeing. And amid all of this uncertainty, are you seeing a slowdown with regards to client activity in this region as well? And is this going to be an interim impact that you're seeing, or are you expecting it to actually come in, say, at least in the first half of FY27?
No, you're absolutely right. Middle East, there are uncertainties. And I think, we should maybe wait and, I'm sure the clients are waiting and watching what happens in the next couple of weeks because wars are typically don't drag on for too long. Having said that, the clients are, watching across our Middle East region. And it's actually business as usual, both in terms of how we deliver and the projects that we're working on. Maybe one or two clients are relooking at in the context of the impact that they may have. We will get a much better view after a couple of weeks or post the final outcome of this war after the ceasefire.
Okay, so that's with regards to the geopolitical issues and the client uncertainty. Srini, when you have to individual segments, degrowth coming in terms of BFSI and healthcare. I know healthcare usually, seasonally, it's always a weak quarter. But if you could help us understand, is it a large client issue that is impacting these segments? And if so, are you expecting that to continue in the coming quarters as well?
So if you look at specifically from a healthcare perspective, it's kind of seasonal for us. And typically Q4 is a lot of member enrollments and happen. And Q3 and Q4 for us, that comes down. But the pipeline in healthcare is robust, and I think that's not something that there is a worry around that. As far as BFSI concerned, while we have the pipeline, while BFSI in Europe and BFSI in APME have done well, I think our specific challenge has been in Americas too, especially the two client issues that I talked to you about, Hiral.
Right. Srini, an interesting point that you make with regards to AI, and let me take that forward with Aparna. Are you seeing AI cannibalizing on legacy revenues over here, or are you expecting the volumes that will come in offset that AI cannibalization if it were to happen?
A lot of the deals that we are seeing in the pipeline are vendor consolidation, cost takeout led still. And clients are using this opportunity, looking at their existing work that's being delivered to say, how can we drive higher productivity, create that savings so as to be able to invest in AI. So the opportunities that AI will bring in terms of just reimagine AI and absolutely newer expansionary piece of work, we're starting to see early green shoots. But right now, I think what is a dominant trend is around vendor consolidation and cost takeout, which in itself is a significant opportunity. A lot of decision making continues to happen. Srini spoke about the pipeline we have, very good pipeline across markets and industry sectors. And, there is a huge opportunity at the moment. Will it come with its higher share of ask on productivity? Certainly. Does it also come with volume uptake and expansion? Yes. We've seen that like a mixed bag. In certain cases, these deals play out to timelines. Absolutely, the volumes then tend to compensate. But there could be those one-off deals where, we've had some delays in how those deals have, ramped up in terms of the volumes. So I would say that overall, it's right now not deflationary to be called out. Obviously, it's still early days, and we will have to wait for the opportunity around expansionary piece of AI to play out fully.
Okay, so Aparna, are you saying that AI as a tool that is improving productivity, or are you expecting some structural pressures to come in when it comes to overall pricing? Because probably the clients would shift, and what we are looking at and how this is affecting the revenue growth and pricing strategy is the key.
So a large portion of our business comes in FPP or fixed price programs where we do sign up for outcomes. They are in managed services mode. So this is in some sense a continuing trend into more business outcome led kind of pricing. So it's certainly something that is increasing as we look at what clients want to look at from a pricing outcome standpoint. Is it a tool for better productivity? Certainly. and it is a big lever, both in our existing scope of work. The delivery platforms that we have within Wipro Intelligence on Wings and Vega are taken to all the existing work that we do, and they are a very important component when we are looking at pricing in our newer renewals or newer work that we are looking to price. So certainly it's an opportunity. Our clients have always looked at productivity. AI then becomes a tool and a mechanism for us to be able to deliver that productivity. So it is an opportunity for us.
Okay, so AI becomes an opportunity from a business perspective, Aparna. But Saurabh, the question is, how does this actually change the way hiring is done? Is there a shift that you're seeing structurally in terms of strategy? And is AI reducing the manpower needs for a Wipro? Because the concern on the street is about more of employees worrying that AI will take their jobs.
So, two or three things are playing out. One is the revenue and headcount, that close relationship is obviously changing. We will see revenue growth happening with less headcount growth. I think that's for sure. We have seen that showing up in the bottom of our pyramid. Our campus intake over the last 3-4 years has been progressively coming down. We are not even calling out our plan for this year because we'll see how the demand is and then we'll take it forward. I think to allay the fears, it's more about reskilling and upskilling ourselves. Because in our industry, as Srini called out, there are robust pipeline opportunities. There is different areas of growth coming up. So if people reskill them, I think they will always have an opportunity to grow. And so the key will be for people today is to how do we upskill ourselves and reskill ourselves to be ready for tomorrow.
Important point that you mentioned about reskilling. So how does it work? Is it Wipro as an institute who is looking to reskill the employees that it has, or do you think it's going to be the employees who will have to learn to reskill themselves to meet the newer requirements, because there is a change happening?
We will create the platform. We are providing help. We have tied up with a lot of our partners, hyperscalers, to give train our people on all these areas. In different levels of competency, people are getting trained. As an organization, we will continue to invest to help our people to do that. I think ultimately, I personally believe that each individual owns their own career. So it is about each one of us coming up and reskilling ourselves. But the platform, the investment, the infrastructure, absolutely will be provided by the company for each of our colleagues to grow.
Okay, so that's with regards to where IT and hiring goes. Srini, if I have to take the AI conversation forward with you, the recent statement that we've heard from Goldman Sachs CEO David Solomon is that adoption when it comes to IT could be harder and slower than expected by what the street was looking at. But the markets have taken that commentary very positively. Now, if you have to look at AI and the adoption and execution, what is the reality versus what everyone is watching out for?
So, a few factors that are very important. The enterprises are going through this journey, and in fact, we are actually helping some of the enterprises on their AI strategy through our advisory and consulting. Because enterprises wanted to make sure that the AI that they're going to deploy is reliable, secure, ethical, and responsible, right? And it has to be within the guardrails. Our strategy has been build a Wipro Intelligence platform, which is within the guardrails, which is very safe and secure for our clients to adapt. Second, any projects that we are building with the clients, whether it's a software development lifecycle or a project which is around run and maintenance or change and transform, we are making sure that's AI first. What that means is that it gives you the productivity and it can shorten the software development lifecycle because coding and testing can be done by the AI tools. However, even with the tools, there will always be a human intervention. I think what is important for all of us is, like Saurabh said, is to upskill. We need to understand how to capture the business requirements. We need to make sure how we create the user user stories, working with the business teams, understanding their technology, and making sure deployment and production is also taken care. So to me, it's a huge opportunity. And the third point is, today, coding is not going away. Code is not going away. AI is generating more code. So there are opportunities to manage that code. There is opportunities to manage AI in the context of model building and operating those models, managing those models, data curation, bringing the data to implement AI. So all these, I would say, are opportunities for everyone who is in the IT industry. And like Saurabh said, everyone needs to be AI first in their approach. Everybody must take the opportunities, at least from a Wipro perspective. You've got so much of opportunities to upskill yourself. And to me, that is the continuous process. So I think if you ask me, I'm excited about AI. If you ask me, there will be a lot more new opportunities, but do we have the right skill sets to go after that opportunity? That's a big question.
Okay, that's a big question, though the stock right now is under pressure. Aparna, usually we look at buybacks that are announced to support what's happening in terms of stock prices as well. What is the strategy going to be? Prioritizing returning excess capital to shareholders over deploying capital for growth through acquisitions? How are you looking at it? And will the promoters also participate in the buyback?
It's very important to note that the buyback is coming in after 3 years, and the strategy is to return the excess cash. When we say excess cash, we've enough for us, and it supports all our ambition around investments that we would like to make on Wipro Intelligence, especially the newer Wipro Intelligence Platform unit that we've announced. We have enough that we invest through Wipro Ventures. There is enough for the M&A. We did one M&A, in Q3 on DTS Harman. We are also continuing to invest with our clients in terms of the large deal wins. We've made 2 announcements, in this month. So I think we have enough and more net cash on the balance sheet, even after we will complete this buyback. Don't forget, we continue to add operating cash flows as a percentage of net income is upwards of 100. It was 112% for last year. So that continues to remain robust. So we believe we have enough cash to support the ambition and needs of the company.
All right. So this is going to be interesting to see how and what pans out post the buyback. But thank you so much for joining in. Always a pleasure to speak to you. The key over here, Tamanna, Alex, Neeraj, is the buyback, because the way the stock price is right now, we are seeing pressure. But will the buyback come to the rescue is going to be the key from here on.
100%. Thank you for that, Hiral. In fact, I'm going across to Sumit Sarkar on this question. Also with the point that the excitement about the buyback announcement lasted fairly for a short time. Sumit, what is the math on whether the buyback is useful or not?
Well, the buyback amount, that is 15,000 crore. Yes, it is the largest ever, and this is the 6th buyback that the company is doing. Price is set at 250 rupees, which was at a premium of nearly 19% compared to yesterday's closing price. Now this premium must have increased. The buyback size is 60 crore. 5.7% of the equity. Now, this is not the largest ever equity that they're buying back. In 2017, they bought back close to 7.1% of the equity. Now, the key question here, what's in it for the retail shareholders? 15% of this buyback amount is reserved for retail shareholders. That is close to 9 crore shares. And retail shareholders are those who own less than 2 lakh rupees of shares worth in Wipro. Now, in case of Wipro, assuming that the share price is at around 211, anyone who owns approximately 950 or less number of shares is a retail shareholder and will be eligible in this criteria, that is the retail criteria of buyback. Now, what could be the gains for the retail shareholders? Now, gains will completely depend on what the acceptance ratio is. And what acceptance ratio is, it depends on how many shares actually the company is buying back from you. Now, this acceptance ratio will completely depend on what kind of response retail shareholders are giving. And in the past, if you look at the acceptance ratio have been in the range of around 53 to 100%, which means that if you're applying for 100 shares, if the acceptance ratio ratio is 100, that means all the shares is something that the company will be buying back. And if the acceptance ratio is 53, then the company will buy back just 53 shares out of the 100 shares that you have applied. As I was mentioning, the acceptance ratio in the past has been in the range of around 53 to 100% that we have seen over 2016 to 2023. But if you look at the current shareholding pattern, given the fact that this buyback is happening at a premium, if all the retail shareholders decide to give their shares for this buyback, then the acceptance ratio could be as low as 25%. So what could be the gains? If acceptance ratio is as low as 25%, then the gains would be just 4.8%. If the acceptance ratio is 50%, then the gains would be 9.5. At 75, 14.3. And if the acceptance ratio is 100%, then the gains would be around 19%. But this is again assuming that the cost price is 211 rupees per share. But do remember that the company is yet to announce the record date for IPO, and investors usually for short-term gains prefer to buy company shares for the buyback near to the record date. And lastly, we are also giving you the share price performance after the buyback that we have seen. In case of Wipro in 2016, it was largely muted, not much of gains. In 2017 was a good year after the buyback announcement. We have seen solid gains coming in the share price of Wipro. 2019, again, a muted year. 2020, it was mixed. Only 3 months post, we have seen a good comeback. And in 2023 also, post the buyback, the share price performance was largely stable. 3 months gains were around 10%, 1 month gain was 8%, and 1 week gain was close to around 5%.
Okay, thank you for that, Sumit. Let's take a look at the stock price and what else is happening in the markets before we take a very short break. Wipro still sulking, about 3% down, but the broader markets have shown a better recovery than we had seen. Even the Nifty about 0.25% up right now, and the Nifty mid-cap 150 also rising about 1%. We'll pull up small cap before we get into that break. That's about 1% up this morning at this point. Very short break. We're coming back with a big conversation this morning. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated-listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna. Welcome back. You're watching India Market Open. Mark Matthews, Head of Research Asia, Julius Baer, with us this morning. Mark, welcome. And thank you for your time to us. We always enjoy our conversations. Things are looking up since we spoke last, isn't it? Is there a sense that fatigue has set in the war, and whatever we see from here, even though it might not be a complete solution immediately, will definitely be better than the last couple of weeks? Is that a sense that you're getting as well?
It is, and if the S&P can go to a new high in the middle of a war, then I think that tells you it's not going down. And the war is relevant and important, of course, but I think what is really taking the market higher is the earnings. And we have started the first quarter earnings season in America. 32 companies have reported so far, and their earnings growth is up 30% year on year. Now, of course, the whole S&P won't be like that. I don't think there's any way we can expect 30% earnings growth for all of the other companies that have yet to report. But still, even if we come in line with expectations, which are 13% for the entire 500 stocks in the S&P, it's very strong growth by any measure. The average over the last 100 years is around 8%. So that's taking the market up. And then with the conflict in the Middle East, I think there's a good chance we could get a ceasefire. Even if we don't, my sense is we'll probably evolve into a stalemate. And the trajectory for oil prices should continue to go down.
Mark, morning. I'm just wondering whether the earnings for the previous quarter may not tell the whole story, because a lot of these companies will face input cost pressures with a lag, which will start playing out in the first quarter and in the second, because there is damage to infrastructure and there is a shock to supply chains. So do you see a situation where heading further into 2026, some of these problems will come home to roost?
So far, the companies that have reported their first quarter results really didn't have much to say about the war and the impact on their business, surprisingly. I think the only one was PepsiCo. PepsiCo said they're seeing some changes in consumer behavior because of higher prices. But really, if the trajectory is for lower in oil prices over the next few months and into next year, then this is a transitory thing and it won't have any long-term impact. So of course, wars are horrible things and naturally and rightly get a lot of media attention. But if you look back in history, most of them don't cause recessions, and most of them actually don't cause the stock market to go down. I don't see why this one should be any different.
Mark, good morning or good afternoon to you, of course, Neeraj here. The last 48 hours, there has been a lot of pointing out of the severity of underperformance that India has had. Now, I buy your argument that eventually earnings growth will decide. But in September 2024, if the world could see no wrong in India, currently with that over 110% underperformance over KOSPI, is the corrective move also overdone? And would just the normalization of this curve mean some gains, even if the earnings growth comes in a bit later?
Yes, I think India deserves to be re-rated to the upside, and I believe that is happening now. It started, it will continue. I've seen several statistics to look at where India was previously at the sort of levels it's at now in terms of its 200-day moving average or its price earnings ratio or its various other valuations, but I'll just give you one, which is that in the last 20 years, there were only 2 other times that the Nifty's price to book ratio reached 0.6 times that of the S&P. And by the way, there was a third time, it just happened 2 weeks ago. So 3 times in the last 20 years. But those 2 previous times, the Nifty was much stronger over the next 12 months. So it has been oversold. If you look at the shares outstanding in the iShares India ETF in New York, which is the largest India ETF outside of India, they're down about 30%. So obviously there was a massive, and that's from February 27, the day before the Iran war started. So there was a big liquidation event. People selling India because geographically it's right next to the Middle East, and obviously it's extremely sensitive to the oil price because India has to import most of the energy that it consumes, and most of that comes from the Middle East. So there have been anecdotes about shortages of LPG canisters and restaurant closures and things like that that feed into this narrative. But I don't think that the destruction of infrastructure in the Persian Gulf was nearly as widespread or permanent as it appears to be. Can come on quite quickly. There's only one major facility, frankly, in Qatar that was put out of action, but I don't think that'll be for very long. So, long story short, I think India should re-rate. It should be the best market to be in if you think that the situation in the Middle East is going to calm down. Because it went down even more than Dubai, I might add. That doesn't make any sense to me. It was the worst performing market in the world since February 27.
You know, Mark, I think you've touched a raw nerve. This is something that we've discussed very often, that India has, in that sense, not a participant in the war or the strife or the conflict at all, but has gotten beaten down from all ends, even more than countries which were in the thick of it. Do you think that there are underlying question marks that foreign investors have on India, apart from this temporary or current pain point on energy supplies?
Well, if we rewind the clock to when the market peaked, which was in 2024, correct me if I'm wrong, I don't remember.
Yeah.
But it was valuations. People felt that India was too expensive. And now that the price earnings ratio is back in the teens, I don't think it is expensive. The other thing, though, is that I'd say from approximately 10 years ago, foreign investors basically gave up on emerging markets. They're just too small, time-consuming. They didn't like what was happening in China with the heavy state control of the economy. Around 2015, we saw that starting to happen. But there was one exception. There was one bright, shining star in the emerging market asset class that's big and liquid and had good growth, and it was India. So they owned India in size. And I think that when they decided they wanted to get back into China, it was the market they sold, because they didn't own any other emerging markets. That's all water under the bridge. And I think now that we've largely traded sideways over the last couple of years, earnings picture looks good to me this year in India. Stock market price earnings ratio is in the teens. I think it's absolutely fine.
Like within that basket, Mark, when you look at India as maybe turning favorable, and we were just getting some data up, while key markets have recovered from pre-war lows, India's done about 60% from pre-war lows. So by that rough calculation, 40% more to go. But what are the areas that you see are convincing?
You know, honestly, I apologize. I haven't really been doing much granular research in the stock market in India on sectors. I apologize. I don't feel that I'm the right person to answer that question. But of course, with the banks having underperformed, and they're still the heart of the economy, and there's well-run banks, and I think the HDFC saga probably also led to some of their underperformance. That's always been a place that I like.
Yeah, on that note, Mark, always a pleasure speaking with you, and thanks so much for taking the time. All right, on to an exclusive story now, and my colleague Shrimi Chaudhary is getting details about the much-awaited NSE IPO. Shrimi is joining us to tell us about what she's picked up, and something about the timeline perhaps. Shrimi, what's the latest here?
Yeah, so the government has started reaching out to, public sector undertaking PSU to participate in the proposed OFS of NSE. And this comes just days ahead of the exchange's request to propose a deadline on April 27th. Sources tell us that most PSU shareholders are now in process of submitting their plans to dilute stake as part of the upcoming IPO. And this is important because there are some, talks around that whether there is a weak sort of response coming from shareholder, but that's not the case. People close to the development telling us is that it's on track, and in fact, exchange is likely looking at a dilution of around 4 and 4.5%. In fact, DRHP is expected to be filed by end of June, and just for the context that there is also a regulatory baseline in play here. The SEBI requires at least 2.5% dilution for IPO larger than 10,000 crore of IPO. So that's signal a bigger float, of course, from the NSE side. And PSU hold a chunky stake in NSE, about 31% in total. So their participation is, of course, critical to how this IPO shapes up. And followed by LIC, which owns start with the LIC, which owns 10.72%, and followed by Stock Holding Corporation, 4.44%, SBI Capital Market, 4.33%, and State Bank of India, 3.23%. So, of course, if PSU sell meaningfully, the IPO gets depth. And if they hold back, which is not the case, what we are learning at this point, it limits the size. Back to you.
All right, yeah, absolutely. Important update that you're picking up, Shrimi. Thanks so much for that. Guys, we're nearing the end to India Market Open, but it is Friday, and you know what that means. Neeraj, you're treating us to something in the evening?
Sure. How about 4 p.m.?
I don't know which parallel universe that ever happened in.
No, I'm talking about the editor's cut, which happens at 3:30. And I'm excited to hear what these guys have to say, and certainly what our guest today, Hiren Ved, has to say about the current dynamics. And he's a keen student on even the fixed income space, on bonds as well. So it'll be interesting to find out what he has to say about all of that and more. We're down to the last seconds of this particular show though, but then we've got lots lined up, starting with Ask Profit. That is up next. Thanks so much for watching. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vachhrajani, and it's a decent Friday session to say the least. When you pull up the markets, it's been a good week above the 24,000 number and continues to be one where we are now comfortably in the green. So the implied open indicated a mild start in red. Now up 86 points, 24,280 at this point of time. Now closing in on 24,300, but even if you're able to maintain and end this week about 24,200, we'll take it with both hands at this point of time. The heat map shows you a similar perspective. In terms of stocks, you've seen the Nifty metal and auto names continue to help the markets, and today, surprisingly though, the biggest gainer for the Nifty 50 is HUL. It's up 4.9%, has been a key laggard over the last 5 years, something that you might have heard Mahima talk about. Tata Consumer, ITC, Trent, all of those in the top 5. So you're seeing the consumption pack continuing to be back in focus now. So is Maruti Suzuki as the top 2 gainer, at least for today. You're also seeing Nestle seeing some buying, and so is Apollo Hospitals and Kotak Mahindra Bank. But largely, almost 35 to 36 stocks are right now in the green, and it's positive, while IT is largely divided. TCS is in the green, but Infosys is in the red at this point in time, and so is Wipro and HDFC Life, both reacting to earnings. In terms of the sectorial impact though, let's pull that up, because you've seen the names in the Nifty FMCG dominate the Nifty 50, and that is visible here as well. MNC, media, energy are some of the other ones that are gaining, while IT is down by 0.16% at this point in time. But the advanced decline ratio is the other key factor. Now, it's been a good day over the last 2 days for the broader markets. They've been outperforming the benchmarks, and today again, almost a 4:1 kind of gain for the advances, and that has built through. So over the last 1 hour or so, there is historical evidence that the broader markets are favorers of the advances, and Mahima, that's visible in the mid cap and the small cap performance also at this point of time.
Yeah, absolutely. I mean, if you can try to pull up the mid cap and the small cap 250 doing better than the benchmarks. The mid cap 150 is up around 0.8 odd percent, and small cap 250 is seeing gains about almost 1%. Slightly off from today's high point, but still trading with an uptick of around 160 points for the small cap 250. Let's try to put up the BSE 500 to see as to what are the counters that are buzzing in trade right now. You have MMTC topping that chart, up 14%, followed by VST Industries on the back of numbers coming in. The Q4 numbers were not exactly comparable because of GST and excise duty uptake and the cess relief. But in terms of overall growth, in terms of volumes, that's where I think the positivity in the stock is coming in from. GSPL, Ircon are some of the other names. Gujarat Gas, they're seeing an uptick in that range of 6 to 13 odd percent. But on the flip side, you have HDFC Life on the back of numbers, Wipro on the back of numbers as well, and Eureka Forbes and Kalyan Jewellers, some of the counters that have seen a downtick of around 2 to 3% each. But let's start taking your stock-related questions, and we are now joined by Sameer Dalal of Natrulal and Sons Stockbrokers, and Somil Mehta, Head Alternate Research at Mirae Asset Share Khan, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start up by taking our first caller for the day. Pradeep is calling us from Vishakhapatnam. Pradeep, a very good morning to you. What's your query about?
Yeah, very good morning, and thanks for taking the query. It is regarding Geo Financial. Is it the right time to enter into the stock right now?
Pradeep,
I'm looking for 3 to 6 months.
3 to 6 months. Okay, all right. Pradeep, got your question. I'll take this up with Somil then. Somil, a very good morning to you. Your view on Geo Financial?
The Geo Financial at the moment has been consolidating about 20 daily moving average. It has broken out of an ending diagonal pattern on the daily charts, which is a good sign at this point of time. Now, I would suggest keep a very, very strict stop loss around 235 because it has not given us a confirmation on the breakout. So keep a stop loss around 235, very strict one. Once it breaks out above 245, 246 levels, I think the next target would be 260 and 265. So these are my two targets for Jio Financials.
Got that view, Saumil, and welcome to the show. The next question coming in is from Kaushik from Baroda itself. Now, his question is on Bajaj Housing Finance. He's bought shares at elevated levels of 136, asking what he should do with the 74 shares. Now, Samir, good morning and welcome to the show. How are you viewing this counter? Now it's seen a revival post touching that 75 mark, but is it still a case that is enough to average down at this point of time from 136 level or that Kaushik is bought into?
Good morning, Puneet, and good morning to your viewers. So, my view on Bajaj Finance for some time has been that this is one of the most expensive on valuation basis housing finance company, right? It's just getting this premium because of the Bajaj brand name and because the other two Bajaj financing companies, I won't say finance, but Bajaj Finserv and Bajaj Finance have done so well. So everyone's expectation was Bajaj Housing Finance will kind of replicate that. But you got to realize that this is a highly competitive space. Margins are not as great. Yes, Bajaj Housing is doing a differentiated model where they're doing a lot of lending to businesses that buy properties and rent them out. So it's the corporate side lending and not purely on the consumer, the person buying a house for his personal stay. So that part of the business does earn them a slightly better return. But if you compare valuations across the board, with it being high, for me, this stock is going to be a market performer at best. And if you compare it to the rest of the housing finance industry where valuations are cheaper, I think it'll underperform over the next maybe 2 years. So for me, buy something like a LIC Housing Finance, which is a high dividend paying company, or a Sammaan Capital, which is, well, Sammaan is now diversifying, but it used to be a housing finance company. Those would be where valuation comforts are there and growth opportunities will also ensure that these companies do better than a Bajaj Housing Finance.
Okay, so that's the view coming in on Sammaan Capital. We've got Pushkar calling us from Delhi. Pushkar, a very good morning to you. What's your question about?
Yes, I am holding NetWeb Technologies 113 shares at 2315. I have a horizon of 2 years. Should I book some profit and wait for lower levels or continue to buy more?
Okay, got your question. I think we've got one more question coming in on this particular counter from a long-term perspective. Our viewer who's bought it, I think it's the same query. I think you've sent the same query on WhatsApp also, I believe. Okay, so Pushkar, taking your question with Samir then. Samir is sitting on a profit of around 1.7 lakh rupees already on this one. What should he do?
We don't have active coverage on this counter, but I have studied it. So what I can say is the valuations are a bit rich. But given the fact that they're focusing on the data center space, I honestly don't know how the revenues are really. Why we've not taken it under active coverages, I'm not able to understand how we are going to be able to generate the higher revenue because competition in the space is going to increase, right? So from that perspective, I had a worry and which we not covered. But the business model that they're in is doing well. That is a growth engine, but valuations are a little high. So should he book a little profit? It wouldn't hurt to take a little profit off the table. Maybe you can review it maybe 6 months down the line. And if you get it closer to 3,000 levels, you could probably add back.
Got that view, Samir, but definitely Pushkar bought it at a decent price. So good on you, Pushkar, for that. Next question is on Vari Energies. Now a viewer, Sri Kumar from Hyderabad, wants a 6-month horizon on this sawmill. Is it a good time to buy is what his question is.
Vari Energy has just broken out of a triangle pattern. It has moved very sharply in the last couple of months from the lows of around 2,500 levels. Now, my next next target would be 3,700, which is the previous swing high, and then 3,865. So I'm bullish on this. However, I do not, suggest to buy fresh at this point of time. If you have a position, hold on to it for a target of 3,700.
Okay, the next one is coming in from Ansh, who's writing us from Australia, asking about Valor Estate. He says that his buying prices at 178 and 1700 shares is what he's bought. Wants a 6 months view on this particular counter. Soumil, I'll stick with you for this one. Do you think he should continue holding what he's holding, or should he add more at the current levels?
You're talking about Valor Estate, right?
Correct. And he's sitting on a loss of over ₹1,00,000 now.
Okay. So this one, it is still in the downtrend. So I would not say that it's still given us a reversal. However, it has taken support around 82 levels, which is very crucial. And I think those levels are very important for the stock from going forward. Now, if you already have a position, then I think you can keep a stop loss around 96, which is the previous swing low, and you can hold on to the position, because in the very short term, I can see the positive momentum for the stock, and my targets would be around 135, 136 level, which is the previous swing high. So short term positive, but we haven't got a reversal pattern on the medium term outlook. So short term positive for target of 135.
Got that view. But the next question coming in now, it's an interesting one, Samir, coming towards you on Siemens. Now, Balasubramaniam from Bengaluru actually holds shares at 3965. He bought it in August 2024. And he has been in a loss for a little while now. So his question largely is, should he add more at the current levels, or is it advisable to dispose of and move out to some other counter? What would be your view?
So, if he's bought it in 2024, 39 something, whatever, it was probably pre the split of Siemens and Siemens Energy. So he probably is sitting on a lot of profit, because Siemens Energy is also trading at about close to 2,800 rupees. So if you add up the value of the two, because you got a 1:1, he's sitting on a huge profit, right? Unless he's adjusted that price and given that to us, then then it's a different story. But Siemens as a business model, I've been saying for a while that we've been very, very positive. The kind of orders that they're getting from the railway industry has also been extremely strong. The execution of that is going to start happening. The electronics division is continuing to do well. The opportunity is very good. Yes, the stock, if you add the combined values, is down from about 8,200 to about, I think it will come to about 6,200. So it is down. But again, the correction was a change in valuation multiples. And even after that correction, the valuation multiple still remains a little bit on the elevated side. But because Siemens promoter owns 75%, and there are a lot of shareholders who refuse to hand over the stock to anybody else. I mean, they want to hold on. The free float is kind of limited, and the stock keeps trading at these high valuations. So given what I'm trying to say is that if you're holding it from those levels, hold on, because you're making good money. I think the stock has room to move to 4,000 in the next 1 year. So you're talking of about 10% more from here.
Okay, all right. So that's the view coming in on Siemens, but Waaree Renewable remains in focus on the back of its Q4 numbers, and strong uptick coming on the counter as well. 12%, almost at its day's high point as we speak. Top line growth of 131%. Margins, however, did see a drop coming in, but EBITDA overall. The margins saw a drop in the last 3 quarters, but this time the EBITDA margins have improved by around 10 basis points. Overall, net profit has also seen an uptick of around 66% right now. The unexecuted order book stands at around 2.83 gigawatt, and the wins span largely in terms of utility scale solar projects across multiple states, and provides it a multi-year revenue visibility as well. Plus, in terms of energy transition opportunity, also India is targeting a 280 gigawatt solar capacity by 2030, and this is one of the counter that benefits the most out of it. In fact, we spoke to my colleague Varsha spoke to the management as well when it comes to the Q4 numbers. Varsha spoke to Manmohan Sharma, the Chief Financial Officer, to understand as to what's the outlook for the company going forward. Listen to that conversation.
We are here joined by Mr. Manmohan Sharma, who is Chief Financial Officer at the company. Well, Mr. Sharma, welcome at NDTV Profit. Always pleasure to have you. And congratulations on a very strong set of numbers. Now, considering FY26, you have doubled your revenue, more than doubled your revenue over FY25. How is growth looking for FY27? Will you be able to, sustain this kind of high growth that you have seen in FY26 over 25?
So if you see, thank you so much for having me on show. First of all, if you have seen from the past years or maybe quarters that we have doubled our revenue, and the EBITDA is also gone up significantly, improved. And the margins from the last financial year to this financial, we are able to keep the intact same kind of margin. So to answer your question for the future also, if they looking at the past trend and the capability of our company to scale up our operation, not from megawatt to gigawatt scale of operation, we are able to achieve this kind of revenue and able to attain this kind of margins. Going forward also, we are very hopeful that we will continue to get orders in all geography, maybe other international location also. We are actively looking to participate any kind of opportunity in the international market also. And domestically, we are actively participating in bilateral discussion with the customer along with this tender business, whatever tenders live coming out there. That also we are looking very actively so that we are hopeful that we should be doing good going forward as well.
Okay, and sir, if you could, give us a ballpark range, if possible, when it comes to financial numbers. I would say revenue growth in FY27. If you could help us with that.
So we are not giving any kind of guidance that you are aware of. So definitely, but looking at the unexecuted order book as of now, which we carry as of 31st March 26, and that is likely to be executed over the next few quarters or maybe coming years. Along with that, we are hopeful to get orders also in the coming quarter. So that also will go into execution during the financial year.
Right. Got that view. Understood. Sir, considering your order book, what is the target or how is the order pipeline or order bidding is looking like? By FY27, by end of FY27, what is the target of order book that you are expecting? I just wanted to understand the order pipeline.
So as of now, we are following around 36 gigawatt of order pipeline. So that includes around 12 gigawatt from the international market as well as. So for the domestically, if I bifurcate, we are actively looking for the tender business as well as bilateral contracts. So all these put together, we are actively pursuing all kind of order book which we can book during the current financial year. And if you see that entire country, if you see the country has gone up, installed 274 gigawatt of renewable energy. Out of that, 150 plus is coming from the solar only. This year we have doubled our, from the 24 gigawatt, we have done 44 gigawatt almost. So we are out of that kitty we should be getting and this good amount of revenue in the next coming quarter or maybe years.
Well, that was the management of Waaree Renewable talking about the order bidding pipeline amongst other key factors. Stocks zooming up in trade today, up 11.7%. Actually, we also had a question on that because one of our viewers had bought it at 1,000 rupees per share and wanted to hold for a very short term though. But Saumil, let me come to you on the charts. Is there a momentum sustained from these levels as well? What would you recommend?
Just give me a second.
Yeah. This is Abhishek, who's bought roughly 100 shares here, bought at 1,000. Yeah, Saumil, go ahead.
So this stock has very less data points. However, in the very short term, very sharp run up. There's no doubt about it. The momentum is very strong, but I would not suggest to buy fresh. The next target for this stock is around 1,300. I think it is achievable, but no fresh buying at this point of time because I'll be expecting it to cool off a little bit, take a pause and then again start a new move up. But in the very short term, 1,300 would be my final target and it is achievable.
Okay. All right. It's time to look at the F&O space and we have Sharad joining by to give us a perspective on how cues are shaping up. Sharad, over to you.
Well, largely we are seeing a little bit of consolidation is at play, and of course it's advisable to have a lighter positions as we go into the weekend. But net there is a good strength coming, especially in the consumption names, tobacco related stocks. Mahima had pointed out earlier, even HUL, Maruti and Adani group of stocks are doing well in the trade. No major deep gashes, to be honest, coming in except for HCL Tech and Titan. These stocks are also down by just 1% But you expect most of the large caps to be in a range-bound manner in the day's trade today, as we are waiting important announcement, especially on the ceasefire front. Looking at the BankX also, this is the structure coming in, but long build-up definitely there in certain rail stocks. RVNL and Colgate makes it to the list. The stock is up 7%, so we will be getting you more research on that. And short covering is definitely there for United Spirits and Angel One. The capital market theme, select buying is still continuing, and there's a good strength in the technical charts as well. Let's pull out long unwinding candidates. Nothing much to talk about here, and no major trade can be made also out of this. And lastly, I'd like to point out the key short build-up which is happening. It's definitely happening on Wipro and HDFC Life on back of largely on the earnings impact. So yes, earnings impact is something which we go into, and remember, larger banks are also coming out with their earnings, so they will be volatile, especially in this Saturday. These numbers are coming out.
Got that view. Thanks so much for that, Sharad. But let me go across, take the next query on Hindustan Zinc. Our viewer has bought it at 663 odd rupees. Now, Samir, the metal pack actually got revived, right? Post what we've seen of the Israel-Iran war. What's your view on this whole pack, and do you feel that Hindustan Zinc is one of those names that could see that momentum continue for the next 1 to 2 years?
So 1 to 2 years momentum, probably not. I think it'll end sooner rather than later. Whenever we see a situation, I've been saying this for some time now, on commodities, that whenever we see a cycle like this happening where prices shoot up in such a reason because of supply side shocks, once the supply starts resuming, then commodity prices come off very quickly. And then what happens is companies like Hindustan Zinc, who are fully vertically integrated all the way from the mining to the finished product, when the prices come off, they stand to be the biggest losers. Similarly, they are the biggest gainers on the way up. Secondly, silver prices have run up a lot, and Hindustan Zinc, actually, I was going through their annual report, and they do a bit of hedging on silver. So some of the silver probably has been hedged at lower levels, so they're not going to get the full benefit of all this upside that has happened. So, they might have some mark-to-mark losses on the F&O side, not on the commodity side, from the simple reason that they've hedged their position. So those two reasons make me believe that, the profit expected to rise is not going to be as good. And from given where the valuations stand, I think at this point of time, I would avoid the stock.
Okay, all right. So that's the view coming in on Hindustan Zinc. We've got Vikram calling us from Noida. Vikram, a very good morning to you. What's your query about?
Hi team. So I bought RPSG Venture at a price of 1140.
Okay.
So what is one month, 2 month, and 3 month view on this?
Okay, Vikram, got your question. I'll take this up with Somit. Somit, this counter has seen an uptick of almost 60% in the last 1 month. This is on the back of the news flow coming in when RCB got valued at around 33 times, and on the back of that, the Lucknow Giants that they own was valued at around 18,000 crore, right? On the back of that, we've seen a significant amount of momentum in this counter. But do you think that the momentum is here to stay? Because since the past 2 or 3 odd days, the stock has not been doing much.
Apologies. What was the counter name?
RPSG Ventures. It's a small company though, but he's bought at probably the highest levels, and right now it's trading at around 969. 1140 is his buying price.
It has given us a very good momentum, breaking above some very crucial levels, trading above long-term and short-term averages, which is great. Right now it is consolidating. I think it requires a little cool off because it moved from 550 to 1080, which is a great move within a couple of months. Now this cool off period probably takes some time, probably a couple of months, taking support around probably 850, 800 levels, where 200 daily moving averages. So I think buy on decline should be the strategy at this point of time. I'm not expecting this to shoot up from here itself, so I'll be expecting a little bit of a correction, and then again move on the upside should start.
got the view, Somil. So Vikram's not happy with the stock. Somil's not happy with the stock. Nor are the team owners, nor is Rishabh Pant. It's been a weak outlook for LSG, at least at this point of time, both stock-wise and team-wise. But let's go across and start the first round of the rapid fire in this edition of Fast Profits. Samir as well as Somil, you know the drill. The first question coming in on MRPL. Sushila has bought it at 179. Somil, any view on the stock now?
MRPL hold. My view is positive.
Okay, the next one is on Engineers India. This is from Ashok, who's writing us from Andhra Pradesh. Continue to hold or book my profits. He's got 1,000 shares at the levels of 200. Short-term perspective, Somil? Engineers India is the counter. The stock is up 6% as we speak today. Any view, Somil?
Just give me a second.
Sure.
Okay, yeah, positive, and my view is positive. Hold on to it.
Keystone Realtors, Rustamji, Samir bought by a viewer, Mr. Rao. He wants to know if he should add more. He's bought it at 480. Is it a good time to average?
Yeah, I think he can average some more. Long-term prospects are good. Sales are good. Cash flow will come.
Canara Bank is the other one. Arvind from Mumbai has bought 2,000 shares at the levels of 161. By the end of 2026, can I continue to hold? And from a long-term perspective, can the stock go to almost 460 by FY28 is what he's saying. Samir, any view on Canara Bank?
Positive on the counter. 460, no.
Orinpro Solutions, Samir, do you track this counter? Any view here for Gopika for the next couple of years?
Sorry, this one I don't track.
Any view on the charts here, Somil?
I would hold on to this stock. View would be positive.
Okay, Jyoti Labs is the other one. Vijay Kirti from Chennai is holding 50 shares at the levels of 352. Wants to know whether she can average, hold or book losses right now. Somil, what would you recommend on the charts?
Jyoti Labs, hold on to it. View would be positive. My target should be around 280 levels.
Cartrade Trek bought by Bharat at 1750. Samir, should he continue to hold this counter, add more?
So at the moment, it's a hold at this price. I think long term is good, but over the next 1 year, I'm not expecting any major upset.
Okay, Oracle bought at the levels of 6645. From long-term perspective, can I accumulate more at this price? Samir, any view?
No, don't accumulate at this price. Valuation is too high.
Yeah.
Gujarat Gas bought at 555 by a viewer Bhaskar. Somil, should he still continue to hold this counter?
See, in the short term, yes. In the medium term, I'm not looking for, a reversal here. So short term, yes. Probably the target should be around 400.
Okay, Gillette India is the next one. Our viewer V Murli from Bengaluru is holding 50 shares at the levels of 7734. Can he continue to hold or move to other counters? Somil, your view on the charts?
View positive, hold on.
HEG bought by a viewer at 631. This is Sunil from Pune. A view here, Somil.
He's talking about HEG, right?
Yes.
Yes, positive, absolutely positive in the medium term, long term, both.
Got it. Well, Samir also approves this particular stock, but that's the end of the first round of the rapid fire. Somil, thanks so much for joining in, giving us your views over the last half an hour or so. Samir, stay with us. A lot more stock related queries on the other side after this very short break.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल बनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, and if you haven't already, do start sending in your queries to us on WhatsApp. You can also call us, speak to us, as well as our guests directly as well on the number flashing on the top of your screen. We still have Samir with us on the fundamentals. Then we welcome in Rajesh Bhosle, equity, technical and derivative analyst at Angel One. Rajesh, good morning. Welcome to the show. Let me pose the first question to you. This is from Rajesh Maheshwari from Indore, who is a regular viewer. He wants a view on Allied Blenders. He's holding roughly 400 shares bought at 519. What's the view on the stock now, Rajesh? Should he continue to hold or exit at this juncture and book the profit?
Yeah, well, good morning. And if we see the chart structure of Allied Blenders, I mean, in the last 1 month, the stock has already rallied from the levels of 400 to 570, and the chart structure remains positive. We are seeing a saucer pattern breakout on the daily chart. Possibly the stock can head back towards 650 to 680 levels. So hold on to it. Fresh breakout is there. 540 to 550 seems to be a strong support, and the prices can move towards 640 to 670 levels.
Got the view, Rajesh. The next question coming in on Hindustan Aeronautics, 189 shares bought at 4082 by Vijay from Dubai. And he wants a long-term outlook now, Samir. We saw that news flow yesterday, 414 engines also being looked at now after the MOU signed back a couple of years ago. What's your view on HAL now? Is it because it has seen some run-up from the lows, but a view on the stock for someone who's already holding it?
So for the one who's already holding and he's bought it at a half decent price of 4,000, right? I'm not saying it's a very good price. Ideally, I would have liked to say 3,200 or is the fair price to buy the stock if you want to make decent returns. But look, the long term continues to remain positive. It's just that we feel that this stock is going to go into a consolidation for an even longer period. You've already seen, I think, maybe a 2-year consolidation after the stock made a high of 5,500 about 2 years ago. We think that is going to probably extend for a longer period of time. You're going to see another year where the stock is going to be very range bound. But if you have a 3-year horizon, yes, you will get upside, but expect muted returns of anywhere between 10 to 12% because of your purchase price of 4,000.
Okay, all right. So that's the view coming in on HAL. I think we have one more question coming in on defense counter. Mohan is calling us from Bengaluru, who I think has a question on MTAR Tech. Mohan, what's your query about?
I just bought 10 shares of MTAR at the rate of 1,600. I just want to know whether can I add the shares for long-term horizon?
Okay, got it, Mohan. I'll stick with Samir for this one as well. Samir, yesterday also we spoke to the management and kind of wanted to figure out as to how this entire Bloom Oracle partnership benefits the company as well. What's your view from a long-term perspective for this one? Because it's going to definitely boost its order book going forward and revenue visibility as well. But working capital is going to be an issue in the short term.
Yeah, Mahima, this is unfortunately one of the stocks that we've also missed out on. It's done fantastically well. It's just that we don't have active coverage, and I don't want to comment because I haven't even seen what it's trading at on value multiples or what the growth factors are.
Okay, then Rajesh, I'll come to you on this one. Any view on the charts for MTAR Tech?
Overall, the chart structure remains positive. We have already seen a sharp rally. But overall, heart of our bottom structure is there. possibly the reciprocal targets could be around 5,400 to 5,500 level. So hold on to it. On the downside, if we see somewhere around 4,500, there is a strong support for the entire.
Godfrey Phillips is the other counter. Rajesh, sticking with you on this one because G1 actually has a stock query, a short-term outlook on this counter. Now, it's been a very, very active stock, Rajesh, this week across the FNO setup. Any view on the stock now?
So on the short term, if we see after a long time, prices are breaking above the 89 EMA. And also we are seeing a fresh range breakout. So in the near term, further upside can be expected. The recent swing high of around 2,600 can be tested. So there is a base formation. So hold on to it. On the downside, if we see 1980 to 1970 seems to be a strong support. So hold on to it. Chart structure looks positive.
Got the view, Rajesh. But another caller now from Gurugram, and Manav has a stock query for us. Manav, good morning. Welcome to the show. What's your query?
Hi, good morning to everyone. So today I have a query on Amara Raja. So I've been holding on to these odd 15 shares at an average price of 1125 for more than a year or so, like 14-15 months. So the stock was down for quite some time, but for the past 7-8 odd sessions, the stock has moved from 720 odd levels to the current price of around 780. So I would like to get the experts' view. Like, should I, look out for this opportunity to, to get out of this stock, or should I hold on to it?
Got it, Manav. Let me go across to Rajesh then, because fair point that you've been holding it on for some more time and want to get out now. On Amara Raja, Rajesh, what's your view on the stock now? Maybe in the near term and a little more longer time frame, is there a chance of Manav's stock price coming back?
So for now, I would suggest him to hold on to it because what we are seeing, it's based on a strong support. Similarly, during the 2024 March month, there was a rally from this level. From there, prices moved all the way towards the 1600 levels with strong volumes. Prices are now retesting those levels, and some reversal definitely is there. So not much outperformance, but definitely some bounce back is expected in the near term, possibly towards 950 to 980 level. So hold on to it. When it comes around 950 to 980, we need to recheck charts around those levels.
All right, so that's view coming on Amara Raja. The next one is on BHEL, and this is from a short-term perspective. Our viewers holding 1,000 shares bought at the levels of 293. Exit or hold, Rajesh?
Hold on to it. Already strong performance in the last couple of weeks. But what we are saying is it's trading at the calendar year high and a fresh range breakout is there. So expecting a further outperformance possibly towards 330 to 340 levels. So hold on to it, one of the outperforming counters.
Okay. Sandeep is calling us from Bengaluru. Sandeep, a very good morning to you. What's your query about?
Hi, Mahima. Hi, Puneet. Good morning. Thanks for everything you do, helping us to invest stocks. Just a very quick question. I have bought 2,200 shares of Indian Bank just a couple days back.
Okay.
So I want to understand a 3-month time frame view.
Okay, got it. Sandeep, thank you so much for your kind words. I'll take this up with Rajesh then. Rajesh, your view on Indian Bank for the next 3 months?
So we are very, very bullish on the PSU banks and especially on the Indian Bank. The stock prices are in a consolidation mode, but somewhere around 870, 880, we see a strong base. On the high side, first immediate resistance is around 1,000 levels. When that is crossed, we can expect a move towards 1,300 to 1,350 levels. So as of now, the stock is consolidating with a positive bias. So hold on to it with a medium-term kind of view.
The view, Rajesh. But the next question coming in from Jeet from Kolkata. Now his question is on Dixon Tech. Is it a right time to enter now, Samir? There are two key aspects for this counter now, right? One has been the recent news on PLI 2.0 that might come in, and could be a big benefit for Dixon, especially in the mobile phone schemes. But the Vivo JV hasn't yet come in terms of approval, and that will take roughly 45 to 60 days according to management. So you already lost a quarter for that. How are you viewing this counter on both these aspects now? I know you like the stock, but both these two new news flows, how should one look at it now?
So the delay obviously hurts, right? The sooner it gets going and you get the sales coming through, the operating leverages play out. Unfortunately, we won't get that as quickly. But having said that, now we have to assume that let's assume it takes 60 days to come, and we factor in something from a 2-year perspective. Once all of this productivity starts picking up and the pickup of manufacturing and starts happening, then what you will see is the profit starting to grow. The company's valuation has corrected from over 55, 60 times earnings to now 35 times earnings. Now, this is a company, of course, the growth historically has been fantastic, about 100%, which obviously won't get replicated. The growth numbers will come down because the base has become bigger. But even if this company can post a CAGR growth on top line of about 50% and, operating leverages play out, the profitability can grow by at least 60, 65% year on year for the next 2 years. And if we factor in FY28, then the stock is trading at about 25 times. So a company with good ROEs, good growth, trading at these valuations is good. So from that perspective, even though these two news flows have come, it's not, the PLI's benefit, the delay doesn't hurt me. It hurts in the short term, not in the long term. So I would still go ahead and buy.
Okay, all right. So that's the view coming in on Dixon Tech. I think we've got Ram who's calling us from Hyderabad. Ram, a very good morning to you. What's your query about?
Hi, good morning, everyone. It's been a while I went out for the market. So I do have a query on the HDFC Bank. I wanted to put the money for 10 lakhs into the HDFC Bank. So is it the right level to buy? This is what review how much will be there. It is consolidated from past 5 years.
Okay, Ram, so a couple of questions for you then. What percentage of your portfolio is this 10 lakh rupees? Because it's a huge amount. And do you hold exposure in other private banks? And what is the time horizon that you're looking at?
No, I don't have any financial sector in my portfolio. I have really invested in the motor sector.
Okay.
So this is the first bank I wanted to add into my portfolio. It is a 10% of my portfolio value.
Fair. And this is from a long-term perspective, I believe.
Yeah, long-term perspective.
Got it. Okay. Then I think, Samir will be the right person to answer this. Samir, do you think it makes sense to invest 10 lakh rupees in HDFC Bank right now?
So I'll break it in two parts. Yes, it makes sense to invest in HDFC Bank. Absolutely. Please go ahead and invest. My only suggestion, since he's saying he has no other banking stock, why don't you put 7.5 lakhs maybe in an HDFC and put 2.5 lakhs in something like an IndusInd Bank? I'll tell you simply why. IndusInd Bank valuations are at the lowest. This is a bank which has great reach because of the branches they've set up in the past. They've gone through all the NPA problems. And what you're going to start seeing is the uptick in the growth numbers coming in after the new management has taken over, plus a valuation re-rating. So you could probably split up 75% into HDFC where it's very safe and very stable, and 25% where you can get a little bit of alpha without taking too much risk, because there's always an issue if buying a bank which is not the top, but the returns can definitely be better. And at this point, the risk reward looks in favor of IndusInd. So break it up 75%, 25%.
Also, just and fair point, Samir, definitely on HDFC Bank. Just wait a day, Ram. The results are tomorrow. Could be a very interesting quarter for the bank, given what has happened in this quarter. It's been an entertaining one to say the least for us, but continue to monitor based on what developments have happened. The next question coming in on Kim's. Rajesh, our viewer is holding 50 shares at 688. Should he exit now or continue to hold this counter?
So hold on to it. Very positive chart structure. In fact, we are seeing a bullish 20 and 50 EMA cross over, bullish crossover. So with that, we expect further extension of up move. Possibly 800 to 820 can be expected. So hold on to it. On the downside, we see strong base formation at around 700 level. So hold on to it. This is for CMS scams.
Okay. Sorry, I think we were talking about KIMS, right?
Yeah.
Not CAMS. Rajesh, KIMS Hospital is the counter that we're talking about.
So KIMS, hold on to it. Higher bottom is definitely there at 625. As of now, it has a resistance at around 200 DMA, that is 690 levels. Once 690 is crossed, we can expect a move towards 745 to 750 levels. Hold on to it. 625, 630 seems to be a strong base.
Okay, all right. The next one is coming in on Poonawalla FinCorp. Our viewer Sandeep from Delhi has purchased 300 shares bought at the levels of 414. Shall I accumulate more or continue to hold? Samir, your view on this one, especially after the QIP announcement. The expectation of the street was of a higher number in terms of the fundraise that they were going to do. But I mean, the stock did not react much to that as well. But your view?
Yeah, so hold on to it. Look, growth is great. It's probably above industry average. Valuations also are trading rich. So from that perspective, the upside may not be as great. The fundraise obviously helps them on their capital adequacy, which also allows them to leverage their book a little more and grow a little faster. So in every aspect, that way it's good. But again, valuations a little rich. So maybe temper your expectations to maybe about 500 max in a year and a half.
Got that view, Sami. The next question coming in on Nava Limited. We actually got a couple of queries on this counter. So Manisha from Bangalore holds shares at roughly around 496. Stocks up 10% today as we speak. Asking if she should book her profits or continue to add also at this point of time. What would be your view, Rajesh, on this counter? Kishan actually holds at 293, so much low value. But your view on Nava Limited?
So I wouldn't suggest to add more because it's approaching its all-time high, but definitely strong positive momentum is there, a strong signal by indicators. So expecting a move towards 770 to 800 levels. So strong positive momentum is there, but fresh long should be avoided.
Okay, all right. So that's the view on Nava Limited. The next one is coming in on Raymond Limited as well as Raymond Realty. Shashwat is holding 37 shares of Raymond Limited as well as I think Raymond Realty. He wants to know whether he can continue to hold this from a long-term perspective or not. So he's probably gotten this as a part of stock split, the Raymond Realty part. Samir, any view on these counters?
So Raymond Realty we haven't covered, but Raymond Industries, I think one can continue to hold. We believe the consumer discretionary spend is going to see an uptake. They're expanding their reach. They have a fantastic brand value, which they can leverage on. So for me, Raymond Limited, continue to add. Raymond Realty, no view.
Got that view, Samir. The next question, coming in now, it's on Aditya Birla Lifestyle Brands as well. Now, our viewer Sharath from Tirupati actually holds this counter. He's holding 84 shares at 149. What's your view, Samir, if you track this counter right now?
So again, same business, consumerism. We believe the push is going to come. They have some good in-house brands. They've licensed in some good brands from international markets. As the consumerism starts picking up, what you will see is the operating leverages play out. Again, this is a very high operating leverage because a lot of the costs are fixed costs which are running through the system, right? As you set up your new branches, your new reach, all of that cost, the rent, the electricity, the raw materials, everything is fixed. Once the sales start picking up, then the operating leverages play out. This is the same story for Trend, same story for many of these other companies in the retail space, Metro, Bata, etc. So we believe once consumerism picks up, it's not going to happen now. It's going to take another 6 months at least. But that is when the story will start unfolding. So hold on to it.
Okay. On a lighter note, if they change the name and move to AI businesses when these stocks start to pick up, just for reference,
it was 30% yesterday.
So. Oh, it has. Okay, that was but just for viewers' reference, I was talking about Allbirds, which is now New Birds AI. But moving on to our next caller, Arvind is calling us from Bareilly. Arvind, a very good morning to you. What's your query about?
Good morning, ma'am. Ma'am, मेरा query एक company है सिंगार हाउसिंग ऑफ मंगलसूत्र लिमिटेड.
ठीक है.
इसका 202 पे अभी शेयर चल रहा है. मेरे को इसका है ना लॉन्ग टर्म के लिए मैं परचेज करने का सोच रहा हूँ.
ठीक है.
तो इसका 3 साल के लिए हॉरिजॉन जाना चाहता हूँ. कंपनी का क्या है क्या नहीं है. और एक रिक्वेस्ट भी मेरी कि कभी अगर नो योर कंपनी पे कंपनी का अगर आप वीडियो बना पाए आप लोग कभी.
पक्का अरविंद, आई एम मेकिंग अ नोट ऑफ दैट. पक्का हम ट्राई करेंगे कि इस कंपनी को हम KYC पे ला सके. इनफैक्ट हम सोच भी रहे थे क्योंकि ये कंपनी अभी रिसेंटली अभी तक मंगलसूत्र ही बना रही थी और B2B B2C कर रही थी, बट अब गोइंग फॉरवर्ड ब्राइडल ज्वेलरी में भी जा रही है. तो हाई मार्जिन बिजनेस है उनके लिए. एंड योर क्वेरी इज वैलिड एज वेल. तो समीर, I know it's a very small company. 1900 crore ka market cap hai. By any chance, any view?
Sorry.
No worries. I completely understand. Rajesh, enough data on the charts to give a perspective Arvind को कि अभी खरीदना चाहिए इस levels पे from a slightly long term perspective?
तो यहाँ पे अगर मैं देख रहा हूँ कि 180 170 के आसपास जो है एक डबल बॉटम फॉर्मेशन दिखाई दे रहा है और एक पॉजिटिव डाइवर्जेंस भी है, तो शॉर्ट टर्म के नजरिए से एक पॉजिटिव बायस बन रहा है और वापस 240 250 लेवल्स देखने को मिल सकता है, बट काफी शॉर्ट टर्म व्यू है क्योंकि डेटा भी ज्यादा नहीं है, तो शॉर्ट टर्म के नजरिए से डेफिनेटली 235 240 के लिए प्ले कर सकते हैं.
Got that view, Rajesh. The next question coming in on HDB Financial, and Shiv Kumar actually holds 107 shares at the IPO price, and I do believe the IPO price was roughly around 740 if I'm not wrong. I don't think I am, but it's around 740 on the IPO price. Now, Samir, we saw stellar results yesterday being announced by the company a couple of days ago. Saw strong reaction to stock yesterday as well. Any view? If you cover this counter now, what should he do with HDB now? Should he average down because his price 740, stocks trading at 680 now?
Yes, absolutely. Average down. I think, the finance space is somewhere where we've been very positive. If you look at the numbers, you'll see that the gross NPA numbers are coming off, which is a cause of concern whenever gross NPAs rise, because that means your credit cost increase, and that is starting to make its way down. So you're seeing the profit growth. Secondly, you saw the NIM expansion, which is also fantastic, given the kind of competitive intensity that exists in the market and interest rates coming off in the recent past. So from both angles, we think HDB is looking good. Right now the entire HDFC pack has kind of gone a little bit out of favor with investors because of the corporate governance talks in the market. But once everyone sees that there's no issue with the corporate governance, I think all of them will move back up on valuation. Confidence will come back, and HDB is trading at a reasonable value. I remember deals of this, you said 740 was the IPO price. I remember deals in this happened at 1040 and the pre-IPO in the off market. So if people were so bullish back then, I'm sure that valuation multiples, once they return and the growth numbers start showing, stock will move up.
Okay, all right. So that's the view coming on HDB Financial. The next one is coming in from Prashant, who's writing us from Bengaluru, asking about CG Power. He wants to know if it's a good time to enter into this counter from a 1 to 2 year horizon, and what should be the entry price? Samir, this question is directed to you. Any view on CG Power?
So yeah, it is a good counter to enter, but only the pricing is not. I would wait closer to 650. Now the question is, will we get 650? I think if you go back a little into history, the price had come in the recent past. So I think you will get an opportunity there again, and that's when you should get.
Okay, all right. It's time for our rapid fire round now. Samir as well as Rajesh, try to keep your answers as short as possible. The first one is coming in on HCL Tech. Sudhir wants to know whether he can accumulate this counter for the next 2 years. He's already holding 55 shares, bought at the levels of 1375. Samir, your view?
Just a hold.
Is it a good time to enter Minda Corp, Samir, for the next 1 to 2 years is what Rajesh is asking.
Minda Corp, we don't have coverage. Sorry, this one.
Okay, the next one is on Clean Science, and this is from Krishna, who's writing us from Hyderabad. Wants to know whether to hold or sell. He's sitting on a 58% loss right now. Samir, any view?
Absolutely, I would actually advise him to buy, not sell. Chemical sector at the bottom, it will turn. Hold on and buy.
Mutyam holds Bharat Dynamics at 1420. He's holding 100 shares here. Samir, what should he do with this counter now?
Just hold at the moment. I wouldn't recommend adding.
Okay, Scient Limited bought at the levels of 1870, sitting on a 6K loss. Average right now. Rajesh, your view on the charts?
Average around 900 levels, expecting move towards 1200.
Okay.
Ecos Mobility, Rajesh, a small counter, but Tony Pereira wants to know if it's a good time to enter. Would you recommend that?
Not tracking this counter.
Okay, Voltamp is the other one. Satyan from Kerala is bought at the levels of 7,000 rupees. From a long-term perspective, can you continue to hold? Any view on this, Samir?
Absolutely, hold on to it. Like I said, power space is doing well. Hold on, this will also do.
Suresh has bought into SW Solar, and it's about time we get this question at 200 rupees per share. He's asking Samir if he should add more at this counter. He's holding 200. He's holding 300 shares at 200 rupees.
Yeah. Please go ahead and add. I have a strong buy on this counter. We saw the Vari renewable technologies results. This SW Solar is 4 times this size.
Yeah.
You get back to it.
Okay. The next one is on Yes Bank. From a short-term perspective, is this a good hold? Our view, Ram is bought at the levels of 21 rupees. Rajesh, your view?
Yeah, expecting a bounce back toward 21 to 22 levels, so hold on to it.
Raghu holds Maruti at 14,700 odd rupees, so he's currently sitting on a loss. What should he do, Samir, with this counter now?
Well, if he has a 3-year perspective, hold on. If it comes closer to 11,000, add on to average it. From 14,000, your returns are going to be very muted over a 2-year period, maybe 8 to 10% max.
Okay, Bharti Airtel bought at the levels of 1898. Our viewer wants to know whether they can continue to hold this from a long-term perspective. Samir, your view?
Yeah, hold on.
AK Balla holds Canterbury at 254. Any view here? Rajesh, he's holding 2,500 shares. Stocks largely
Hold
flat
on to it,
today.
hold on to it, expecting a move toward 270 to 80 levels.
Okay, Colgate is the other one. Rajesh, our viewer is holding 200 shares at the levels of 3409. Your view on the charts, whether to continue to hold?
Yeah, FMCG space is looking good. We are expecting move towards 2200.
Nazara Tech, Shivani wants to enter this counter right now. Samir, given the volatility, would you recommend that?
So volatility in the counter is not the problem. The problem is the loss in real money gaming, right? Which is hurt them. And that is not going to come back. So the growth is now going to have to come from other gaming systems, which is not going to be as remunerative. So for me, at the moment, it's at best a hold. But if you have hold, I wouldn't buy it.
Okay, Suzlon. Shankar from Bangalore is asking whether you can go ahead and buy 500 shares at the current market price. Rajesh, your view on the charts?
So yeah, definitely hold on to it. A strong reversal is there. Possibly in the near term, 60-65 can be expected.
The last question for today, Cohance Life bought at 670. Samir, we started to see some move on that counter now. But should he average now? Stock's trading at still 365.
Yeah, 100% he should average. Look, the management very clearly in the last phone call said that they faced a little bit of issues when it came to the CDMO business, and they don't want to have Q4 as well. Now that Q4 numbers come and then they give once they start showing that this problem is past, I think the stock will re-rate itself and move up. So this is the time to average.
Got it. Well, that was the last question, and that's all the time we have on this edition of Ask Profit. Samir as well as Rajesh, thanks so much for helping us solve the 56 queries that we have been over the last 1 hour. But a lot more stock-related queries remaining. We'll start taking them at 2 p.m. today and Ask Profit the afternoon edition. So do stay tuned for that. But thanks so much for watching. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना,
सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest KYC companies, and also if there is any story or alpha to be made, we get you those stocks as well. But before that, I would like to give you the entire picture about a company, and that company, there are some hints. Try to guess this company. Of course, it's a small cap company. It's a Hyderabad based IT company. Let's give you another hint if you can try and guess that. Second hint is the company deals with AI ecosystem. So a lot of companies are there from Hyderabad which are in software, which are in AI. But let's get into more details about it. The company's stock is down 31% in the last 1 year. So there is a little bit of concern for this company. But what's this company all about? Let's talk about that. And the company in focus is Kelton Tech Solutions. Let's get that on the screen to show you this company which we'll be getting in our KYC show. And also there are some questions to be asked where we'll ask the management how things move, but there's a caveat to it. Most of these questions won't revolve around the numbers as such, because there is a silent period for the company. So just an update for you. There's a new AI tie-ups the company is having, and what does this mean? Any incremental benefits which can be seen, especially in the numbers, that's what we'll be targeting. The second important question for Kelton Tech Solutions is going to be the exact moat and business model of the company. What does this company actually do? What is the AI element to it, the agentic AI which the company claims, and what's the benefit like going ahead? Is there any agility at play, or is it different than the legacy IT businesses? Understanding the billing cycle and the architecture of an AI company, how are they doing that? Have the revenue started accruing? That's one important question to be asked. And also the rating agencies recently have started upgrading the company. That means there is an upgradation at play, especially on the operational and the financial parameters. And generally these are the initial signals where the stocks start doing well. And of course the stock has seen a correction. Another important question for Kelton Tech is definitely going to be the new acquisition plans. Company does have a cash balance, and in case they are looking for acquisitions, which are the areas the main focus should be? So that's what the important question would be. And of course the AI Gigafactory initiative, what it is all about, that's what we'll go deep into it and try to understand. And largely our discussion is going to be on strategy, and Niranjan Chintam, the executive chairman at Kelton Tech, will give us the view forward for the company and the industry as a whole. So that'll be pretty much interesting on the show to have a chat with Mr. Chintam. But let's give you the entire details about the company. ये company करती क्या है? Let's get into details. What are the overall, parameters where we will be looking at the company, the consulting company as they call it, and they have a global deliverability capability as well. That means you can see the way the GCC expansion is happening. Maybe that can be a benefit given to the company as well. Now they're delivering solutions across cloud, data, AI and enterprise platform. So that's something which we'll be watching out for. Apart from this, looking at the partnerships, this is a very decent partnerships coming in. The larger players are there. This of course includes Microsoft, AWS, SAP and Snowflake, to name a few. So definitely they are having strong partners, especially in the North American markets. 50 plus Fortune 500 plus clients the company is having, and if we get into more details about it, let's see what else is there about the company. Largely we see overall they have an agentic AI platform as well, so that's something which we'll definitely talk about with Mr. Chintam. And what's the growth ahead, because agentic AI we have been hearing a lot, and how much does it actually fructify? That is important. Recent acquisitions is definitely there, which was announced. Kumori Tech, the company's name, that is where it's an enterprise platform, to put it in a simplified version for you. And the credit rating upgrade was also there, coming in from ICRA for Kelton Tech solution. So that itself is an important trigger or a point of inflection, if you can call it. Recently they partnered with Future Agent AI Labs as well, so this is important as well. But partnerships are there, but AI will definitely take time, and if that benefits come, then we need to wait it out. But let's see how the revenue by geography split is there. The US still contributes the majority of revenue, almost 82% of that coming in. Minor revenue contribution coming in for India and the European markets, but the focus is on the US market. It's very much important. If you look at the segment also, the digital transformation takes the bulk of the revenue contribution, almost 83% of that coming in. But apart from that, there are other solutions also. This includes enterprise solutions as well. But why the stock is out of favor? Is there any value here? The first is there's a lack of analyst coverage coming in Kelton Tech solutions, and that is why we come and get you these companies in KYC to understand whether they are investable or not. There's a lack of institutional support. If you look at the FISDI, so concerns are definitely there on the stock. But let's see other reasons why it is out of favor. There's no major financial performance which has come in from the company yet. So we need to see a good up move or a growth coming in, and that is how the market will award a company. At the end of the day, we need to see the earnings growth as well. The rapid transformation is happening in AI. So there is a boon as well as a bane if you are totally into AI, and each time some larger players comes up with any kind of an update, this definitely scares the smaller players, which Kelton Tech is also there. So both sides, it's a sword when it comes to AI. Also, apart from these reasons, apart from these key reasons why the stock is out of favor, is the flows. The flows have also actually come on the lower side. So I have given you the entire picture for Kelton Tech solution, but let's understand the rating parameters where we judge the company in KYC. This is the traditional format which we follow, and largely we do not change that. Income statement, balance sheet, cash flow, these are the original numbers to look for in the company, and of course we'll get the Q3 numbers. Remember, the Q4 announcements of this company has not been there, and there is a silent period, so the management won't be talking a lot on the numbers and the outlook, but nevertheless we'll try to take out as much as possible. Return ratios is there, and also the street trade shareholding, something which we talk about. Valuations, we'll try to compare it with itself. We haven't got an apple to apple peer, and the outlook for the company and the industry as a whole. So this is how we'll be judging Kelton Tech solutions overall, giving us totally 8 rating parameters. But apart from that, on the show is also very much important, and the management, if we talk about, we'll speak about that. But the first thing would be the income statement. Over here we see the revenue, EBITDA, these are all single digit 3-year CAGR growth, so there's nothing great about it. I mentioned you why the stock is out of favor for the street. But net, let's see how the Q3 numbers have shaped up. Is there any bigger change? And yes, there seems to be a marginal uptick coming in the majority of the metrics, and of course the margin also going past that 12% mark and coming in at the 13% mark. So net it's neutral. when it comes to the overall setup, and it has come back to its that 12% margin trajectory as well. But that's not enough. The company needs to come with something more superlative performance, because the growth numbers need to be seen. If that happens, then we see the EPS contribution coming in. So net, it's a neutral rating, I would say, when it comes to Kelton Tech Solutions. But let's also point out the balance sheet. What's happening here? Largely, balance sheet is stable here. Even if you look at the equity and the book value, and the debt front isn't so much, because the company itself is an IT company. Debt ज़्यादा इनका होता नहीं है, cash balance रहता है, या तो कभी acquisition करते हैं या तो कभी buyback करते हैं. But definitely we'll see what this company does. It's a small cap company. That is why it is something to take everything with a pinch of salt. Just look at the levels which I spoke about, and it's almost stable. So it's a neutral rating when it comes to the overall balance sheet. But apart from income statement and balance sheet, let's also talk about the cash flow, how things are moving, and that's also pretty much important. Overall in the market, how the things move. And remember, there is some sort of, you could say, a little bit of seasonality also at play, and that's what we can see over here. So company needs to show. See, in FY25, the cash flow from operations was on the lower side. PAT has been strong. So there are some signals, but it's still mixed when it comes to the cash flows. So we'll try to understand this structure also in the future about how this structuring happens of the cash flow. But right now it's a neutral rating when it comes to the cash flows. Apart from cash flows, let's talk about the return ratios. And return ratios is strong. FY23, the return ratio is roughly 14%, and that is where we see the growth coming in at 16%. It's actually sustaining in FY27 as well. So the ROC numbers and largely the ROE numbers also have shown strength for this. So I'm going to give this a strong thumbs up when it comes to the return ratios. Also, apart from return ratios, let's talk about how the shareholding has moved, and there's a concern coming in. Of course, the shareholding drop has been there, but no participation has come from FIs and DIs. And of course, looking at the market cap also, largely FIs, DIs in the overall midst of uncertainty in the small cap, mid cap have actually shied away. But nevertheless, no participation has come. So net, the shareholders also, you talk about it, retail has gone up, but institutional support is not there. That's a big overhang of the stock, and that's why I've given this a strong thumbs down. Apart from this, let's talk about how the things are moving when it comes to the overall street cred. Street cred means how much percentage of returns have been made, किसका पैसा बना है, अभी तक पैसा लगा नहीं है, बना है. It's been year to date basis, stock is down 21%, 6 months stock is down 35%, and even 1 month basis you see the stock is down 11%. So definitely concern is there. Over the last 5 years, just 6% of returns has been made. So definitely there is a big concern. If you are an investor, you might be trapped in this counter, and there might be some reasons also why it's out of favor. But we'll try to understand the other side of the story from the management as well. But as of now, street cred, I'm going to give this a strong thumbs down as well. Apart from street cred, we talk about the valuations, and valuations are quite cheap because of a significant correction happening. In the 5-year peak valuation we have taken out is 28 times, and compare that with the current numbers, that's coming in at 9 times. Even the 5-year average numbers, if you look at it, it's at 14 times. So the valuations are dirt cheap. Because of that basis, if you are taking any decision, then it's a strong thumbs up when it comes to the valuations as well. So we have done 7 rating parameters for you, but the last one is very much important, the outlook parameter. Over here, the credit rating upgrade has come in. Maybe that's an initial sign for a reversal of fortunes for this counter. The second outlook which I have taken, that's also very much important. Let's pull out the second outlook as well for Kelton Tech Solutions, where there is a bullishness coming, and especially because the revenue visibility is becoming better and better, and that's what we had read in the rating agency report also. Order flows are also coming in, and the moment that starts coming in, some certainty is given to this counter. The promoter participation via share warrant recently was there, so a little bit of conviction is there in the counter, but we'll wait for something major from the company itself, because announcements are coming a lot in AI. But how fruitful are they? What are the exact numbers? That is why the street is still confused regarding this AI related announcements, and maybe for the stock as well. A company is focusing on agenting AI platforms. That is important as well. But how things move, it's a very, very developing situation. So net, It's a neutral rating for the outlook. But let's understand the total KYC ratings of the company which we have given. What are the numbers looking like? Largely, your income statement, balance sheet are largely neutral. Of course, balance sheet management is strong. Return ratios is good. Anything above 15% for an IT company is something which an investor should look out for. Shareholding, lack of institutional participation and street cred. The stock has not made money for a short-term, medium-term or even the long-term investor, and that's a big concern. That's why I've got this company in KYC to see whether any alpha comes. Is the stock making a bottom? And of course, the valuations are very much interesting because of the stock fall. And outlook, it still seems neutral because the AI related announcements is there. But we need to see the growth in earnings. That's the first and foremost important thing, and largely it's 4.5 out of it, largely in line with what our research is. But we'll get in more details as well. And of course, joining in would be the Niranjan Chintam. He's the founder and chairman at Kelton Tech Solutions. And I'd like to give a little bit of snippet about him, and we'll just take a break as well. And we'll give you the entire picture. 30 years of experience coming in, but he has led several Fortune 500 companies and government agencies in US and India as well. And also, another angle is that he's an MBA for Wharton School of the University of Pennsylvania as well. But do hold on for a break. After this break, we are going to be speaking to him. He's the founder and chairman of Kelton Tech. So stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन।
Welcome back to KYC, and joining us is Niranjan Chintam, the Executive Chairman at Kelton Tech Solutions. Good afternoon, Mr. Chintam. It's always a pleasure to talk with you, but just give us a total sense about the exact moat and the business model of the company. The street seems to be confused regarding what the company actually does. Is it an IT company? It's a service company? It's an AI related company? What it is all about?
Sure. Thank you, sir, for having me, and thank you for giving me an opportunity to talk about our story. Okay, so we'll talk about Kelton, how is it different from the competition that is out there. Let's start with that and we'll go from there. Kelton has been born digital, right? We were born in 2009. Unlike others where they had legacy, we don't have the legacy. So we have strong engineering depth when it comes to cloud data and the modern platforms. So for us, AI, is something that is another tech for us. Even though it's just latest and greatest and it's all cool, for us it's another tech. It's an emerging tech, and we believe in using these kinds of technology to build platforms and solutions for our customers.
Right. So we understood a little bit about the company, but there has been recent new AI tie-ups which have been there. What does this actually mean for the company? Are these just announcements, or are there any incremental benefits to it?
Okay, so for us, any of these new AI, let's call it LLMs, right? Be it OpenAI or Claude, is just another tool for us to provide a solution to our customers. Talking about the agentic AI, agentic AI is nothing like, it's behaving like an agent and performing certain tasks assigned to it. You typically have a master agent, which we call the orchestrator, that orchestrates everything behind the scenes. And then you can have multiple agents running or specialized agents running the solutions that are required to do a specific task. Once the task is complete, it could call another agent, or it could conclude and say, I provide the solution, give it to the orchestrator. And then the orchestrator decides what next to do it. So all of these put together provides a solution to our customers. So what that requires is, very deep engineering expertise is required, because you need to know when what agent need to be called, and also we need to have a domain expert. So if you don't have the domain expertise, I'll just pick an example of, let's say, travel and hospitality. If what happens once you book a ticket or you want to book a package of let's say you want to have a travel plan or a vacation that you have, what could be a package for a family vacation or a pilgrimage vacation versus, let's say, for instance, somebody wants to go on their honeymoon. So those kinds of things are all orchestrated behind the scenes based on what the question and the answer is provided.
Mr. Chintam, you explained us about the AI front, but the question remains is how is the billing and the overall architecture looking like for these AI companies? We need to understand the entire cycle, how things plays out. Your views on that?
So the billing cycle, typically is outcome based. So what we have seen is, unlike the traditional model, when it comes to AI-based solution, it is an outcome driven. People have gone away from time and material to an outcome-based one when it comes to some of these AI, led solution offerings. There are still customers of ours who say, okay, hey, we don't need you to provide a solution. Give us, in some cases, an AI engineer that could do certain tasks. So that requires some deep expertise, right? It's not like you can just train somebody for a few months and then say, okay, he's an AI expert, but he needs to have all the engineering skills that are required and be able to ask the right questions for these AI tools, be it the, like I said, the ChatGPTs or the Claudes, ask the right question to get the right answer. In some cases, right, people have to keep talking about, it's not like a traditional normal user where you ask a question, you get a response. In our kind of a question, it's almost like a 3-page question before the answer that we are looking for comes out. Okay, so that requires a lot of expertise.
Right, and Mr. Chintam, apart from this, the question definitely is on the improving credit profile of the company. That has been increasing, and that's a precursor for the good financial health of a company, to just put that perspective. Your views on that?
Sure. So the credit rating increase is primarily driven by two things. One, the cash flow that is coming in. The second is the margin improvement. These two led to credit rating, and also the pipeline that's seen. What is the pipeline that we have? The credit agency looked at that, then looked at what the competitors are looking, and then came back and said, hey, your rating is much better than others, or comparatively, it has gone up. We used to have BBB. Now we went to the A family of thing, so that it becomes easier for us to get credit now or reduce our interest obligations when we come to the banks.
And Mr. Chintam, is there any new acquisition plans as of now? And if yes, any sectors which are looking good, or you'd like to wait it out, seeing the current market conditions?
See, at this point, there is nothing in the pipeline as such. But with that said, right, we're always opportunistic. We believe that we acquire for two reasons. One is either we want to penetrate a certain geographic region and or a certain skill set that we don't have or we have less of, then we go buy a company. Example is the Kumori acquisition that we already announced. I can talk about that. Is primarily we acquired it for the ServiceNow space that they are in. To get to that particular level of partnership that Kumori has, for us, it would have taken us 18 months to 2 years. Even though we had all the credentials and the certifications, but to get that partnership level, it would have taken that long. So we felt that, ServiceNow is a growing space. We want to be in that space. Some of our customers are asking for that kind of expertise to be provided. We went and bought Kumori. Now we have a ready-made certification and partnership level at ServiceNow. Now we can cross-sell and upsell to our existing customers and or the acquired customers of our other solution offerings that we have.
Right. And Mr. Chintam, what is the AI Gigafactory initiative? The company has spoken about this also, but the longer scheme of the things, what benefits we can get from this?
Sure. We partnered with a company based out of Hungary that has been tasked to come up with a European-wide AI Gigafactory. Basically, it's nothing but coming up, just like you're seeing that that Google has come up with a data center solution in Vizag. Similar to that, they want to build an AI kind of a data center there, and they're using us as their implementation partner when it comes to the AI Gigafactory. And that is a work in progress. We have a MOU that we signed with them, and we should start seeing revenue coming in shortly.
Well, we have discussed a lot about the company itself, but I want to take one step back. A 20-year-old who's watching KYC right now wants to start in AI services from India. What can he or she start with?
So today, building let's say a software has become so easy using something like, LLMs, Claude code, that's what primarily everybody is using, Claude code. What they should be focusing on, just not building that particular software, but it should be driven to a certain outcome, right? Nowadays, every customer of ours is coming and asking, what's the outcome? Yeah, building software means nothing. Can it scale? Is it secure? Tomorrow, can I fulfill end-to-end solution? And you're not only looking at, end-to-end solution, you also need to talk about what kind of data that you're going to get. How good is the data associated with that? It is as good if you don't have good quality data specific to your particular industry or the solution that you're trying to offer, you will not get, it's what we call garbage in, garbage out, right? If you need to have the right amount of quality data, curated data that is fit to that. So that is what is required. 20-somethings are much easier to adopt these kinds of new technologies versus, let's say, let's say 20-year experienced person. So all the 20-year-olds, I would urge them to start thinking of solution offerings, and they should be looking at building platforms of the Googles of the world. We need to start coming up with products in India that could scale up. Because remember, building for, let's say, 10 users to 100 users is easy, but how do you scale it up to 1 million users? That is where your skill set comes to. And that is what Kelton has.
Well, thanks a lot, Mr. Chintam, for that. And you've given us interesting views on your company, clarified the business model and the growth outlook ahead, and a very important statement for a 20-year-old starting in the AI services. Thank you very much, Mr. Chintam, for that. And that's the management of Kelton Tech Solutions we're talking about. And they did clarify the business model, their growth outlook, despite not sharing a lot of numbers, because of course it's a silent period. But definitely we have found some value in this company. And for interesting companies like this, keep watching KYC and I'll get you interesting stories where you can make alpha also. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show.
Positive global cues drive the Lal Street today with Nifty trading near 24,300 level. Broader markets outperform all sectors barring IT trade in the green. Wipro under pressure after delivering an inline Q4 but a cautious guidance growth for the next quarter. In a big move, the company also readies for buyback worth 15,000 crore rupees, its largest ever. The NSE IPO is gathering momentum. The government is in talks with the top PSU shareholders to participate in the offer for sale ahead of the April 27th proposal deadline, with NSE targeting around 4 to 4.5% stake dilution as the listing process moves steadily ahead. Crude cools as diplomacy takes center stage. Oil prices fall after President Donald Trump struck an upbeat tone on a potential US-Iran ceasefire, even as uncertainty around Hormuz reopening and deal timelines keep the markets on the edge. Initial findings into the Vedanta power plant blast indicate excess fuel buildup inside the boiler, causing a sudden pressure surge and explosion. Officials also point to maintenance and operational lapses. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take you through the market. And it's a happy day on the markets, and it all really is dependent on how the Middle East tension really emerges. So there is a positive global cue that is really aiding our Indian markets. And Nifty 50 closer to the high point of the trading session at the current moment, 24,260 odd levels, and it is up about close to 0.3%, given up a slight bit of profit in the last few minutes of trade. But remember, if we really take a look at the oil prices, Brent crude is hovering lower than $100 per barrel, but also higher than what it has really sustained, closer to $95 to the barrel. So at the moment around 98 odd levels. Taking a look at our own markets, well, the advanced decline ratio really gives the picture where it's 9:3 ratio, and it is sustaining in terms terms of more advancing stocks by a huge margin. When we really take a look at the overall picture in the market, 0.3% odd up on the benchmark indices, and it's also the banking index which is trading in line with the key indices today. But on the other hand, remember, it's the broader markets that is the mid-cap universe which is gaining momentum much more. So there is a lot of buying that is seen on the mid-cap companies and the small-cap universe. So the smaller companies which had lost a lot of ground are really catching momentum and seeing a lot of interest really coming in. Taking a look at what are the heavyweights which are really performing well for the Indian markets on Nifty 50, well, big boy Reliance Industries is the top gainer, adding about 35 odd points to Nifty 50 at the current moment. Remember that out of 82 odd points that are really gained by Nifty 50, 35 points coming in from Reliance Industries, HDFC Bank giving another 25 odd points, and the other from the consumption space, HUL as well as ITC. So these four counters and heavyweights itself are really making up for all the gains coming in for the Nifty 50. So it is really concentrated on a few stocks performing well today. Always important to remember it's not broad-based, because from the banking side, ICICI Bank is the one which is the biggest dragger in trade. Also Larsen & Toubro, HDFC Life, HCL Tech, and it is a drag coming in from the IT space. Remember, it's one of the only few sectors in the market today which is dragging down, and also Wipro is down after its results. Let's take it straight to an expert joining in for more on the market momentum and how to read into today's trade. Sachin Shah, who's the Executive Director and Fund Manager at MK Investment Managers, joins in now. Sachin, pleasure talking to you on NDTV Profit. What do you make of the momentum? And of course, the gains are there also because of oil prices and Middle East. But now we are really looking at the earnings season coming in and also lower than expected monsoon. How much of that is really playing out?
Yeah, hi. Thank you so much for having me on the show. Always a pleasure. Yeah, so I think clearly, the valuations are very reasonable even at this point in time. So we've seen some decent recovery in this first half of April after the sell-off that we saw, or rather we witnessed in the month of March. So I think we've recovered nearly 80-90% of that sell-off in this month. But I think the way to think about it is that clearly, the valuations are very, very reasonable because even if you see on a 1 year forward, the Nifty might be trading in the range of 20 to 22 times, depending on whatever growth forecast that one may take at. But I think the way we are thinking and the way we are communicating to our investors is that if one has the next 3-year perspective, there is a very decent probability of one can make a good mid-teens kind of returns over these 3 years on a compounded basis. That's how we are positioning ourselves.
All right. But Sachin, if you really take a look at the market in terms of the IT sector, of course, two large companies have already given out their results, and the market has been disappointed with those. And even the global markets, the ADRs, have shown a downtick also coming in from the dollar revenue, AI, and the growth outlook and the guidance given by these companies. How do you read into the big boys of the IT sector?
Yeah, I think there are still few more companies. I mean, even within the large companies, whether it's Infosys, HCL Tech, Tech Mahindra, some of these companies are yet to deliver the results. And we are quite optimistic that some of these results will actually be pretty decent, and even more the outlook for the next year should be even better, because even for the companies like TCS, what we have seen is that the order book and the new business inflow has been very, very strong. So our sense is that the valuations are factoring in very, very decent risk-reward ratio as far as some of these large IT businesses are concerned.
Right. We yet to see some of the other big companies and then get a better sense on the IT sector. But Sachin, if you really look at now, the war doesn't look like it's getting over anytime soon, though there is a lot more sanity on that particular front. But our oil prices, and especially remember the Russian oil, which we were getting at a discounted rate, is also now not extended by the US. That waiver is not extended. That will continue to put pressure on our growth outlook, on our balance of payment, and more importantly, on the raw material transportation costs and pressure points building for the companies. How are you segregating ahead of the earnings the sectors which are at risk of these factors?
See, the way we think about it is that this is extremely temporary. Yes, there has been some supply disruptions, and because of that, you are seeing commodity prices actually, and particularly oil prices, have risen quite substantially.
Yes.
But will this actually be a full year phenomena? Very, very low probability of that. We believe this is going to be a less than a month or a two kind of a event, and we will see again oil prices probably remaining in the sub 80 kind of dollars, because clearly, as far as the war is concerned or the geopolitical tensions are concerned, the worst seems to be over, and which is what gives a lot of optimism that this kind of oil prices will probably not sustain. That's how we are positioning ourselves, that the oil prices probably will come down to sub $80 in the next couple of months, or maybe even before that.
All right, sub 80 levels, that's what experts are also penciling in, $80-90, Sachin. But the moment crude really went below 95, it has picked back up. So we'll have to see what factors really lead to that. But my final question, since we spoke last time, any new trend emerging which gives a good opportunity of buying or any positivity in terms of investments?
Yeah, so like, we did discuss this, that last time was, that time probably we were in the midst of the very thick, very heated kind of an environment as far as the geopolitical challenges were there. And that's why probably I was saying that, blue chips is something where one should be very clearly looking at, because the valuations were very reasonable. Now, of course, as I said, the worst seems to be behind there. And we've also seen a decent amount of drawdown in a lot of mid-cap and small-cap companies. So I think along with blue chips, some of this selectively, one can also start looking at fundamentally strong companies, even if they are mid-size and small-size companies.
All right. Thank you, Sachin. Always a pleasure speaking to you and get your expert take on the investment strategy. Thanks.
Thank you.
All right, let's also move across and get a sense on the overall market momentum and what are the pressure points really building on the companies as well. From a private equity investor, let me welcome on the show Rahul Bhasin, who's a founder and managing partner of Bearing Private Equity. Rahul, always a pleasure to speak to you. My first question, how are you reading into the market as an investor in the public market companies as well? How do you see and strategize in a very volatile environment where there are several factors out of our control?
I think you have to look at the larger context, in the sense that where were the markets before this entire thing took place, right? And I think that probably, I would say the markets were fully priced or on the margin slightly overvalued, in spite of the corrections that we've seen over 18 months. And therefore, the sell down which happened in the market, which under normal circumstances, any sell down because of wars is usually a very good buying opportunity. And most of the recovery happens within a 6-month period anyway. The incentive to jump in and buy that quickly was probably less than would be under normal circumstances, just because of the initial starting point. Does this mean that structurally the Indian market is not going to yield attractive returns? Not at all. I think the Indian market probably is going to yield the best returns. But we have to understand that we are a little bit out of fashion also in terms of capital allocation globally, because the hottest sector in the US is the AI and its supply chain. You find elements of the supply chain in markets like South Korea, in Taiwan. and you can see these markets are bouncing very quickly. But if you look at other markets which the government, which the investors feel don't have much of a say or stake in the AI ecosystem, mind you, I don't agree with that assessment, but what's the consensus? Markets like maybe Indonesia, Malaysia, Philippines, you see absolutely no bounce of the lows, right? And the reason I'm saying I don't agree with that assessment is that ultimately, if AI has to be monetized, there will have to be an application layer which is built on the initial architecture and the infrastructure layer which has been built out. And that application layer, I think Indian companies will have a big role to play in actually developing that whole ecosystem. So I think India is actually going to be a beneficiary of that ecosystem, not someone who's going to be a victim of it. And therefore, if you look at the network impacts of that and the linkages around that, I think the Indian market should do just fine from a medium and long-term perspective.
Right. So, Rahul, you were talking about the AI trust in the IT space and how India is really going to stack up in that. And India is going to be a beneficiary because of the critical abilities that we bring in. That's well pointed out. But, Rahul, if we really look at the investor climate from the private equity space, which look at public market investments like yourself, what would be the strategy at the current moment in terms of valuations? Are they mouth-watering enough? And which are the pockets which are looking more attractive? Or is it going to be wait and watch in the midst of volatility?
Nisha, for people like ourselves who invest in public markets and private markets, I have to say that the private markets will continue to be far more attractive than the public markets. And this is a cyclical thing. It goes, it switches every now and then. But at this moment, definitely the deployment of capital from our side is much more focused on the private side. And if you think about the world, and one of the phenomenons in the world today is the fact that the rate of change has accelerated, and AI is driving that in a big way because I think the productivity of every scientist has become 3 to 5 times. And if you look in the world, we have probably more scientists and engineers working and living today than have lived cumulatively in the history of mankind. So it is actually leading to a lot of technological change and improvements and productivity gains. And what is also happening is that the structure of markets is also evolving faster than ever. So if you take any time period, you take the last 100 years, 50 years, 10 years, 5 years, 3 years, you'll find that the constituents of the large indices worldwide are changing faster than they've ever changed. And in this kind of disruptive kind of global ecosystem, it is younger, disruptive companies which show far more, potential for generating that alpha that people like us look for.
Those
that's where
alphas.
we're finding much more opportunities.
All right. So you said private sector is the one where you're finding more opportunities. But and you also said that India is much better stacked in compared to the other Asia-Pac countries that you look at. But Rahul, to that point, my question is that a lot of experts and FII outflows have also shown that India is worst affected because of the crude dependence that we have. And that is one point which is hurting our markets. So considering that point, not from the market perspective, but from business perspective, of course, it has transportation costs going up and several of the intermediaries of crude and oil and energy, which are impacting the price points and also adding to the inflation and then the supply chain constraints. Putting all that into perspective, in your portfolio companies where you have a lot of visibility, from your vantage point, what are you observing in terms of the pain points of the companies?
I think one should step back a little bit and see, what's the immediate impact of this entire incident that has taken place. Well, the reality is that oil has gone from, $60 a barrel to $120 a barrel plus. Now, that means a $60 increase India's sort of import bill goes up by about $2.5 billion for every dollar increase, which means that's $150 billion increase. Now, in a $4.3 trillion economy, that's more than a 3% impact on GDP. A 3% impact on GDP, will increase fiscal deficit for sure. It'll increase inflationary pressures. Now, the real issue is that, is this here to stay or is this going to go away, and is this temporary? Because if it were here to stay, we have all kinds of issues. But there is also another kind of issue which is there, and which is going to cause temporary disruptions. And if you go sector by sector, I think the thing which I think one should look at most closely is the fertilizer sector. We, I think, use about 18 million tons of urea every year during the Kharif season, which means that during the planting in July, end of June, July, and if you look at the stocks that we had as a country, I think we had about 6 million tons. And if you look at the depressed gas supply, we are going to be short by 3 to 5 million tons of urea. Now, is there an opportunity in this? I think this is a big opportunity in this, because I think that as a country we use too much urea and it's causing all kinds of environmental problems. I think it leads to planting the wrong kind of crops. It leads to, believe it or not, a lot of the pollution problems in northern India, because the PM 2.5 is largely accounted for by ammonium sulfate, and a lot of that ammonia in the air is because we are using too much urea. And we sort of sell to the farmer urea at 266 rupees a bag, whereas the cost to the government's over 2,000 now. Can we manage the demand because of the supply shortage and actually structurally improve the economy and the allocation and the planning of crops? Yes, I think it's a big opportunity. But the powers that be have to look at it from that perspective and that lens, and drive that kind of reform. Now, DAP is also going to be in marginal short supply, maybe 1 million tons off in terms of what we can produce. But there are many ways of actually complementing and supplementing that phosphatic input, and maybe even using the gypsum, sort of reducing the sulfur content from it, and actually having much more. There are a lot of economic opportunities which are thrown up when there are these kinds of shortages. And I think that if industry were to focus on those opportunities, I think there's a very bright future. And the companies that do look at the entire disruption as an opportunity and not just as a pain point, I think they'll do very well.
All right, Rahul, that's a great, idea that you have really spoken about. That is to find alternates to the fertilizer products that you were talking about, and which are these alternates that can really pick up the momentum and look at the business opportunity also because of the shortage of urea. So fertilizer space and the products that are used there, those are the components that you would be aiming for, as well as a new opportunity in this environment. But always a pleasure speaking to you. Thanks so much for joining us and giving your views on the overall market as well as the corporates. Thank you.
Thank you.
Thanks. All right, moving on. Wipro is a stock which is in focus today. Its IT sector overall is dragged down because of the disappointment on Wipro stock as well. Almost 2.7% down on Wipro, which has delivered, remember, Q4 results in line with the street estimates. However, the stock is down in trade today as the company's CEO, Srini Pallia, while speaking to NDTV Profit, said that despite the global headwinds, the investors are still bullish on the IT sector and are actively investing in AI. Let's listen in to what else he has to say on the company's order pipeline.
So first and foremost, if you look at our current Q4, the results that we have declared, 3 of the 4 SMUs have actually shown a sequential growth, whether it's Americas 1, Europe or APMEA, and they have shown 3 consecutive quarters of sequential growth. I think we had a challenge in Americas too, of 2 specific customer issues. One was a client changing the direction. Other one is where we won a large deal, but we have not been able to ramp up enough. Second, if you look at the pipeline as of today, it is very secular across the industries and across the markets. And that gives me a good comfort that, despite the geopolitics that's going on, trade and tariffs that are going on, the clients are being very resilient and they're investing in IT. And these areas are AI, data and cloud, which is very predominant. So to me, the opportunities going forward is not only, leveraging AI for reimagining the client process, but also demonstrating AI in their run and operate and change and transform programs as well.
Right, so that was the management of Wipro. Of course, the guidance is something that disappointed the street. Now on to another important development, and billionaire industrialist Gautam Adani, the chairman of Adani Group, has become Asia's richest individual, overtaking Reliance Industries chairman Mukesh Ambani, according to the latest Bloomberg Billionaires Index. Now, Gautam Adani's net worth rose to $92.6 billion, placing him 19th globally, while Mukesh Ambani slipped to the 20th position with a net worth of $90.8 billion. Now, the reshuffle at the top highlights the ongoing volatility in the global wealth rankings in 2026 amid rising geopolitical tensions and also market fluctuations. All right, apart from that, remember, we are in the midst of earnings season, and Varsha, my colleague, is joining in with all the important earnings of the day. Varsha, what all is on your list today?
Well, let me start with Wari Renewables Technologies. If you see, good set of earnings, strong set of earnings, top line growth was around 131%. There was a drop in margins year on year, but if you see the sequentially, the margins were in line, and from the last 3 quarters, company has been delivering the guided range of margin. Well, onto the revenue was up almost 2.5x, EBITDA was up 63%, net profit was up almost 66%. Company, is also expecting more than 15% of EBITDA margin going forward, and they're also venturing into BESS, that is battery energy storage system, and of course the data centers. Next on the list is Angel One. Overall, if you see, there was a better broking realization that the company has seen. Company is also raising 1,500 crore via NCT, and is also investing 150 crore in each arm, that is Angel FinCap and Angel One Wealth. Onto the numbers, if I were to talk about, revenue was up almost 9%, EBITDA was up 13%, margins were at 41% versus 39.7%. 40% last year, and net profit was up 19%. Then you have VST Industries. Overall a strong set of numbers, because the volume growth in Q4 was up almost 3%. There was a revenue bump up. This was seen on account of increase in GST. The margin improvement that you're seeing is on account of pre-buying of raw material at a cheaper cost. There was a strong FY26 volume growth of around 8%, and Q4 numbers are basically not comparable due to removal of cess and hike in GST and excise. But management is expecting a challenging year going forward due to the geopolitical instability that we have seen. So overall, these are three companies which are buzzing on the back of earnings as of today.
All right, Varsha, thank you so much for getting us the whole list of earnings to watch and earnings that are on our radar today. Now, India's market valuation is little overdone and deserves a re-rating in the upside. That's the word really coming in from Mark Matthews, who's the head of Research Asia at Julius Baer. While speaking to NDTV Profit, he said this. Listen into that excerpt of that conversation.
India deserves to be re-rated to the upside, and I believe that is happening now. It started, it will continue. I've seen several statistics to look at where India was previously at the sort of levels it's at now in terms of its 200-day moving average or its price earnings ratio or its various other valuations, but I'll just give you one, which is that in the last 20 years, there were only 2 other times that the Nifty's price to book ratio reached 0.6 times that of the S&P.
All right, that was a word coming in from Mark Matthews. Completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit with all the action in the markets today. Sharad, good afternoon. What are the cues that you're picking up? It's the last trading day of the week.
Good afternoon, Hiral, and it seems like it's a wonderful Friday as well. Of course, it's advisable from the traders to keep your positions light because a lot of announcements might come geopolitically. But nevertheless, a good positive momentum is coming in the markets, Hiral. And I'd like to also point out that traders have stated that it's slightly a sell on the rise markets as well. Largely, we see aquaculture, power, ancillary, tobacco-related stocks, all of them doing well in the trade as well. Of course, stock-specific news flows being developed here. But Nifty Bank, if you look at it, a good strength is coming in, and it seems like it will sustain going ahead as well. Also, majority of the asset classes are still stuck in a range bound, and the rupee is maintaining its strength. But remember, one important thing I would like to point out is if you have trading positions, keep them on a low basis, especially going into the weekend. And lastly, I'd like to point out the overall earnings which are there in the banking space. That is where you should be focusing on, and that is of course the ICICI Bank and HDFC Bank, and these are the triggers which should be in your radar as well. But enough of these triggers. Hiral, what are the important stocks which should be there in your radar, which should be in the focus?
You know, a lot of packs that are moving in trade today, Sharad, and let's quickly look at the watch list. Wipro, the largest buyback is what they've announced, but the guidance has been weak, and that's the reason why you're seeing some bit of pressure there. Cement companies are in focus as well because the fuel and raw material price increase is what could be impacting. And in consonance to this, the kind of price hikes that they have to take is what the focus area is. VST Industries Q4 numbers have improved, strong moves there. Again, strong execution by Waaree Renewables as well. HDFC Bank will be reporting numbers tomorrow. The asset quality is something that will be watched out for. And ICICI Bank, the margins are expected to remain flat, so that stock is going to be in focus. RVNL has been declared the L1 bidder for a 967 crore project, and that's the reason why you're seeing some smart moves coming in on that one. A strong business update by Kelton Tech, and it's very interesting to see how the real estate pack has actually evolved because it's been a pretty mixed trend in terms of the business updates that have come in so far. And lastly, MMTC, that stock has been buzzing in terms of volumes. But let me head across to my colleague Sharad again to take the rapid fire with Akshay Bhagwat. Over to you, Sharad.
Thanks a lot, Hiral. Good afternoon, Akshay. It's always a pleasure to have you. We'll start our rapid fire segment. I'd like to take your views on HDFC Bank. It comes out with its numbers tomorrow. How is the positional setup looking like for HDFC Bank?
Good afternoon, Sharad. So it's a neutral setup for HDFC Bank. 820 and 780 is the trading range. Only above 820 is where the breakout is on technical charts.
And of course, the second bank is also coming in with its numbers. ICICI Bank, is there any alpha to be made here, or that's also a neutral setup?
Positive chart setups are better than HDFC Bank. The support is 1320 and trading momentum can see a retest of 1400 on short-term parameters.
Right, VST Industries, I want to just get you on that. Important announcement, of course, coming on the back of earnings, but a good move coming in. Good time to partially book profits, or there is more strength going ahead?
I believe there can be more strength, but it will take some time to cool off. 255, 260 is the support zone from where it can again pick up momentum. 290 is the broader target for VST Industries.
And Akshay, your views on Waaree Renewables, numbers have been really strong, good volume buying, management commentary also coming in strong.
A bit overbought on charts, so fresh buying not advisable, but target zone, if you are holding, keep it open till 1260.
Right, a spate of orders coming in for RVNL as well. What does the charts suggest?
RVNL, I think it's better to book out profits from short-term trading purpose here.
Book profits on that. Kelton Tech, strong Q4 numbers, especially on the collections operation front. The operational numbers I'm talking about. Your views on that? Any good positional setup?
Yeah, positional setup is good, but 400, 410 is a strong resistance. Book out profit from short term at 400, 410 range.
Right. Your views on MMTC? It's generally a low volume counter, but definitely whenever action comes, there is interest. Any view on that?
Strong resistance at 73, almost near the resistance zone. Book out profit around 72 to 73 zone on short-term parameters.
All right, that's the rapid fire round coming in from Akshay. But over to you, Hiral. What are the stocks you're gathering from Google Trends?
Let's see, because it's always interesting. Last couple of days, Sharad, you've seen a Ola which has been trending yesterday. You had the entire power pack that was up in trade from a Tata Power that was trending with a Suzlon, Reliance Power, and some bit of it continues in today's session as well. GMDC has been interesting. After that strong upsurge, you're seeing some bit of profit booking that's coming in, so that stock has been in focus. And your Greo Rail PSU ETF has been in the works this entire week. Let me actually take a quick question with Akshay. Akshay, from the railway pack, because you have the Grow Rail ETF, which has been trending on Google Trends. Anything from the railway pack that you like?
Yeah, good afternoon, Hiral. For the railway pack, yes, the momentum is already caught on, and if you're looking for stocks here, I think IRFC looks positive, but you need to give this some more time. The support is around 100 and 102, and I'm expecting potential upsides till 112 to 115.
Okay, so that's with regards to where the railway pack goes as we speak. And the quick view on the GMDC, the profit booking of around 2.5% with the strong surge that has come in. How would you advise investors to look at that one?
Strong breakout on technical charts with strong volumes yesterday at levels of 640. Extremely positive on technical charts. You can consider buying this at current market price. Trading momentum is strong. 780 to 800 can be the potential upside targets.
That's with regards to Google Trends. But thank you so much, Akshay, for joining in. Always a pleasure to speak to you. But Sharad, you know, Wipro from the IT pack has been under pressure, and it's going to be interesting to see if the buyback comes to support it.
Exactly, that's the important question. And joining us is Jasmeet here. Jasmeet, Wipro is down because of buyback or because of earnings. What's the reason for this fall?
Well, the overall buyback is helping the stock to stay up, but the overall Q4 earnings, that's something to watch out for. Now, in terms of the key takeaways, we did make a note that the numbers did come in line with the estimates, but the overall CC growth was softer. We're expecting a CC growth of 0.5%, but it came in at 0.2%. While secondly, the overall pain which we see in the BFSI segment in Americas too, being the largest chunk of the business, those sectors are facing a lot of trouble. While thirdly, overall deal win came in terms of what we're expecting, that was in line with it. But apart from that, the overall guidance commentary for Q1 remains a key focus. Now, what they've given is they've given a negative 2 to 0%, where the street was expecting between 0 to 2%. So we see a negative commentary also. While this negative commentary comes on the back of the soft Q1 that the management is seeing, also they see a segment issue in terms of BFSI. That's why the stock is down and tumbling in trade. Now, in terms of the key brokerages, most of them have given underperformance rating for this particular counter and also cut the target price. Well, now we have something like Jefferies, which has maintained underperforming the particular stock, and what they see is they see overall Q4 was below the estimates. Further, they also make a note that the overall acquisition, the inorganic growth is working well for the management, but the organic side of business is tanking in trade. So all in all, we do see brokerage being bearish on this particular counter.
Right, so brokerages are turning bearish. Thanks a lot, Jasmeet, for that. But hold on. Management also has to say something important for Wipro. Do listen in.
So first and foremost, if you look at our current Q4, the results that we have declared, you know, 3 of the 4 SMUs have actually shown a sequential growth, whether it's Americas 1, Europe or APMEA, and they have shown 3 consecutive quarters of sequential growth. I think we had a challenge in Americas too, of 2 specific customer issues. One was a client changing the direction. Other one is where we won a large deal, but we have not been able to ramp up enough. Second, if you look at the pipeline as of today, it is very secular across the industries and across the markets. And that gives me a good comfort that, you know, despite the geopolitics that's going on, trade and tariffs that are going on, the clients are being very resilient and they're investing in IT. And these areas are AI, data and cloud, which is very predominant. So to me, the opportunities going forward is not only, you know, leveraging AI for reimagining the client process, but also demonstrating AI in their run and operate and change and transform programs as well.
So that's the management commentary coming in, but they've also announced its largest ever buyback worth 15,000 odd crores, offering a 19% premium to the current market price at 250 rupees per share. Soumya joins us with all the details in terms of the calculations and whether what the gains could look like in terms of the acceptance ratio, depending on how the retail participation comes across. Over to you, Soumya.
Well, the buyback amount, that is 15,000 crore, yes, it is the largest ever, and this is the 6th buyback that the company is doing. Price is set at 250 rupees, which was at a premium of nearly 19% compared to yesterday's closing price. Now this premium must have increased. The buyback size is 60 crore. 5.7% of the equity. Now, this is not the largest ever equity that they're buying back. In 2017, they bought back close to 7.1% of the equity. Now, the key question here, what's in it for the retail shareholders? 15% of this buyback amount is reserved for retail shareholders. That is close to 9 crore shares. And retail shareholders are those who own less than 2 lakh rupees of shares worth in Wipro. Now, in case of Wipro, assuming that the share price is at around 211, anyone who owns approximately 950 or less number of shares is a retail shareholder and will be eligible in this criteria, that is the retail criteria of buyback. Now, what could be the gains for the retail shareholders? Now, gains will completely depend on what the acceptance ratio is. And what acceptance ratio is, it depends on how many shares actually the company is buying back from you. Now, this acceptance ratio will completely depend on what kind of response retail shareholders are giving. And in the past, if you look at the acceptance ratio have been in the range of around 53 to 100%, which means that if you're applying for 100 shares, if the acceptance ratio is 100, that means all the shares is something that the company will be buying back. And if the acceptance ratio is 53, then the company will buy back just 53 shares out of the 100 shares that you have applied. As I was mentioning, the acceptance ratio in the past has been in the range of around 53 to 100% that we have seen over 2016 to 2023. But if you look at the current shareholding pattern, given the fact that this buyback is happening at a premium, if all the retail shareholders decide to give their shares for this buyback, then the acceptance ratio could be as low as 25%. So what could be the gains? If acceptance ratio is as low as 25%, then the gains would be just 4.8%. If the acceptance ratio is 50%, then the gains would be 9.5. At 75, 14.3. And if the acceptance ratio is 100%, then the gains would be around 19%. But this is again assuming that the cost price is 211 rupees per share. But do remember that the company is yet to announce the record date for IPO, and investors usually for short-term gains prefer to buy company shares for the buyback near to the record date. And lastly, we are also giving you the share price performance after the buyback that we have seen. In case of Wipro in 2016, it was largely muted, not much of gains. In 2017 was a good year. After the buyback announcement, we have seen solid gains coming in the share price of Wipro. 2019, again, a muted year. 2020, it was mixed. Only 3 months post, we have seen a good comeback. And in 2023 also, post the buyback, the share price performance was largely stable. 3 months gains were around 10%, 1 month gain was 8%, and 1 week gain was close to around 5%.
Okay, so that's with regard to the buyback. Thank you so much for that. Asta, how are you looking at? In fact, let me first welcome in her as well. Asta Jain, Senior Research Analyst at HEM Securities, comes in. Asta, good afternoon. How are you looking at Wipro in terms of earnings? Because now you have Wipro and TCS, both of them reported their numbers. If you look at the PEG ratio, very much similar, but I think there is a little bit of uncertainty when it comes to Wipro versus a TCS and the buyback now with a Wipro. How are you looking at both these counters?
Hi, good afternoon. Talking about Wipro, first of all, numbers were not a great set of a number, and definitely what was not liked by the street, I suppose, is the weak guidance, and I think that is denting the market sentiment right now. So what we believe that company is not able to post strong set of numbers. In fact, there is a strong disconnect between the deal bookings and the revenue growth. So we really need to see that part also. My idea here is with this AI-led, wave going on, definitely the company is witnessing some sort of a market share loss as well. Now talking about buyback also, although buyback company is doing at a premium price, but still I believe that stock can move lower from here on the basis of the weak earnings and the weak guidance which company has presented right now in front of us, and hence we believe that this stock is well poised to move till the level of 185 or so. So right now idea here is those who have this stock in their long-term portfolio should remain holded or should remain invested in this counter. In fact, we are recommending our clients to participate in the buyback as well. But for the new shareholders or new entry, we are recommending just to wait for some more time because we believe that the stock can move more up downside from here.
Right. VST industry is also something which we like to talk about, and if you look at the charts, the smoking hot returns are coming in, and of course to give us more details about it, is this a one-off or is it going to be there going ahead? Joined in by Mahima. Mahima, VST Industries, what's the entire situation? Because other tobacco stocks are also burning high.
Right, so Sharad, first of all, I like the wordplay, but the fact that Q4 numbers have fared out very well as compared to what the street was expecting. I think FY26 volumes were up almost 8%, and that's something was not expected. In Q4 as well, there was an uptick of 3% in terms of volumes. Plus, I think the raw material pricing, because they would have probably stocked up on inventory, and that's why the cost of raw material for them has gone down, and which has aided the margins. That's something that the street has liked. In terms of the Q4 numbers overall, they're not comparable because of the excise duty hike and the GST hike coming in for cigarettes and the removal of cess. So not very comparative when it comes to YOY basis, but management commentary is slightly on a bearish note because what they're saying is that geopolitical instability in the Middle East continues to weigh on the unmanufactured tobacco that they sell, and given the extraordinary tax increase, a challenging year awaits us. But Nuvama has an interesting take on this one. What they're saying is that the worst is behind for all cigarette stocks. Going forward, double-digit volume is something that you cannot expect in FY27, but price hikes will slowly and sharply happen going forward in a staggered manner. They don't expect this tax hikes to be withdrawn, but for the next 2 to 3 years, they're not expecting any more tax hikes coming in for cigarettes. So that's why they're saying that FY27 is probably where there'll be some heat that we'll see, but FY28 onwards, all of this should stabilize. And lastly, in terms of a valuation stand, I think VST is the one which has lowest valuation valuations amongst its peer, trading at 15 times right now, as compared to Godfrey Phillips at 26 times and ITC at 19 times. So this is the overall view of how Q4 has panned out and what's working for VST Industries.
Thanks a lot, Mahima, for that. It seems like worst is over for the tobacco stocks. But Asta, I want to get you on this. First question is definitely going to be the price hikes is coming in. Will that try to offset the expected volume loss going ahead? And remember, this product is an inelastic demand. So I wanted to take your views on this tobacco industry and these tobacco-related stocks.
So yes, we believe that with the price hike, definitely the management will going to take that into effect. But what is major concern right now, which I believe is that the kind of tax increases. In fact, management has also mentioned in their commentary that with the extraordinary tax increase or the tax burden, which is awaiting for them for FY27, definitely this year will be a challenging year for not only VST Industries, but I believe the all companies which are there in the sector. But right now, markets are just celebrating the kind of numbers this company has posted, and hence we are seeing a very, very good, move in the stock prices. But for the long-term purposes, my idea here is just don't enter into this counter at this point of a time, seeing after the results, because in the long term we should work out for the EPS going ahead, and we believe that forward earning multiple basis, definitely that will be something which we really need to look out how the company will able to manage the tax burden which it will be facing in the FY27. So right now just hold this counter, don't make a fresh entry into this counter. This is what we are recommending our client as well. But as for now, we believe that yes, tobacco industry and the counters in this sector may move upside for some time from now. But the real thing is what we need to see is how they will going to behave on the tax front.
Okay, so that's VST. Thank you so much, Asta, for that. Always a pleasure to speak to you. But moving on, Orenflow Solutions is in focus after launching an AI-driven trade finance platform aimed at automating manual, paper-based banking workflows. Joining us on the show to talk about this is Ashish Rai, Group CEO, Orenflow Solutions. Ashish, welcome to the show. My question to you is, the company has unveiled, the AI native trade finance platform. What will this platform do, and what's the kind of impact you're seeing in terms of overall business?
So, hi, Hiral. First of all, thanks for having me. Look, what we have launched is a full end-to-end platform for trade finance that has been built from the ground up to be AI native, right? I think some year back, we launched a banking AI framework called Orient AI, and we've been working on what does it take to really get AI into production inside the banking environment. Trade finance is a very large part of the bank's business, which is extremely rule heavy, document heavy, and we built out both the software as well as the agentic execution on what it needs to look like in the age of AI, right? So I think I built it from ground up. What we call banking software 2.0, first of all, was what our vision was in terms of what we wanted to build out, which is, so what does banking software 2.0 needs to do? It needs to do everything that software 1.0 does, right? Which is where you say a traditional trade finance software like the ones we had as well, it should do everything that software 1.0 does. And then it should do two more things. One, what should the software have to give the rails and the tools to the agents to work on the trade finance process flow, right? How can agents be first-class operators on the trade finance workflow? What tools do they need? What rails do they need? And software should provide that. The third thing is, what tools do the operators need, the human operators need to govern the action of the agents overall, right? So do everything software 1.0 does, plus do those two things. So that's what we built up. We believe this is the first fully AI native trade finance platform built from the ground up. We believe this is completely revolutionary globally, and we see a lot of interest amongst the early clients who we get access to, and we're working on a few pilots with clients, especially in India and the Middle East on this.
Okay, so Ashish, what's the kind of revenue potential that you're seeing out of this? Because I do understand this is a new launch. Your clients must be still testing it out. So the gestation period and the kind of revenues you're expecting.
So we believe, look, overall, our AI play, we've been clear about on the software side, we are going in and rebuilding the software for the banking space, not just trade finance, but also lending, also transaction banking, where we are leading players in, at least in Asia. Right. So that is a very significant TAM that we go after. And plus the agentic execution side, which is more of the operational side of the bank, that again is a significant TAM that we go after. We are, give or take right now, so we are, can't talk of the exact results overall, but we are probably in the range of $150–160 million overall in terms of size of the organization. We believe we've declared the size of the markets overall, but I would put it this way, right? Banking IT is almost a $400 billion IT spend globally. Banking operations is almost a $4 trillion spend globally. When you look at both these spaces, both are potential spaces in which you are operating in the agentic execution on the operations side in terms of what can you do to really improve the productivity inside operations in a bank, and on the software side, we play in both those spaces. We've been growing now for the last 4 years at 30% plus. Right, and we feel that the size of these markets is large enough for us to really continue to power our growth at similar pace.
Got it. You know, my other question and the last one to you would be, let's look at Vision 2030 goals that you have. Very strong. What are the specific milestones that you've set for the US and the European markets this year to actually achieve this? Revenue target of 5,000 crores by FY30. How do you plan to accelerate? Because 30% CAGR is really very ambitious.
Yeah, no, it is ambitious, but so we were 375 crores in FY21, right? We will finish 1,500 crores. I can't talk specific numbers because we've not declared results, but whichever number you take at it, we've been CAGRing at 30% for the last 4 years. Every single year, we are probably the only listed Indian tech firm which has grown 30% plus at least the last 4 years, every single year, right? And I think so. We have a track record of doing that. It does not mean every single year you grow 30% plus like we have. There may be years where you grow less, more. There are the external factors you don't control. There, wars, recessions, all that stuff can happen. But over a longish period of time, are we competitive enough to continue to drive growth? Yes, we are. Is the market large enough? Yes. Is there headroom for growth? There's massive headroom for growth in the segments that we are in, right? Most of these are many, like almost decadal spend opportunities, whether it's the data center space, whether it's a transit space, whether it's a corporate banking space, whether it's AI, right? So we feel very good about continuing to drive growth. We're not necessarily, we don't have firm multi-year guidance going out to 2030. I think that number that you talk about is extrapolation, probably on one of the interviews. And you're right, if we keep doing 30%, we'll get there. I don't see any reason we cannot. The important thing is to stick to the plan. The important thing is to, so externally we have the qualitative statement of Vision 2030, which basically says we will be a top 3 global player in each of the spaces that we've chosen. We feel determined. We feel very good about our strategy to get there. The focus has to be on product superiority as we are. The focus has to be on AI as we've been focusing, and the focus has to be ahead of the world, right? So I think as long as we stay ahead of the curve, as long as we keep investing behind the products, I feel very good that we can keep driving the growth rates that we are at right through 2030.
Okay, so this is going to be interesting to watch out for. But thank you so much, Ashish, for joining in. Always a pleasure to speak to you. But moving on, billionaire industrialist Gautam Adani, chairman of the Adani Group, has become Asia's richest individual, overtaking Reliance Industries chairman Mukesh Ambani, according to the latest Bloomberg Billionaires Index. Gautam Adani's net worth rose to $92.6 billion, placing him at the 19th number globally, while Mukesh Ambani slipped to the 20th position with a net worth of $90.8 billion. Now, the reshuffle at the top highlights the ongoing volatility in global wealth rankings in 2026 amid rising geopolitical tensions and market fluctuations. Sharad is here with more updates. Sharad, over to you.
Thanks a lot for that, Hiral. And there's an important change happening here, and we see there is a reshuffling of the billionaires, and now Gautam Adani has overtaken Mukesh Ambani to take the top spot in the Asian markets. Now, this data we have gathered is from Bloomberg Billionaires Index. Apart from this, he has slipped to the second position in Asia. And let's talk about the numbers, what matters here, and let's just pull out the important numbers, and that's the overall, you could say, net worth. That's around $92.6 billion, and then it's at $90.8 billion. So that is where the strength is coming in when it comes to the net worth. But apart from that, also the net worth has shown a sharp upward move coming in, and they have added $8.1 billion in wealth this year. So that is a very important update coming in. But over here, there is a net worth seeing a decline, and the wealth is declined by almost $16.9 billion this week, with of course Reliance having the highest number of contribution to the net worth as well for Mukesh Ambani. So this is the overall picture which we are gathering in. And remember, in terms of data, two Indian billionaires are sitting side by side on this global wealth index, and this is updated from the Bloomberg as well. Gautam Adani ranks 19th globally, while Mukesh Ambani is just behind in the 20th space. Of course, competition is definitely there, and Elon Musk is maintaining a staggering lead from the world's richest individual, especially with the lead which he is giving to the second most richest person in the world. And that is something to look forward. But how Adani Group has fared in the last 1 month is very much important. Adani Green is up 29%, Adani Power is up 23%, Adani Energy, Adani Total Gas. The majority of the Adani Group companies are in a good green, and a good momentum has come up. And even the larger players in the Nifty index, this includes Adani Ports and Adani Enterprises, both of them are above the 10% mark. So this is the entire picture of Adani Group and the shuffle in the billionaires index as Gautam Adani becomes the richest in the Asian index. Back to you, Hira.
Thank you, Sharad, for that. It's an interesting update that we are picking up so far, but completely out of time on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But as we do that, quick look at the markets right now. When you talk about Nifty 50, it's looking to be in good spirits with that 70-point uptick also coming in. Even when you talk about Sensex, slightly a better picture that you're looking at actually with that 250-point odd uptick also coming in for the Sensex. When you talk about the sectoral picture, that is sharply tilted in the favor of green, so it's FMCG, energy, oil and gas, media, or even consumption for that matter, that are in good shape exactly in that order. FMCG, of course, leading gains. On the flip side, look at that IT index also, and pharma as well as auto just under a little bit of pressure as we speak. Let's also talk about some of these gainers from within the Nifty 50 pack. So there's something like an HUL, Quality Walls, Nestle India, Apollo Hospital, Power Grid, and even something like an Asian Paints that's holding up in good shape right now. And on the flip side, Wipro, on the back of a weaker guidance where they've, turned a little less upbeat in terms of their growth guidance. That's something that's weighing on the stock quite sharply right now. So about 2.5% downtick also coming in for this particular counter as well. When you talk about HDFC Life, that too under pressure on the back of earnings. Sun Pharma, HCL Tech, M&M and Titan Company, some of your other losers from within the Nifty 50 pack as well. But let's also talk about some of these other sectors as well in terms of oil extending losses and gold prices also gaining. That's the entire picture that we should be talking to you about. And that's also something that's definitely in focus also right now in terms of commodities. That entire complex is top of the radar right now on the back of oil extending losses and gold prices gaining. So oil, of course, you do have that slipping as the ceasefire optimism is rising right now. So that's something that you're looking at in terms of triggers for oil prices. And we have been talking about this for a while. Gold prices on the flip side are gaining. So you're seeing a little bit of clawing back losses coming in as far as gold is concerned. So that's the key picture that you should be looking at. In fact, NS Ramaswamy, head commodity desk and CRM at Ventura, joins us right now. Thank you so much, Mr. Ramaswamy, for taking time out and joining us this afternoon. First things first, I wanted to try and understand what you think about the current picture when it comes to oil prices. They seem to be extending losses just a tad bit, but you do have those supply concerns that are very much top of the mind right now in the middle of an active war.
Yeah, basically what's driving the prices is only the supply constraint, which is a fear. But the demand factor is never there in the picture for crude to be discussed. So the oil prices, whether we talk of WTI or the Brent, which is currently in a narrow range of $4 between each, $93 in the WTI and $97 in Brent. So we feel it is still in the range bound. The entire outcome is all dependent on the way the peace talks happens, how the Middle East turmoil is going to get settled further. But on the macroeconomic side of it, if you were to see, it is only the supply constraint which is building up on the price levels, but never in the demand side. It's a long drawn story for the demand to actually rise and for the prices to move up. So we need to see how it is. So it's still in the range bound. We cannot comment whether it's going to further cross the $100 barrel mark in the WTI or maybe beating the 90. But definitely in this range of 92 to 96, it will be a seesaw range.
A little bit of a seesaw range that you're definitely looking at when it comes to oil prices as well. But, are you penciling in higher for longer oil prices by any chance? Because, you do have a bunch of countries, the likes of Qatar, that are saying that you could be looking at the damage that has been made to key oil infrastructure lasting into months to years. That's something that, you're keeping on your radar very much so. So against that entire backdrop, higher for longer oil prices, that's something on your radar.
It will be higher from the pre-war situation, but definitely not like all the expectations in the market talking about $120 per barrel. And those are all a scenario which has been just talked about. But we definitely see it will always range with any news that will come up in the constraint from each Middle East country about the supply or the constraint in the distribution of the oil to the various countries where it is in demand. So that is where we can see probably an upswing which can go beyond 100, but certainly not breaking the range bound of 90 or beyond 100. So we are looking at that range with whatever constraints we are at the moment, but never a scenario where people talk about 120 per barrel or 150 the way it's going to spike. I do not see that really happening, because there will be always an OPEC which will, after the ceasefire and after the constraint will be managed, it will ensure that the supply factor is also maintained. So I don't see it 120 and things like that, the spike in the long term, which you were asking about. It should be around 100, 105, or on the downside, it may even touch around 90. So the seesaw, which I said is the short-term range, long-term is only up to maybe 100, 105.
No, absolutely. And 120, of course, is something that a bunch of brokerages have been talking about. That's something that's been discussed in terms of price levels as well. So you did point that out. So that seems to be a little bit out of the picture for now. But, when you talk about gold prices as well, you do have gold prices that are gaining, and you do have that entire haven narrative that seems to be coming back up. And it was quite surprising at the beginning of the war that, that entire narrative just took a beating, and that's not something that's been top of mind for the markets right now. Seems to be supporting gold prices, bunch of other triggers that you're looking at. What makes it your list?
Yeah. Gold is a very interesting complex to see in the bullion pack, because if you were to see the gold after touching the high of in January 29th, $5,500, it has corrected, it has declined from those peak by almost 27% during March. The March recovery of gold cycle was a low of around $4,090 from 5,500, which is close to around 27%. Basically, the persistence of a very high interest rate regime or a tighter financial conditions are acting. It's actually a near-term headwind for gold. The basic constraint which we can see is inflation is the pressure, the structural forces. If you were to see, it is a simultaneously it is acting. When I say the structural forces, we are seeing that the inflation is giving an upside kick towards gold, whereas the elevated real yields which we are talking of, or the Fed, that the structural things about the interest rate is suppressing that point. So gold is neither a correction nor a recovery. It's a range-bound consolidation phase and not having any directional reversal that could be seen in gold.
No, absolutely, but it's still set for a fourth straight weekly gain, and that's also something that you're looking at. So in terms of fundamental factors, what are you then penciling in going forward as well? Ceteris paribus, given that all things, if they remain constant, what are you then penciling in for gold prices? Or what's the broader setup that seems to be emerging here for gold?
See, the broader setup would be that structural floor, if you were to see, by the central banks. It's not getting disturbed by any rate cut decisions in the short term. So the structural demand is continuously there. If you were to see, even the central banks are in fact bringing back gold home again. If you were to see, almost 59% of the central banks now store at least part of their gold reserves in their domestic situation. So the way the confidence or on the geopolitical conflicts that is happening, so that is very clearly talking about a de-dollarization. There is a talk of, so the basic impact, the shift away from the dollar is apparently seen. So we need to see, after the financial liquidity constraints are all eased out, we would see a lot of buying again happening in the central banks. We have been witnessing that in 22, 23, year 24, almost 1,000 tons. And then maybe 25 was close to around 1,000, or maybe 865 tons. So we are going to see a bounce back, not in 26 at least, but in the year 27 in the long term. The structural base is very, very clear that the central banks are going to buy. So this is not a surprise, and this shift away from the dollar can be a very supportive thing. Adding to that, and the retail segment, if you were to see, there are all sort of ETF and other things. Every small correction, as I said, gold is a consolidation phase. Yes. It's not on a directional reversal. So we are witnessing that every dip, small dip or correction, there is a heavy buying through the ETF channel also. Right. So we are going to see that happening going forward. for the year 26.
No, absolutely, and that makes a lot of sense. In terms of 2025, of course, that was a stellar year for gold, and it's quite difficult to really beat some of those numbers that we've seen coming in for 2025 in any case. But for investors who are sitting on the sidelines and wondering what they should be doing, if you're looking at fresh buys or if you have chips on the table, just very quickly before we let you go, what should be the strategy for gold and silver investors if they have chips on the table and if they're looking for fresh buys right now?
See, the immediate economic data, which is very, very crucial, is the April 29th FOMC meeting of US. So that is going to be the formal policy anchor for gold. So if you were to see, there are three scenarios which can spring up for 29th April. It could be hawkish note. If that is an hawkish note, gold is likely to trace back with a downward pressure, and the March low can be tested again, which we just now talked about, $4,090, which is a scenario when it will become a hawkish decision from the FOMC. If it were to be a normal base case situation, the gold consolidation can take it a swing between $4,600 and $4,700 or so. But the positive thing is, if we are going to see not much of, it's only the energy spike in the CPI inflation data. If that is the case, after the ceasefire and all, it could also be a dovish stance which the Fed may take. In that case, gold is likely to recover very fast and likely to boom up to close to $4,950 to $5,000. So we are witnessing that. So when a retail customer is there, when he's trying to take a positions, we need to wait probably till April 29th and then take a call which way the decision has been taken. And all the three scenarios which I just now discussed.
No, absolutely, and thank you so much for summing that up for us very brilliantly, and thank you so much, Mr. Ramaswamy, for joining us and taking time out to give us all of those insights. So there you go, that's what you should be doing if you're looking at fresh buys or if you have chips on the table when it comes to gold or silver for that matter. But let's also look at the KP group that is in focus, particularly KPI Green Energy that's in focus after the company gets interstate power trading license from CERC as well. In fact, my colleague Varsha spoke to Afan Farooq Patel, whole-time director at KP Group, about the kind of benefits and the synergies that the company is going to be having after this particular license. Let's go across and listen into a slice of that conversation.
Afan Farooq Patel, who is whole-time director at KP Group. Mr. Patel, welcome at NDTV Profit. Always pleasure to have you. Just wanted to understand, how does this change your business model beyond generation?
Hi Varsha. First of all, good morning and thank you for inviting us. We have got the KPI have got CERC power trading license. So I want to give you a small brief about the power trading license. So first of all, in renewable sector, there are two segments. One is producing of power and one is the selling of power. We were producing the power in the Gujarat and we were selling that power in the Gujarat only. Now, by this license, we can go beyond the Gujarat. We can sell the power anywhere in the country. So by this license, our client base have increased. So this is the major benefit of getting this license. So now we will be able to sell the power anywhere in the country. We can buy the power from anywhere in the country, and we can sell that power anywhere in the country. Also, now we can provide a better solution in our business model of RTC and FDRE.
Understood. So, sir, what is the incremental revenue opportunity you are seeing? Maybe, in the next 2 years, what's the revenue contribution you're expecting from this trading business? Because I think now this is the, beyond generation, this is also one of the business that you would be doing in future.
Yes, Varsha. So, first of all, I will give you some brief about the license category. We have got the category 4 license, which means we can trade 2000 million units. As we will sell this unit, we will go upward and we can go to no cap category. So 2000 million units. So you can understand it is approximately 200 crores unit of trading will be done. So as we as a group, our CMD sir have already given us the target to give the 50 to 60% revenue growth year on year. So 100% by getting this license and by doing this business, we will increase our revenue 50 to 60%, and it will impact our existing business, our existing IPP portfolio. So majorly our IPP portfolio will be increased, and its revenue will be included by getting this license.
Right. So, Mr. Patel, any kind of ballpark range, if you could give us, what proportion or how much this will contribute to your revenue in percentage terms, maybe in the next 2 years?
Varsha, for understanding this, you have to understand that we are Gujarat-based company, and the license in the license for revenue part in non-solar hours, we can get the more revenue. And as you know, we can in renewable have two components, wind and solar. So in wind, Gujarat is the highest potential site in the overall country. So we will produce the more and more power from the wind energy and also solar energy, and we will sell it after non-solar. So its revenue which will be generated, it will add on to our IPP portfolio and our revenue. We cannot go specifically 20% or 10%, but yes, it will impact significantly in our revenue.
And also, Mr. Patel, what technologies are you, building up to scale this platform?
Varsha, for this, first we have to understand, for trading already there are the platforms. So first we need the platform for trading, which is PX platform. Then another thing for trading which we need is more important is when to buy, when to sell. So it is more about data driven. So we need data analytics and forecasting models, and scheduling and open access system. So this is the part for trading. And for generating, already we are generating power from solar and wind. As you know that our group is from last 2 decades, we are generating power from solar and wind. So this is the platforms, and these are the technologies which are required for doing this business, trading business.
Right. And Mr. Patel, will this be a margin accretive one or will be driven by volume?
It will be both margin and also volume. How margin? In margin, as you know, country demand after non-solar hours, we get the more price. So we will, by the help of data analytics and forecasting model, we will build our model such that we get more and more margin. So margins are variable, but yes, we will focus how we get more and more margin. We will make such type of models.
All right, and there you go. So that's the word coming in as far as KPI green then is concerned. But let's move on to an exclusive now. The NSE IPO is gathering momentum. The government is in talks with top PSU shareholders to participate in the offer for sale ahead of the April 27th proposal deadline. In fact, Shrimi is joining in with some more details here. Shrimi.
Yeah, that's right. What we're picking up that the government has reached out to some of the top PSU which holds chunky stake in NSE to participate in the exchange OFS. And this is coming just days ahead of the exchange request for proposal. Deadline of that is ending on April 27th. And what we are getting sense that most PSU shareholders are now in the process of submitting their plans to dilute stake as part of the upcoming IPO, and NSE expect PSU submission closer to the deadline, and this is important amid the chatter around weak responses. What we are getting sense that NSE IPO is on track. In fact, they expect 4.5% of dilution in line and in fact more than what minimum public float, coming at 2.5% as per the SEBI mandate. Now, do remember the fact that this is crucial as it will deepen the entire NSE proposed IPO. And if you see the chart, which clearly says that the total PSU holding is around 31, slightly over 31%. And at the top of that, LIC holds around slightly over 10%, and followed by stock holding and SBI, which is between 3.5% and 4.5%. Now, this is also crucial because now what market will watch that how much actually stake is coming on the table and at what valuation. And we reached out to NSE for the comment. They reiterated the fact that IPO has been approved by board on 6th of February, and there's no further comment to make, but this is coming after SEBI NOC in the NSE matter. So we are watching and closely looking at the story because this is going to be the most anticipated listing in India stock market.
Absolutely, and thank you so much, Shimi, for joining us with all of those details. Let's also move on to some other news and updates as well. An FIR has been registered against Anil Agarwal, chairman of Vedanta Resources, along with company manager Devendra Patel and other officials. And this is in connection with the boiler blast at the Vedanta power plant in Chhattisgarh Sakti district that killed 20 workers. NDTV's correspondent Prakash Sahu joins us with some more details here. Prakash.
अभी हम शक्ति जिले के वेदांता पावर प्लांट के गेट पर मौजूद हैं। ये वही प्लांट है जिसने 21 मजदूरों को निगल लिया है और अब तक जो है 15 मजदूर जिंदगी और मौत के बीच जूझ रहे हैं। आपको तस्वीर दिखाते हैं, गेट पर हम मौजूद हैं। यही वो प्लांट है जहां पर जो है 14 अप्रैल को बॉयलर के ट्यूब में ब्लास्ट होता है और जो यहाँ पर एक भयावह स्थिति निर्मित हो जाती है और कहीं न कहीं इससे अब तक जो है 21 मजदूरों ने जान गंवा दी है। सबसे खास बात बता दूं कि यहाँ पर जो है घटना स्थल पर मौजूद बॉयलर मुख्य निरीक्षक द्वारा जो है जांच तकनीकी रिपोर्ट में यह उल्लेख किया गया है कि जो बॉयलर फर्नेस के भीतर जो है अधिक मात्रा में ईंधन जमा हो गया था, जिसके बाद जो है ये जो ब्लास्ट है वो हुआ है। तो कहीं ना कहीं एफएसएल की टीम ने भी एक रिपोर्ट जारी किया है जिसमें ईंधन जो है अधिक हो जाने की वजह से जो ब्लास्ट है उसकी वजह बताई गई। तो कहीं ना कहीं एक बड़ा मामला निकल के सामने आया है और कई सवाल खड़े हो रहे हैं क्योंकि इस मामले में लगातार जो है प्लांट बंद था, तो आखिर इस मामले में ध्यान क्यों नहीं दिया गया, जिसके वजह से जो 21 मजदूर हैं उन्होंने जान गंवा दी है। और इस मामले में अब मैं बता दूं कि लगातार कार्रवाई की जा रही है और पुलिस विभाग ने जो है प्लांट के जो चेयरमैन है अनिल अग्रवाल, प्रबंधक है और अन्य जो है लोगों के खिलाफ 8 से 10 लोगों के खिलाफ एफआईआर दर्ज कर दी गई है।
Alright, then there you go. That's the unfortunate update also coming in terms of that particular boiler blast. The probe, of course, is underway, and that's something that we should be looking at later as well. But first things first, let's take a look at Gujarat Gas and VST Industries. Those two counters are in focus and buzzing away in trade. There you go. That's about 8% uptick coming in. For something like a Gujarat Gas, when you talk about VST Industries, it's about a 10.5% uptick. Nomura, in fact, has upgraded the counter to a buy rating. They're talking about how the Iran crisis, that's going to be providing multiple tailwinds when it comes to this particular counter, and the correction could be creating attractive entry points as well. And their outlook in the Morbi ceramic cluster is quite hopeful as well. Domestic PNG getting a tailwind from government push amid LPG shortage, also something that they've in fact managed to flag. Other than that, they're also talking about how they've raised the FY27 EBITDA estimates also, and that's something that you're looking at in terms of accounting for better margins, and that's the reason why that particular stock is buzzing away in trade, with that sort of outlook also shaping what the next few quarters are going to be looking like. When you talk about something like a VST Industries, you're looking at the fourth quarter on a standalone basis where the revenue has seen quite the uptick. So about a 31% uptick coming in for the revenue. When you talk about EBITDA margins, they're also at 45.6%, which compares to 19.9%. So that counter, of course, buzzing away in trade. But that's all the time that we have on the show. Thank you so much for tuning in.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Mahima Vachhrajani. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. So what's on the show today? Firstly, we'll be speaking with the management of GHV Infra. Now, the company's market capitalization is just 2,200 crore rupees, but in the last few days of a couple of months, the company has won orders worth nearly 3,200 crore rupees. But yet, we are not seeing any big move coming into the share price. So, what's the way forward is something that we'll try to decode with the management today on the show. Now, apart from that, we'll be talking about stocks like VST Industries. Strong set of numbers coming in, and this has also led to a bump up in other cigarette stocks. What led to this strong performance and what lies ahead is something that you'll get to know on the show today. Apart from that, a host of other stocks, firstly like Kelton Tech, strong business update coming in, collections are up 18%, stocks been gaining in trade. Then shrimp stocks are also buzzing. Avanti Feeds, Apex Frozen Food on the back of FY 2026 marine data, which is up nearly 14% on a YOY basis. This data came in yesterday post-market, and that's the reason we are seeing this kind of a move in all the counters in trade today. And lastly, we'll be also speaking about Ram Ratna Wires, and the stock is up nearly 21% in the last 1 month. Q3 numbers were on a strong footing. Can we see similar set of numbers in Q4 also is something that we'll try to discuss with our fundamental guest on the show today. Now, if you look at the markets, quite a stable day. In fact, market is cruising above the 24,200 and closing to 24,300 level now, just 10 points shy of that. We are up around 90 points in trade, and these gains are largely led by Reliance Industries and HUL in trade. If you look at the sectoral indices, it's clearly the FMCG names that have been gaining in trade. All the top F&O gainers, other than Angel One, are FMCG names, and the index is up nearly 2.5% after a very long time that we are seeing this kind of move. And on the flip side, it's only Nifty IT index which is trading in red. Nifty Pharma largely flat on the trade. But when it comes to the Nifty small cap index, that's also up nearly 1.5% in trade. But which are the key stocks that have been buzzing?
Right, so Soumit, as you rightly mentioned, the broader markets is doing much better than what the benchmark is doing right now. Both the mid-cap 150 and the small-cap 250 trading at its day's high point, both of them seeing gains of over 1% each. For small-cap names specifically, on the positive side, you have counters like Bharat Wire, which is seeing an uptick of around 15-odd%. Ram Ratna Wires, one of the stocks that we're going to talk about in this show as well, up 13%. You have Muthoot Cap, which is also up around 12-odd%. Kolte Patil, Om Power, VSC Industries, all these counters ranging and growing in that range of 10%. Even Ugro Capital is doing fairly well today, up 10%. Something like Satin Credit Care as well as HMA Agro, India Bulls continues yet another day of gains. I think 3 to 4 odd days it's gained over 20-25 odd percent on this one. Global Spirits is also seeing gains of what 6 odd percent. But on the flip side, you have some counters which are also seeing profit booking today. Electro Steel Castings is one of them, which is down by about 4 odd percent. You have RM Drip and Springs as well, seeing around profit booking of 3 odd percent. Dev Accelerator also down by about 2 odd percent, and Arcade Developers is also down by about 2 odd percent. So that's with regards to where some of these names go, and that's indicative in the advanced decline ratio as well when it comes to the overall broad end of spectrum. But as promised, we're today going to talk about GHV Infra. Now it's an interesting company because in the past couple of months, as Somit was mentioning earlier as well, right, they've received order over 3,200 odd crores with a company that has a market capitalization of around 2,200 odd crores. But the stock movement has not been very impressive. To understand as to what's the outlook going forward and what's the execution timelines looking like for these orders that have come in, we're joined by Ajay Hans, who's the Managing Director at GHV Infra Projects, joining us now. Ajay, thank you so much for taking out the time. Mahima this side. My first question to you is, of course, with regards to all these order wins that have come in the last 2.5 months, right? A huge pile of orders that have order info that has come in for you. Just want to understand as to, first of all, what is your total order book standing at right now, and how much of it do you expect to be executed in FY27? What is the conversion ratio that you're looking at?
Right. Thanks, Mahima, for connecting us. And I think Sumit is also going to join on this conference. So it's great talking to you. A very valid question. As of now, we have an order book of around 12,000 crore. Including these 3,000 crore orders, what we have received like 1250 crore from APCO Infra for Jalna Nanded project. And then we have received an order from Dr. America Inc. Dayton, USA for a project of LSTK for renewable natural gas project and fertilizer system, which will be basically providing ammonia water. And it's a technology-based project based at Versailles, Ohio. And then another project from, again from APCO Infratech, which is around 815 for General Civil Works. So if you see, prior to that early part of April, we received some orders which is related to car shed. These are small orders. So we are taking orders of small duration and long duration infrastructure, industrial. Then we are entering into a couple of other new areas like data centers. We also bagged some orders in solar project in the past. We are also doing water pipeline project. So we have a huge portfolio, well diversified portfolio to balance it out.
So from what I can see is your revenue recognition has picked up in just last couple of quarters. So it might be quite difficult for any investor to gauge what lies ahead. So if you could just give us some understanding of what is the kind of growth or internal targets that you have for FY27, specifically when it comes to the top line and the bottom line.
Okay. These projects basically of 12,000 crore, we need to execute in next time frame of around 3 to 4 years, within 3 to 4 years period of time. And all are healthy order book. So it will convert to the revenue and the bottom line improvement over the period of time. So as we are already in April, so by the time we get notice to proceed for these orders and the work starts, so from these new orders of 3,000, we may not get major revenue in the current financial year. We might be doing engineering, which will give a small revenue out of this. But out of the 9,000 crore order book, what we already have prior to this, that will definitely improve our both top line, bottom line over a period of time. So we expect to grow in the current year at least double what we will be closing in the current financial year, and then continue to grow at a pace of 25 to 30% for next couple of years at least.
And margins would remain in the 20% range?
No, I don't think our figures show that kind of margin. If you see, we are making an EBITDA of around 13 to 14%, which is the industry standard. Of course, if some of the technological project will have a better margins, so we will have a mix of such projects, higher margin and normal margin projects. So it should be in a decent range, decent double figure.
Got it. Ajay, with regards to the recent West Asia conflict, a lot of these infra companies as well as real estate companies are getting impacted because of raw material prices going up, plus supply chain disruptions as well. Are you penciling anything of that sort coming in, any kind of hit that you're going to take in FY26 books or going forward in FY27 as well?
Look, we have recently taken an order in Middle East, that is in Ras Al Khaimah Economic Zone. And this is for developing a manufacturing, smart manufacturing hub within that area, which includes 0.9 million square feet of industrial development and around 2.4 million square feet of state-of-the-art commercial office development and the associated infrastructure works. We all know that today is the demand of manufacturing across the world in all countries, including India and other West Asia. So I don't think this is some smaller hit might be there for some time, but it has to again grow at a bigger pace, as this project is basically a plug and play kind of a facility for manufacturing latest technology manufacturing products like semiconductors, aircraft engines, solar panels, EVT oil. So all these technology based products are the demand of the day, and it will continue.
Okay, your order book currently is at around 12,000 crore rupees. Just wanted to understand, do you have more capacity to take new orders or your hands are full at this moment?
So we are definitely looking forward to take new orders. We feel that another 7 to 8,000 crore of orders we can book within this financial year. And as far as the capacity to do and execute, we are being supported by our group. Our promoter, Mr. Jahid Vijapura, has been a very long standing for last 70 years in business, and we have a strong financials. So we are also organizing further funds, working capital arrangements to take care of these projects. So we are sure that we will be growing at a decent pace, and we have capacity to take some more orders.
Okay, on some more orders, I just wanted to understand this part as well. Could you just give us some understanding of for how much, what is the total worth of orders for which you have placed bids which are yet to open, and usually what has been the success ratio for GHV Infra?
Look, we are very selectively bidding, as we have sufficient order book as of now. So we are selecting the sectors also where we can do profitable business. Like one of the area we have looked into right now to enter into the data center projects, turnkey execution, which hardly anybody is available who can take care of the turnkey execution. So we have created a structure where we have tied up with a party who can provide support for complete engineering and compliances for these data centers. And then we will be doing a turnkey project. Similarly, we have also developed one port projects execution vertical. So where not much of parties are there. So we are looking forward to enter into those areas also. So we are mostly concentrating a mix of private and the subcontracting of government jobs, which are profitable. So there's enough scope available to take care of these jobs, plus the new sectors what we are looking forward to enter into.
Interesting. Ajay, considering all of this, considering the order book visibility that you have, you planning to follow into data centers as well, any plans of fundraising on the cards, considering that you will be going ahead and executing all of these orders that are already there?
So we are exploring all opportunities for the funding, including all kind of, including Indian funding and for our foreign projects funding. So there are certain products which are not available in India. We are exploring to get funding from outside India. So all those efforts are on, and it's a continuous exercise. And that's where order building and arranging funding are two parallel things which have to run hand in hand. So we are making all our efforts to see that the balance is maintained.
Okay. All right, Ajay, thank you so much for taking out the time and being so candid with all the answers that you gave us. We look forward to speaking to you once again when your numbers are out in Q4. Thank you so much for taking out the time.
Thanks a lot for connecting, and thank you.
All right. So that was the management, of course, that we spoke to of GHV Infra. Significant order wins coming in for this one. But let's also welcome in Gaurang Shah, Senior Vice President at Geojit Investments, joining us now. Gaurang, a very good afternoon to you. Thank you so much for taking the time. You heard the management, right, Gaurang? I'm sure it's a small company. You might not have coverage, but any view on how all of these infrastructure companies right now are sitting on huge order books, but execution is something that we need to watch out for?
Hi, Mahima. Good afternoon to all your viewers of NDTV Profit, and to you and to Somit. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Mahima, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we share similar investment ideas with our clients. They might have their investment interest. So I think what Ajay was just referring to in terms of two positivities that I could point out in that brief conversation that you were having. One is that no significant impact of this Middle East conflict. That is the positive. And the second positive is that they are venturing into data centers. And data centers normally are, highly complex turnkey projects. And as he was mentioning, there are no peer competitions to, as of now, compete with them. So that's a positive. I don't have any specific coverage on GHV Infra, so I won't give any buys and hold. But on the sector itself, buy and hold, we are positive. We have coverage on two companies, or rather three, if you will, or rather four, to be very honest. Dilip Buildcon, HG Infra, NCC Limited, and there is a huge large cap company, L&T, which has got diversified businesses, and the contribution companies from all the business verticals quite thick. And the order book is also spread across all the four or five verticals. So I think what happens now, Mahima, is that if we do need to get up to the higher GDP growth rate, there are two prominent things that the government at center and at state has to do. That is create new infrastructure. And the second one is modernize the existing infrastructure. So, and in the budget itself, we've heard from the Honorable Finance Minister a decisive budgetary allocation towards this creation of infrastructure and modernized infrastructure. So the sector looks quite positive.
Let's go across to Jasmeet to understand what's been buzzing when it comes to shrimp companies like Avanti Feeds, Apex Frozen, Coastal Corp. All have been gaining on the back of the export data. What is that data suggesting, Jasmeet?
Well, thank you for that. If you look at the overall data, that has turned out to be quite positive for all the companies. The overall export data for FY26 saw an uptick of roughly 14% and reached the 8.43 billion. While, mind you all, this uptick has come amid the overall US tariff and the West Asian war. So that's why it's positive sign of the overall industry, and all the stocks based out of seafood and the shrimp business are buzzing in today's trade. Let's quickly understand more details. Well, the export-led shrimp players are the key beneficiary when it comes to the global demand, which has stayed healthy, and for this time they've also noticed US being the largest importer of the overall shrimp and other seafoods. We have also noticed the demand coming in from the non-US region as well, followed by the China. So it creates an overall up move in terms of the other geographies as well. Now, if you look at the key players of the Avanti Feed, it's up almost 6%. This is on the back of that strong feed and shrimp export integration. If you look at the overall management commentary, they say the overall UK and EU deal is something that's very positive for the company going ahead, and they see overall demand to increase in those regions as well. Now, something like an Apex Frozen Food, it's up almost 13%, while it has a high exposure to US and majority of its revenue comes from the US geography. And in terms of the management commentary, they see the overall FTA to increase the ready-to-make orders for the particular company going ahead. While they haven't baked in those demands so far, but going ahead they expect in FY27 the overall demand to pan out for the company. Well, lastly I have Coastal Corp as well. It's up nearly 7%. While this company focuses on the processed shrimp exports, further the scaling capacity and the value-added products is something that's benefiting the margins for the particular counter. Well, lastly the key things to watch out will be the overall geopolitical tension which is going on currently, which might impact the shrimp industry, and this is a recovery that they have been seeing over last 1 year. Further, the US consumption trend also depends a lot because the US is the biggest exporter of shrimp from India. Lastly, the currency movement impacts the overall realization, so any change in the currency rates will be in focus. So all in all, we do see a good day for all the marine exporters in terms of seafood and shrimp business.
Gaurang, there are a host of stocks that are actually listed in this space: Apex, Avanti, Coastal Corp. Any one of them you track? Any view on this sector specifically?
So before I comment on that, Somit, one thing that I would want to highlight, which your colleague would also agree with, is any kind of a shocker statement from President Trump. We all know the flip and flop that he does. Any statement on this particular sector in terms of tariff or any kind of negative comments could play a havoc in this sector, as we've seen in the past when the tariff talk was going on. As a disclosure, and to answer your question, on both these companies, Avanti Feed and Apex Frozen Food, we have a positive coverage. And one positive that I think personally, Somit, that will emerge as a tailwind positive for the aquaculture sector overall is the FTAs that are signed with various countries. I think India has signed almost about 7 to 8 FTAs. What I'm given to understand as per reports is that on 24th of April, we'll also sign one more FTA with New Zealand, if I'm not mistaken. And these new FTAs would be a huge opportunity for aquaculture companies to export. So we remain positive on Avanti Feeds and Apex Frozen Food. As a disclosure, we have a buy coverage on both.
Okay, all right. So that's the view coming in on all of these marine exporters. But time to slip into a very, very short break. But we'll be right back, getting you more small cap buzzes on the other end, on the other side of the show. So do stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. Before we go on to our next small cap stock, let's get in Sharat to understand what's been buzzing on the FNO side.
Okay. I think there is some audio issue that we are facing with Sharad's mic. I think we'll get you the FNO cues soon. But I think let's take and talk about our next small cap buzzer. I think Kelton Tech is in focus on the back of its Q4 updates coming in. And I think we have Parth joining by to give us a perspective on how Q4 has panned out for Kelton Tech. Parth, over to you. Oh, okay, I think we will get Parth in just a minute, but the stock has seen an uptick of almost 11 to 12%, touched an intraday high of 11 to 12% in trade today, and right now trading around 9.2% higher. With regards to how the Q4 business update has come in, I think the stock is reacting on the back of that. If we can try to pull up the charts for the next, for the last 6 months or so, the stock, of course, was under pressure. But Parth, over to you with regards to how Q4 has panned out. Positive, of course, for sure. That's what the stock is reacting to.
Thanks a lot, Mahima. So, Kelton Tech is a real estate company that dominates in the Pune residential market. They also have a presence in the markets of Mumbai and Bangalore as well. In fact, in FY26, Blackstone acquired 40% of the company in a two-phase transaction. Now, the reason why the stock is in focus today is because they have reported their last quarter operational highlights, in which the company saw a very strong performance driven by their new launches. The company's realizations were at record levels due to the increased contribution from markets like Mumbai, and they also reported a record number in quarterly and annual collections as well. If we have a look at the Q4 numbers, then their sales value stood at 714 crores, which was up 18% quarter on quarter and 13% YOY. Their sales volume stood at 7.4 lakh square feet, which was up 7% QOQ and down 7% year on year, while realization stood at 9,601 per square feet, growing at 10% QOQ and 21% YOY. So this is the main reason why the stock has gained over 10% today. In fact, in the last 1 week, the stock is up over 20%. So a really good update from the company, and let's see how it goes for them in the upcoming quarters.
Okay, thank you so much, Parth, for getting us those details. Gaurang, any view on Kote Patil?
We like the sector, Mahima. Unfortunately, we used to cover Kote Patil, but our targets were in place, and post that we've not initiated further coverage. But like I mentioned, we are positive on the sector real estate. One small underline for the benefit of your viewers, that if they are able to understand and do diligence, have some study, and then decide to invest in real estate related companies, please understand that even after many regulations that have been changed for bringing in discipline in this sector, Mahima, this sector still remains a high beta. In good markets, it will outperform, and in bad markets, it will lead from the front to go down. Having said that, the Indian real estate market looks quite robust. I was reading certain reports over the last weekend. Mumbai, especially in Mumbai, Mahima, the real estate market has shown a tremendous amount of resilience. And the registration for both commercial and residential properties have been elevated compared to other metros. Having said that, positive coverage on DLF, Godrej Properties, Prestige Estates, Shobha Limited, and Oberoi Realty.
Well, thank you, Gaurang. Thank you for joining us and giving us your perspectives on the stocks that we discussed today on the show. And before we end the show, let's get in Sharad again to understand what's been buzzing on the F&O side.
Well, largely we have seen sector-specific moves happening, but nevertheless the technicals are showing good support for both BankX and Sensex, and see the green has increased more. Largely a little bit of sell-off in HCL Tech and Sun Pharma, but overall Adani Group of stocks, FMCG stocks, all holding the fort properly, and we are expected to go into the next week also with a positive momentum in the trade. Let's look at the stocks key long build-up, what's happening there. And we see Angel One, after its con call, the stock has gone up as well. The stock is up 11%, and from FMCG pack, Colgate is one of the top gainers, is up 6% as well. Let's look at the short covering candidates, what's there in focus. Let's just pull out the short covering. KEI Industries comes as a new entrant since the last time we spoke, around 3% it's up. JSPL also showing good volumes at almost 5% of gains coming in. But let's look at the long unwindings to see if any trade is there. No, it's not there as such. So let's move on to the short build-up to see whether the momentum is happening. Kalyan Jewellers, the jewelry stocks are seeing some kind of a pressure as well. Stock is down 2%, while HDFC Life, on the back of its earnings, a little bit of recovery has come in, but nevertheless short positions are still there. So these are the stocks which should be in your radar in the F&O space.
Thank you, Sharad. Thank you for that F&O setup. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the self-prospectus and the tranche 1 prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the
Hello and welcome. You're watching Ask Profit, the afternoon edition. I'm Mahima Vacharani and with me is Puneet Zaveri. Puneet has been teasing me throughout the day, so I'm mad at him today. But, let's take a quick look as to how the markets are doing right now. The Nifty 50 is trading well above the 24,200 levels. I think the important level to watch right now will be, we've surpassed the 24,300 levels. I think my website is not loading, but 24,300 levels is what we've breached as we speak. Almost at its day's high point for the Nifty 50, 110 points of an uptick is what we're seeing. But the key question will be whether we'll be able to sustain those levels or not by the end of this day, right? So we'll have to wait and watch out for that. But with regards to where the Nifty 50 heat map goes, I think a large chunk of that uptick is coming in from counters from FMCG names. You have HUL, Reliance, doing fairly well. Nestle also up 2%. JSW Steel or Asian Paints are some of the names that are doing fairly well. Wipro continues to be under pressure on the back of the numbers that it gave, down by about almost 3%. HDFC Life also on the back of numbers, down 2%. Sun Pharma, HCL Tech, M&M are some of the other names under pressure. But let's try to pull up the sectoral heat map. That's an interesting one to watch out for today, because after a really long time, we're seeing good gains coming in on FMCG. I mean, just a few days ago, we were talking about how FMCG in the past 3 years has given negative returns. This year also, in fact, year to date, considering today's move, should be down by about 11% still. But we'll have to wait and watch out for whether that reverses this year or not. Nifty ID, the only one in the red, down by about 0.2%. But Nifty Energy, Nifty Media, as well as a lot of your Nifty Realty, Nifty Metal doing fairly well. Let's pull up the advanced decline ratio. That's an interesting one because both the mid cap 150 and the small cap 250 are also almost trading at its day's high point, and you have around 1900 odd advances versus that of 600 odd decline. So more than that 3:1 ratio is what we are seeing on in the favor of the bulls. But Puneet, with regards to where the broader markets go, I think a lot of the action is coming in from the news flow, the earnings, etc.
Most certainly, and 24,300, it's a key positive and a lot more positive at this point of time for the mid cap 152. Now across the 22,000 mark, up 1.4% for the small cap 250, and the BSE 500 also reflects that momentum across a bunch of stocks today. So in the gainers, you see VST Industries. You saw that while the hike has been happened on the cigarettes on January 1st, in Q4 volumes are expected to be strong, and VST results does show that. So that should augur well for Godfrey Phillips as well as ITC. Angel One on the back of results is up 10%. So is MMTC, Ircon, Gujarat Gas as well as Aegis Logistics. And while on the declines, not too pronounced compared to the gains. So we'll take it at this point of time. The BSE 500 up 271 points. But let me welcome in Ruchit Jain, the Vice President of Equity Technical Research at Motilal Oswal Financial Services, and Chakri Ropia joining us, CIO of course at LGT Wealth, joining us as well. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first query right away from Ekam Barai, who's a regular viewer. He has a question on NSDL. He's been holding the shares at roughly around 2023 and asking what he should do with this counter now. What would you recommend here? We'll correct the buying price on the screen right now, but what's your view here, Chakri? It's been one stock after listing and after those gains has slightly cooled off. What would be your recommendation?
For a trade maybe, but as an investment, it's, as a platform, it's kind of the margins are going down. So this as a business, I think, will earn lower than expected return. So I wouldn't really hold on to it.
Okay, all right. So that's the view coming in on NSDL. The next question that we have is coming in from Ekam Barai, I think.
No, we got that one.
We got that one. Okay, the next one is from Siju, is writing us from Qatar, asking about FMCG stocks and saying that he would like to add one counter in his portfolio considering the high growth potential. He's a long-term investor. He's looking at 3 to 5 years point of view. Ruchit, no, since this is 3 to 5, Chakri, I'll stick with you for this one. FMCG names, any of these names that you're liking for seeing an uptick in trade today, but considering the tailwinds that are already there with regards to your monsoons coming in, with raw material prices going up, etc., this year is still a question mark for this sector.
Yes, it is, and the stocks have underperformed. Companies like Dabur have lost far more because of partly related to the war, the Middle Eastern sales. Hindustan Lever is also down. So, from that perspective, these are worth it. If you're a fairly long-term investor, I would buy into a Dabur, I would buy into a Hindustan Unilever.
Interesting one, Hindustan Unilever, Chakri, because stock's been largely underperforming, right? Over the last 5 years or so, we've also seen that there's not too much on the ground. What's making you positive about HUL at this point of time? And it's just likely the time correction over years that we've seen now?
You're right, and the stock has not done well over the last 5 years. Now they have a new CEO. Now they want to expand into more higher margin products than they were in the last 5 years. So while the verdict is still out, whether they will actually be able to achieve, but their goals of moving towards higher margin should help the stock price, especially given it's underperformed.
Got that view, Chakri. But the next question coming in now from Soumya from Bangalore. She holds 100 shares of BEL at 456 and asking a short-term view. Now, it's largely known, Ruchit, that fundamentally very strong counter, and we're starting to see those second leg of rally on the defense stocks. Is BEL one of them on the charts for you?
Yeah, overall trend seems to be positive for BEL. Post the recent correction, the stock formed a support base around 400 levels and again has resumed its broader uptrend. From a near-term perspective, 475, 480 can be expected in next few trading sessions. So one can continue to hold the existing long positions.
Okay, we've got our first caller for this show. Chandrasekhar, I think, is calling us from Bengaluru. A very good afternoon to you, Chandrasekhar. What's your query about?
Yeah, good afternoon, madam. Actually, I purchased Amar Raja batteries at the price of 996. So should I add more or to average, or what should I do?
What is the time horizon that you're looking at?
Long term.
Long term. Okay. Chakri, I'll come to you on this one. Amara Raja, any view?
Amara Raja is one of the leaders in batteries along with Exide. But however, with the new storage requirements of rather batteries storage requirement going up and lithium ion going to come up, Amara Raja, while is also expanding in that, it's in a separate, another subsidiary company. So Amara Raja, I would not really hold on to it given the shift that's happening in the battery industry.
Got that view, and we've seen a lot of renewable players also come out with BESS products, so that kind of advantage that was expected for the battery makers might not actually be there at this point of time, but lithium ion definitely an opportunity to look forward to, but backdated, as Chakri also pointed out. The next question coming in on MRF, our viewer V Mulli from Bangalore, who is a regular viewer of course, hold shares at 1,39,023. Now Ruchit, he's holding 3 shares and asking if 8 to 10% kind of a return profile could be the expectation over the next 6 months. Is that something that's reasonable? What would you recommend?
So possible pullback move towards 148, 147,000, 148,000 can be expected. So as of now, can hold the existing long positions, maybe around 147, 148. If it comes, one can take a review again.
Okay, all right. So that's the view coming in on MRF. The next one that we have is on Tata Elxsi. Venkat from Hyderabad is bought at the price of 7,400. He's got 44 shares in his portfolio. He's sitting on a loss right now, but wants to know the targets on this one. Ruchit, I'll stick with you for this. Your view on Tata Elxsi, because he's sitting on a significant amount of loss.
So I think the IT space overall has not done that well. But last few weeks we have seen some pullback move in many of the IT names. The mid-cap IT witnessed a good volumes in last couple of trading sessions. So in case if this momentum continues, then one can expect levels around 4,850 to 4,900 immediately, which needs to get surpassed for any further trended move towards 5,300 levels. So 4,900, 4,950 would be the first level that one should watch out for as a resistance. If it gets surpassed, then can expect 5,300 down the charts.
5,300 could be something expected as Ruchit recommends on Tata Elxsi, but a hold for now. The next question coming in on Marico. Asta from Delhi actually is holding shares at 730, asking if she should sell right now actually. Chakri, it's been one of the FMCG counters that actually has done well despite the volatility seen in copra prices and has held ground, especially with their digital strategy. Would you recommend selling right now or continue to hold? Because it has been in this range bound level for a while now, but has corrected from almost 850 to 900 rupees.
Indeed, the stock has corrected, and for well-known reasons like you mentioned about copra prices. But I think that's now kind of it's in the factor in the stock price now. So going forward, I think the prices would, as there's a raw material improvement, margins improve, worth holding on to Marico at current levels.
Okay, all right. So that's the view coming in on Marico. We've got our next caller. Kaizad is calling us from Mumbai. A very good afternoon to you. What's your query about?
Hi, very good afternoon to you as well. So I have bought Maharashtra Bank at the rate of 58 rupees, and I would like to hold it for a long term. So I'm looking at a view of 5 years plus. Is it worth holding for 5 years plus?
Okay, got your question, Kaizad. I'll take this up with Chakri. Chakri, he's bought at the levels of 58. The stock is currently at 72. Do you think he can continue to hold this for the next 5 years?
The stock is well placed. It's reasonable valuation. It's clean. It's a balance sheet has fairly cleaned up. It's fairly strong, and it's a kind of a more regional player. And so I think over the longer term, the stock will definitely kind of do well. So worth holding on to.
Worth holding on to for Bank of Maharashtra from Chakri. But next question coming in now on Policy Bazaar. Actually, it's a stock we haven't discussed for a while. Let's look at the chart for today as well as for the last 1 year. Has been a volatile counter there, PB Fintech. And Shobha from Bangalore actually holds shares at 1,720. Now, Ruchit, stocks trading at almost 1,580 odd levels. But look at the 1 year chart too, very quickly. Has been in a similar space, right? Very, very volatile, just almost down 4% for the year. Any view now on this counter?
I think most of the price wise as well as time correction has been seen in the stock. The prices have corrected from that high of around 1960, 1970 to 1400. And last 1.5 month, the consolidation has been there, in which 1400 has been acting as a good support base. So till this support level is intact, I think downside seems to be limited from here on. So these are not the levels where one should think of booking losses. But keep a stop loss below 1400 and continue to hold on for a pullback move. Initial hurdle is its 200 EMA, which is at 1650. Once 1650 is surpassed, then can expect levels around 1750 to 1800.
Okay, all right. So that's the view coming in on PB Fintech. The next one that is coming in from Sunita, who's writing us from Hyderabad, asking about Vikram Solar. She's bought at the levels of 358. 100 shares is what she's holding. Sitting on some losses right now. Wants to know if this is the right time to average. Chakri, would you recommend that?
Renewables as a space is good. Vikram Solar is well positioned, and I think this company is the fundamentals are improving, and given the industry outlook is improving, definitely worth potentially adding on to these stocks at current levels.
Oh, got it. The next question now coming in, it's from a viewer who wants to know a couple of key stocks that he can invest in. This is Gauri Shankar, who is asking us this question. Now, Ruchit, a couple of stocks she's asking she can invest for the next 3 months. What would any of those spaces right now that seem interesting after the last couple of days, the up move that we've seen, what's on the radar?
So broader markets have been doing well. So a clear relative outperformance from mid and small cap space is there. So we like Azad Engineering, where about 9 to 10 months of consolidation phase breakout has been seen in this week. That too supported by very good volume. So from a next 2 to 3 months perspective, we expect the stock to head higher, maybe towards 2100 kind of levels. So one can go long on Azad Engineering over here. DMart is another stock where overall structure seems positive. Post a recent up move, the stock went into a consolidation phase. Now again, a resumption of the uptrend has been seen. So DMart and Azad Engineering, these are two stocks where we expect good momentum over the next 2 to 3 months and hence can be bought at current levels.
Okay, all right. The next one is coming in from Murli, who's writing us from Kerala, asking about REC. He's got already 700 shares at an average price of 270. Wants to know whether he can book profits from a current market perspective, or should he continue to hold from a long-term perspective. Chakri, considering that this is eventually going to get merged into PFC, would you recommend him to continue to hold this, or would you recommend him to, probably sell this and buy PFC?
I tend towards the latter of buying PFC because both are in a similar space. They are financing, both renewable and thermal, and the valuations of both are kind of very reasonable. So I would rather buy PFC rather than REC.
PFC rather than REC at this point in time is what Chakri prefers, but go across, take the next question on Power Grid. Our viewers holding 150 shares, bought at 294. Now this is Suchita asking if she should hold on or sell out. She's not mentioned the time frame, but Ruchit, would you recommend that? She is of course in the gains. Should she book out?
No, I would recommend to continue to hold on. The overall trend seems positive. The stock, in fact, have recently given a breakout from a consolidation phase. Targets, if it's a short-term move, then can expect around 333. So at current levels, hold on around 333. If the stock comes, just take a review again over there.
All right. The next one that we have is coming in on Kalyan Jewellers. This is from Lata, who's writing in. She's bought it at the levels of 402. Wants to know whether she should buy more or sell from a 2 years perspective. Chakri, the idea is that there is talks going on around that there's a new DGFT personnel that has come in, and that's why gold that is being imported, the consignments have not moved since 2nd of April, and that's why probably the gold counters are not doing very well today. But your overall view on Kalyan Jewellers right now from a long-term perspective?
I think the current, whatever you're seeing restrictions are clearly only a temporary in nature. And Kalyan Jewellers, the stock has corrected fairly significantly. The valuations today are far more attractive than they were before. And as a space, gold jewelry continues to be attractive. It is an area where it's not just as a consumer discretionary, but as a consumer discretionary plus savings. So as an investment, so worth holding on to Kalyan Jewellers.
Coromandel International also the next one very quickly to focus on. Now, Ruchit, our viewer has actually bought it, I think very recently, 2048 he's bought it. Stocks trading at a very similar level also, holding 148 shares. Now, how are you viewing this counter, Ruchir? Because year to date also stocks down almost 10%, but recovered from the lows. What would be your opinion now?
Broader trend still seems sideways only. 2200, 2220 is immediate resistance, and on the low side, 1850 is the support. Also, the volumes are not that high in the recent past. So I think even if you look at the entire sector, you have not seen that kind of positive momentum along with the broader market's participation. So I think now maybe keep a stop loss below 1850, but do not average out or do not buy more positions here.
Okay. All right. So that's the view coming in on Coromandel. The next one that we have is from Happy Mohanty, who's writing us from Bhubanesh, who are asking about Sumitomo Chemical. He wants your view on this, Ruchit. From chart's point of view, is this the right time to make an entry into this one? From a slightly long-term frame, he's looking at this counter.
Yes, can be bought. I think worst phase is done for the stock after this recent correction from high of 660 to the low of 350, 360. But buy in a staggered manner, because last few days already the stock has seen an up move. Support is around 410, 400 kind of range. So you can buy some quantity at current levels, and in case if you get a dip towards that support, then look to add more at lower levels.
Sriram from Visakhapatnam actually has this very interesting question on ITC hotels. He bought shares at 206 and he bought 2,000 of them. So he's currently sitting on a loss. He wants to know what is the future, if there are any good dividends that could be declared, and a view for 5 years. Now, Chakri, this move actually has been quite puzzling, right? Everybody thought that the bottom would be 200, but then stock has now comfortably been at this 160 odd level. Is it still a buy from you at this point of time, and could it be that for the next 5 years could be, because the company has a very long growth trajectory till 2030 in terms of addition also of room keys? What's your preference?
Currently many of the hotel stocks, including ITC hotels, are corrected because of the war and the fear of that slowdown and occupancies as a result of lower travel. So other than that, the long-term perspective of the company is very strong. And they have a fairly good key addition program over the next 2, 3, 4 years. So worth holding on to.
Okay, all right. So that's the view coming in on ITC hotels. But let's quickly shift our focus to a major development on gold imports. DGFT has issued a notification after 7 banks have reported blocking of gold being imported. To get more details on this, let's cut across to my colleague Rishabh Bhatnagar, who has all the details. Rishabh?
Right, so it was reported today morning that a lot of banks are facing issues with gold and silver imports, and there seem to have been a lot of imports, shipments that were stranded at various ports awaiting some sort of an authorization from the Director General of Foreign Trade. And what we have now that has come in is a notification of the 18 or 17 banks that are authorized to actually import gold and silver. So what had happened was that today or maybe yesterday, you had about 2 large banks that had made a plea to the RBI to help them with this matter, given the fact that there's a lot of demand that is met purely through gold and silver imports. India is a major consumer and also an importer of these precious metals. So that was continuously stuck for banks. This is sort of a hedge also to the uncertainty that is grappling that they're grappling with. So what we're picking up is that starting March 31st, banks were unable to import any sort of these precious metals, and today's about 17 days went by without this notification coming in, and a lot of shipments were stuck because of this. But finally, some sort of a clarification has come. The reason for this delay by this DGFT is not out yet, and that is something that we are probing as to why this has happened, because this has not happened in the past as well. Over the so many years, it has never happened that when a FY is ending, the authorization, the advance authorization list hasn't come. So we're probing why this delay has come in.
Okay, all right. Rishabh, thank you so much for getting us those details. In fact, that has ripple effects on all of these gold counters. Kalyan Jewellers, for example, is seeing a downtick on the back of this news coming in. But viewers, it's time for a rapid fire round. Ruchit as well as Chakri, you both know the drill. Try to keep your answers as short as possible. The first one is on Wipro. Rohini from Bengaluru is holding 1,000 shares at the levels of 209. Currently on a loss of over 4,000 rupees. Hold or sell from a 3 to 6 months point of view, Ruchit?
has been underperformer, so exit.
Tilak Nagar Industries bought at 495 Ruchit. Should Venkatesh continue to hold for the next 6 months?
Yes, hold for an up move towards 500.
Okay, Persistent System 250 shares bought at the levels of 6150. Hold or sell, Chakri?
Persistence, I would sell because the fundamentals are still very weak, not yet firming up.
On Suzlon, Ruchit bought at 49.84 by a viewer, Surendra. He's asking if he should continue to hold or sell out right now.
Hold and review around 60 rupees.
NTPC Green 1000 shares bought at the levels of 98. From a short-term perspective, what's the target, Ruchit?
On the high side, the stock can see an up move towards 115.
Pamanji from Andhra Pradesh has bought into Parity Phosphate, Chakri, roughly at 124. Now asking if it's a good long-term bet for the next 3 to 5 years.
Very good long-term bet. It will recover from the current uncertainties and worth holding on to.
HDFC bought at the levels of 768. Buy more at the current rate, Ruchit, short-term view?
Hold existing positions, not recommending to add more.
Jamna Auto bought at 125 Ruchit by Prashant, and he's holding a massive 16,000 shares. Now he's asking a short-term view, so could be a trading bet. Any view here on the charts?
Keep stop loss below 120 and expect up move to 144.
United Spirits bought at the levels of 1378. Sell, hold or average from a long-term view, Chakri?
Clearly, average and buy some more because, as a space it will do well.
KPI Green bought at 592 by Gopinath, who asking what he should do with his 200 shares. Ruchit, very, very disputed and volatile stock, right? Any view here?
So hold for up move towards 500. Just review again over there.
Got it. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Chakri as well as Ruchit, appreciate your time as well as your inputs today on the show. But viewers, all the time on this edition of Fast Profit, the afternoon edition. Stay tuned. India Market Close comes up next.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the self-prospectus and the Tranche 1 prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters.
Good evening. You're watching India Market Close, and markets are as green as my suit today, I suppose. 0.5% up on the Nifty and decent recovery for the day, I would say. I mean, this is if this is a marathon, the markets are in the mid mode, kind of now pacing themselves, not really sprinting along after the first head start we got a few days ago.
100% on the benchmark, but I think if anything, the action, just like it was yesterday, is in the broader markets, and the broader markets looking very, very good. Let me move away from this number. Actually, it was on the screen. Pull up that previous number, that screen, right? Because that's where the action is. We'll get to that graph in just a bit. Take a look at the advance and decline ratio, and look at the number, nearly 1900 or over 1900. Now let's pull up the mid-cap index, and we're trading very close to the high point of the day, up over 1%. In fact, we're heading that lift off in the last part of the session today, and pull up the small cap index as well, and you will see gains of 1.4%. So considerable strength in the broader market.
1:3 advanced decline ratio. This is a mode where now markets are beginning to get over the sort of PTSD of the war, at least for now, and figure out what to buy. So what they're buying becomes very important. Also crucial that we're above the 24,300 mark quite convincingly on the Nifty. We need to stay here and close here. So we'll have to see what the next 1 hour looks like. It'll be quite crucial. Let's pull up the Nifty heat map for you and just give you a sense of what's happening there, what's moving, what's not. I mean, the comeback of FMCG has been astonishing through the day. No real very in-your-face trigger for it, I must say, but an HUL moving 5%
earnings, no?
randomly. But where have
Bajaj Consumer, for example, is giving you a sense that it might actually be a good picture. People might be extrapolating.
For HUL to move 5% on a Bajaj Consumer,
people might be extrapolating.
Yeah, is a bit of, maybe a bit of a stretch. That could be very well could be one of those reasons. I mean, who's to tell? But HUL moving 5% up is exciting. So is Nestle, an Apollo Hospital doing fine. Max Health, so some of those plays as well coming in. JSW Steel looking good. I mean, what's sulking are the two companies whose results are being punished by the street, Wipro and HDFC Life, HCL Tech and Infosys along for the ride with the beating that the Indian IT sector is getting and the question marks there. And some of the auto pack is weak, but definitely off its lows of the day. I want to pull up Nifty contributors just for a second to see how the heavyweights are doing, because remember, entirely in focus is going to be the banking pack, and we'll show you the Bank Nifty and the constituents of the Bank Nifty as well. RIL, HUL, rare to see them in the top post of pulling up the markets. HDFC Bank ahead of results, looking good. On the downside is Infosys and ICICI Bank. I thought this was interesting because remember, right now it's all about the numbers. The constituents of the Bank Nifty should be pulled up very quickly before we get to the broader markets and other perspectives. ICICI Bank is the only one in the red, but mildly so. And Federal Bank, Kotak Mahindra Bank, all of them up in the green today.
Yeah, absolutely. I do want to look at the broader markets because you seeing a few instances of stocks reacting to earnings. No, I want to talk about individual stocks. So pull up the constituents perhaps of the 500 of the big movers, right? So you have GSPL that's doing particularly well in trade today, VST reacting to numbers. Angel One, we talked about this in the morning, and it is reacting to a pretty solid quarter, particularly when things were not looking great for the industry as a whole. Markets haven't done too much in that quarter, remember that, and they have had a resilient quarter. What else? Gujarat Gas has had a few positive notes come through as well. And even beyond this, actually beyond the 500, there are a few stocks like, for example, Waaree Renewables doing particularly well on the back of results. On the downside, of course, Wipro stands out, but Kalyan Jewellers, there is a little bit of a question mark about gold imports that is playing a part. We have a clarification on that, but losing a little bit of steam there. But Spark, HDFC Life, a few of those others we've already spoken about.
There's a large amount of gold and silver which is stuck in ports as this authority notifications have not come out yet. That's going to put pressure in terms of the stock that is available in the country. One sense of it is the government wants its current account deficit numbers to also look decent, right? So pairing in the gold imports makes sense. Kalyan Jewellers, Titan, both of them will be seeing a bit of a downtick because of it. But what else is happening? The Nifty is gaining in trade, but overall volumes are muted. In terms of market turnover, cash is down 5% and F&O down 1% at least till 2 p.m. compared to yesterday. So I would say flat more than muted. Nifty is now up nearly 2,000 points from the March lows. So that's something to be said for that extent of recovery. For the Nifty, 24,400 is the immediate ceiling. If the Nifty clears this on a closing basis, we could see a rapid move towards 24,700 to 24,800. Value buying continues in small and mid-cap names. The Nifty Small and Mid-Cap 100 Index are already up 13 to 15% in March, outperforming the benchmark. Bank earnings is what you need to watch out over the weekend. Resistance levels for the Bank Nifty, 56,500 and 57,000. Could see a significant supply of rallies here. Supports at 55,900. Kunal Shah with us this afternoon. So is Avinash Gorakshakar. Welcome to both of you. Kunal, I'm going to start with you. Are we going to go into the weekend with a proper Friday mood this time? After a long time, I would say.
Yeah, I think definitely we are going to go with a proper mood. But I think overall what we see in the markets going forward that for Nifty, 24,400, which has been the immediate hurdle. Once that is taken out on the upside, you can expect 24,700, 750 zone, which is the 61.8% retracement of the entire fall what we had. So we're expecting Nifty to move higher on the upside. For Bank Nifty, again, we have the two big boys coming out with results. So again, no fresh trade to be taken at the current levels, overnight positions. But I think overall Bank Nifty also has a gap to fill around 57,600, 700 marks. So it will fill that gap as well. So again, Bank Nifty also from a short-term perspective remains positive. But I think, yes, we are still left for the up move on the upside for Nifty 24,700 and for Bank Nifty somewhere around 57,500, 57,700. So.
Let's talk about individual stocks. And Nifty Bank, by the way, a high point of the day, so too certain other sectors as well. But let's talk about individual stocks and what stands out on the charts today, Kunal, heading into trade. And by the way, Avinash also joining us on this leg of the show. Avinash, good afternoon to you. We'll come to you in just a bit. Kunal, what individual counters look good?
See, I think I'll go sector-wise first. So first, again, the power index continues to remain strong and we expect this outperformance to continue on the upside. So your power grid, again, it had already given us a breakout and now there's a follow-up move that is kicking. So that's a buy for me with a stop loss of 310, looking for targets of 326 to 330 on the upside. So that is my first pick over here on the buy side. Second, again, the FMCG space that has started to pick up. So there, the momentum has started to catch up over here. Godrej Consumer, that is looking strong on the charts as well. So again, this could continue the move on the upside, has surpassed its 50 days exponential moving average as well in today's trading session. So that's a buy for me. 1,070 should be a stop loss on the downside, and upside you can expect at least targets of 1140 to 1150 on the high.
Got it. Okay. Avinash, so what we've seen in the recent past is that there is a little bit of resilience that has come through. And we'll come to earnings specifically in just a bit, but the broad trend seems to be that a bottom may just have been found. And I hope that I'm not jinxing this, but having said that, what would your advice be broadly if you're building out a long-term portfolio?
Yeah, good afternoon, Alex. I think good to see you after a long time. See, my sense is that markets have cheered the sentiment largely because Donald Trump's narrative has changed. You know, it's very difficult to know how his mind works, but I think as of now, it seems that he wants a solution. The war is unlikely to continue for a long time, and that's the bigger kind of bottom line and the narrative which the market have liked. I think clearly, I think crude oil prices still remain elevated. So there would be some cost pressure in the April to, June quarter. But I think the markets are happy to know that, normalcy, if it does come in, hopefully in the next 2-3 weeks, some solution is worked out. I think that would be the near-term trigger point, as my other colleague has said, 24,400. I think, the markets would rally significantly because now the markets have rallied up till now. There is some resistance now. The market should look at more clarity. So I think, it's better to wait and watch. But the best part is that the Q4 numbers which have come out broadly from the corporates which have announced the results up till now, Alex, most of them have been better than expectations. So I think, the markets are cheering that numbers have been slightly better than what the street expected. And I think the growth commentary from many large corporates has also been very good. So, the markets are keeping their fingers crossed. I think the only caveat, Alex, is that this time the monsoon department, IMD, has given a forecast that this time the monsoons may not be great. It may be below normal. And that could be a kind of a problem for, especially the agri, the FMCG sectors. So I think net, I think, we got to be stock specific. I think we got to focus on sectors which are slightly insulated. But net, I think it's a good feeling that, this week should be a positive week because I think markets are up, so everybody is happy.
Okay. Now, Avinash, just on the point of FMCG, because FMCG is up and about today despite this monsoon forecast that you're talking about. What do you think is the big driver there? Are you finding the move exciting and sustainable?
Yeah, I think clearly Q4, Tamanna, will be good. I think volume growth is going to be slightly mid-teens to double digits. And I think the markets are quite upbeat that despite a below average monsoon, maybe rural demand may not be that badly impacted. But I think we need to see how rural demand picks up. My sense is, companies like Hindustan Lever, Dabur, Marico, they've got a very large geographical, kind of customer base. So maybe they might not be that badly impacted. But we like to see the intensity and the impact of the monsoon. Possibly after the June quarter, things could be a little more clear. So my sense is, yes, I think fourth quarter would be good. Management commentary would be very crucial. They are going to sound a little bit cautious now. But I think April to June quarter, and after that, I think how the monsoon behaves is something which is going to drive valuations in the FMCG sector. So we remain constructively positive here, but we would prefer the large cap companies initially, as we believe they have got better, kind of tenacity to face this kind of short-term kind of headwind.
Is there, Avinash, in the FMCG pack?
Yeah, what is it?
What are your favorites in the FMCG pack?
I think we would like companies like Godrej Consumer, a Dabur or a Marico. I think, these are very defensive bets, Tamanna. And I think, the commentary in the Q3 numbers also was pretty encouraging. So I think we'll like to, look at these numbers once they come out. But I think net volume growth plus good price increases in the fourth quarter is going to keep a steady margin kind of improvement for them. So obviously what they talk about post the March numbers is something which is very crucial.
Kunal, what about you? What are your favorites on FMCG and how are you looking at HUL after the kind of move we've seen?
I think definitely if I look at the Nifty FMCG index as well, the correction what we had seen from the top, I think we can expect a good move on the upside, at least towards 52,000 on the upside for the index perspective. And Hindustan Unilever, again, on the chart looks great. We have already seen a fresh breakout in today's trading session with volumes. Again, the support has been taken at the 20-day, and then we have broken the 50-day exponential as well. So now we are heading higher toward 2340 on the upside. So even the short-term view continues to remain positive. Expect HUL to go toward 2330, 2340 on the upside.
Okay. All right. Let's talk about the stock of the day. And the stock of the day is undoubtedly Angel One. The numbers were good. And then the commentary from the company has also added to the kind of excitement on the street for this particular company. 10% up and running. Sharad Dubey joining in to tell us what has worked for Angel One. Sharad, especially what was it in the management commentary that has really excited the street?
Well, they have stated that the numbers for the month of April are going to be strong, and large part of expenses for the IPO has not been capitalized or expensed in the March quarter itself. But apart from that, even the broking houses have been bullish in this counter. And the key reasons for the rally is, of course, the better than expected Q4 numbers coming in. The realizations front, that was good. Brokerages turned bullish. And the management commentary, which was there in the middle of the day. That's where the management commentary came and we saw a spike in the stock. Looking at the bullish momentum in the capital market theme stocks already, which is there, and that's what is giving a good momentum to the stock. But what was there aiding the rally? Of course, more than 30% of up move already we have seen in the month of April. But the con call is very much important. They have stated that April is expected to see a strong recovery in the cash market share segment. Of course, the new businesses, they may create a drag of 2.5% to 3% on the EBITDA margin front. But apart from that, the commentary has been bullish, especially on the broking distribution margin. They are expected to exceed 45% in terms of contribution post FY28. So that is a bullish statement coming from management. Companies focusing on market share gains and a higher average revenue per clients in FY27. So that is where the company's strategy is moving towards, and the margin expansion will be there as a result of efficiencies rising from AI as well. It's the first time a broking company has come out with a statement like that on the benefits of AI, and the less expense was booked in the month of March because IPL started actually quite late. And of course, we will be also focusing on the valuations, because interestingly, the valuations are not as high as compared to peers. Grow is having a valuation of currently at 42 times. If you have a look, the 12-month forward numbers I'm talking about, and Angel One currently is at 22 times only as compared to its 5-year peak of 28 times. And on the other hand, Motilal Oswal, that's slight cheaper, coming in at 14 times. So there might be some more headway also in terms of a valuation catch-up when it comes to Angel One. But in today's trade, Angel One definitely is flying high on its wings.
Angel One has got wind beneath its wings. I'm thinking of all of the references that we can make to Angel One, and this is one that comes to mind.
This is certainly one of them.
Certainly one of them. We'll think of more along with the show. But the fact that capital markets are up and about is interesting, especially in the context of what Ramdev Agarwal told us yesterday on NDTV Profit in our town hall. He's, of course, chairman and co-founder at MOFSL. And he talked about how capital markets and the fears around them because of the war and the way markets have behaved are unfounded.
People have done well, exchanges have done well, BSE has done well. BSE, for your information, for last 6 years, the fastest growing company. It has grown double every year. Double every year, you imagine. From 9-10,000 crores, it is up to more than 1,10,000 crores or something.
And you're going to have...
And we're just watching like that.
But scarcity premium will go when you have another player which will list.
The game is going to become so much bigger. They're going to mint money. It's all free cash flow machine. All 140 crore Janta are going to trade only in these two exchanges.
You think there'll be a time when 140 crore Janta will trade? Because
right now we have a demat accounts of about 220 million. In 2020 we were 40 million. Now we are 225 million. I think we are going to be 500 million demat accounts in next 5 to 6, 7 years. Will be the more, I can bet, will be the most crowded retail market in the world, capital market in the world.
All right. Looking at the kind of penetration that you currently have as a percentage of the overall population, then that is something that is not necessarily out of the realm of expectations. I want to come across to you, Avinash, on the fundamentals though. Angel One results today, and just in today's session, you're talking about a close to 10% rise, 22 times forward though. At this juncture, what's the view? Can it still be bought?
I think, Angel One is one of the larger online brokers, Alex, and I think has got a very well-oiled, system to ensure that it gets a large share of this online market. And online business has been increasing very rapidly in the broking, industry. And they were one of the first to identify this trend. So obviously, as a leader, it gets the benefit. My sense is, yes, I think the runway is very huge, but looking at, the kind of, the rise which we have seen today, 10%, maybe one should, look at buying the stock on some cool off. Definitely over the next 2 years, we are quite positive on the company, considering the kind of amount of investments they have made in technology and the kind of ramp up expected in the online opportunity. My guess is that even other companies like Grow could also do better. In fact, Grow is also one of those companies which have risen largely on the online market kind of opportunity. Indian capital markets present a very strong opportunity, but I think at these levels maybe the valuations seem to be little fair to expensive. I would believe maybe it pulls off a little, I think that would be a good time to accumulate it and add it in your portfolio.
All right. Now, important results coming out over the weekend, HDFC Bank, ICICI Bank, and let's go across now to Shivam to find out what is likely and what is expected. Shivam?
20% of the Nifty will post their Q4 earnings tomorrow, and starting off with the HDFC Bank, the net interest margin is expected to improve as there will be a reduction in cost of funds, and also the CASA growth will be better. As if we talk about the asset quality, it is expected to stay stable and credit cost will remain contained. One more point that we need to be consider is the commentary on the loan to deposit ratio, as it is expected that the loan to deposit ratio will increase in the upcoming periods. Moving on to the ICICI Bank, the loan growth remains healthy and the net interest margin are going to stay stable. Operating expenses are going to moderate a bit with asset quality remaining stable and credit cost at a lower levels.
Okay, thank you for that, Shivam. We have Aditya Shah now joining in. He's founder of Hercules Advisors to talk about what he is looking out for. There's ICICI Bank, HDFC Bank, and of course Yes Bank that will also report on Saturday. Aditya, what is top of mind for you on what to look out for? And let me start with ICICI Bank, because in HDFC Bank, I'm sure in the press conference there will be more questions about what's happened internally with the management, perhaps, than the numbers.
Good afternoon. I think ICICI Bank will report a steady set of numbers. The loan growth will be at about 10 to 15%. Similarly, will be the deposit growth, and also the asset quality will be largely contained. I will not be surprised if steady set of numbers come in, and ICICI Bank will continue to lead the market per se. As you said, on HDFC Bank, there are the business side is one part of the story. The management side, the 81 bond crackdown, and what really happened, and did the forensic audit turn out and give up any results? Those are the key questions that will be seen in the HDFC Bank.
But specifically on ICICI Bank, Aditya, the interpretation based on the system-wide credit growth is that there's a possibility that ICICI Bank has done better than its previous trajectory. And some part of that could be on its credit card book. So if you were to look at the kind of growth that you would be penciling in, what would surprise you on the upside?
I don't think on the what would surprise me would not be the loan growth, would be the asset quality. If there's a market improvement in the asset quality, that is where the real delta for the stock price is. Mind you, the bank can embark on a fast loan growth, but if the asset quality is not really good, that's a major problem. The major turnaround in the ICICI Bank stock over the last 2 years has been on the asset quality side. ICICI Bank has never outperformed the market in terms of loan growth, and I expect them not to do so, because asset quality has to remain intact. Asset quality must improve from here on for the market to give any further re-rating to the stock.
What is the one bit of commentary that you think is crucial from the bank management, Aditya?
As this war goes on, we've been hearing that a lot of small and medium enterprises are starting to face problems. If the bank comes and reports that they are seeing some stress there, it could automatically mean some bit of NPA. So as always, I'm always concerned with the asset quality guidance that the management wants to give. That would be the most important criteria. And also, what is the succession planning? We've seen really poor succession planning on the HDFC Bank management, where it seems to be one of the disputes why the chairman really left. So succession planning, given Sandeep Bakshi's tenure is not for too long, that is one of the more important points that I would see in ICICI.
Aditya, just a quick point. Since you raised the issue of asset quality, the base case is that both will have a good, solid asset quality and credit costs will be low, right?
Absolutely. Both of these banks have a diversified book, and because they have a diversified book, asset quality will be contained. But I am looking for an improvement in asset quality. Also, I am looking at a guidance as to what happens in the Q1 of next year, because even though the war may be over, a lot of SMEs are really struggling with force majeure and a lot of cut in order books. So those are the guidances that I'm looking for with respect to asset quality.
Aditya, do you have a pecking order in mind pre-results? Of course, we'll ask you post-results as well.
So my pecking order would be HDFC Bank and then ICICI Bank. Given whatever has happened in HDFC Bank, I do think that the valuations have derated over the last 3 to 4 years to a large extent, and a lot of negatives are priced in. Whatever happened is one part of the story, but the bank itself is really very strong. I don't think there is something to worry about per se on the bank. So the pecking order would be HDFC Bank, ICICI Bank, and SBI put together.
Okay. All right. Thanks so much for joining us this afternoon. And of course, we'll touch base with you once the results come through as well. Let's head across now. It is that time of the show where we head across to Somit Sarkar to find out what the chatter on the dealing room is. And in Heard on the Street, that's what it's called, of course. And Somit, good afternoon to you. What's the word?
Well, a host of stocks again that dealers have highlighted given the fact that it's a good day of trade. But again, do remember that the dealers are keeping their positions light given the fact that it's a weekend and they don't want to carry much positions on either side of the trade. A few stocks, however, what they have highlighted is HCL Tech and Persistent Systems firstly. What dealers are indicating is that there are sell flows on institutional desk for both the IT names specifically, and this is largely because the Q4 numbers are expected to be on the weaker side for both the names, and hence these sell flows coming in. For Kotak Mahindra Bank, the stock was under pressure for quite a while, but now dealers are indicating that again, buy flows have started on the institutional desk for this name, that is Kotak Mahindra Bank, and the selling is largely over. So the stock could bounce from the current levels. For PFC and Patanjali, both these counters are seeing strong buy flows on the DI desk, and delivery volumes are also expected to be on the higher side. And lastly, when it comes to Lupin, there are buy flows on the large HNI desk. Dealers are expecting strong Q4 numbers that could come in from Lupin side. So keep an eye out for that counter as well. And lastly, we did mention about Bajaj Consumer on April 15th, where dealers were indicating that the fourth quarter numbers would be quite strong. In fact, the PAT would be one of the highest in multiple quarters, and that is what has come out for Bajaj Consumer. In fact, at one point of time, the stock was up as much as 15% in trade.
Oh yeah, in fact, you are seeing that khabar absolutely confirmed with the results looking quite robust, and we spoke a bit about it and the impact that it's had, a second order impact actually on the entire FMCG pack with a 10% uptake on the stock. Kunal, on charts, is Bajaj Consumer going to see a further upside, or is this time to take profits if you've been holding?
I think definitely if you have been holding from the lower levels, definitely try to book profits at the current levels. So we have seen a good run up into the stock, and I think you will get a good dip on the downside to again accumulate the stock. The larger term trend is positive, but this has been the extension of the up move. So utilize dip as a buying opportunity. If you are holding from the lower levels, continue to book profits on every rise.
Okay. If you're holding from lower levels, continue to book profits. But what's happened in the results? They've delivered a strong Q4 with revenue up 30% and profits more than doubling. In fact, Mahima joining in to tell us what's worked for Bajaj Consumer this quarter.
So, stellar set of numbers coming in for Bajaj Consumer. I think it's a good opening for FMCG sector as a whole. Overall, I think almond hair oil is something that's been doing well for the company and has done very well this quarter as well. Double-digit volume growth coming in. Growth portfolio has now crossed 200 crore mark. 225 crore is what it has done, and volume market gains have also been recorded across these products. General trade has outperformed organized trade. That's something which is new coming in for FMCG counters. Rural has continued its recovery, and international business has also shown sequential improvement. Now, in terms of where numbers go, revenue saw an uptick of 30%. EBITDA has more than doubled at 76 crore. EBITDA margins stood at 23.4%. This is on the back of a lot of raw material price changes that have happened overall for this particular counter. Net profit has almost doubled to 63 odd crores. In terms of key raw material changes, like liquid paraffin has seen a higher uptick, but overall refined mustard oil has seen a downtick of 1%, and copra price has seen a downtick of around 16%, and this is the case in the past 2 quarters as well, and that's benefiting the company overall. In terms of guidance, they've said that the growth portfolio will cross 500 crore mark in the next 3 years, and management expects to deliver double-digit revenue growth as well. So this is the overall view as to how Q4 has panned out for Bajaj Consumer.
Got it. All right. Thanks so much, Mahima, for that. Avinash, I want to come to you. We've already discussed FMCG with you. So let me open up the ambit a little further and ask you about the wider consumer consumption universe, to ask you about consumer durables perhaps, or even extend it to automotive, where you've seen a few flashes of upside. would you buy into any of the names that you find high conviction? Are there any opportunities that you see there?
No, I think, from the auto pack, we still continue to be positive on the four-wheeler companies like Mahindra and Mahindra, Tata Motors, CV. So, these are companies where I think quarter four is going to be extremely strong. And I think hopefully, I think the demand momentum should continue in the coming quarters also. I think to a large extent, M&M should also benefit because, their electric vehicle basket of vehicles have also taken off pretty well. Tata Motors CV, I believe that it should be a big beneficiary of the CV cycle. I think we have seen CV numbers improve significantly, and that should benefit Tata Motors CV. Overall, I think even the two-wheeler pack, Alex, looks quite strong. I think, we have seen very strong product launches and good volume growth in the month of March for players like Hero Motor or TVS Motors. So definitely, I think even the two-wheeler pack should do well. I would believe that, you're talking about consumer durables, then I think even companies which are into the air conditioning and refrigerator segment, these companies should also do well because the summer has started early, and I think April to June also is going to be a hot period. So, definitely volume growth is going to be significantly better. Last year, I think the summer season was impacted badly. So the numbers are not all that great. But this time, I think you could see very strong numbers from, larger ODM players like even Amber. And definitely, I think, this is a space where you could see good traction in their earnings over the next 1 or 2 quarters.
Quite a few of these stocks are actually climbing to the high point of the day, as is the market. Avinash, Kunal, thanks so much for taking the time. Pleasure speaking with you. Just pull up the Nifty 50. We're trading at very close to 24,350. And the broader market's also at the high point of the day. 1.2% gains for the mid-cap index, 1.5% gains for the small cap index, and it's a pretty picture heading into the end of the trading week. On the other side, we'll get you the top buy today, sell on Monday ideas, so stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit.
Welcome back. You're watching India Market Close, and as we were pointing out to you before the break, we are at the high point of the day. The question is, where do we head from here? And we're joined by Jay Bala, founder and chief market technician at Cash the Chaos, as well as Siddharth Khemka, head of research wealth management at Motilal Oswal Financial Services. Gentlemen, thanks so much for taking the time, and good afternoon. It's a Good Friday, and you can always celebrate Good Fridays. It's a good thing to look at, particularly in the context of the last few weeks. Jay, where does that take us heading into next week? Do we head towards higher levels, towards 24,000, or is it too early to call?
Hi, Alex. So see, the markets are heading for fresh record highs. So that I anticipate the Nifty to be at about 28,000, 29,000, somewhere about August to September. So the very short term, the Nifty has strong resistance around the 24,570 to 24,750 area. So the immediately in the immediate term, there could be some resistance, and we could even see a pullback closer to 23,500. That wouldn't disturb the higher term picture, the path I've given to you. So from here on, dips are likely to be buying opportunities. So I'm anticipating Nifty to reclaim fresh record highs past 26,373 registered earlier in 2026.
Jay, very good afternoon. Tamanna here. What are your picks for this afternoon? What are you liking?
I like two. One is Cabra Extrusions. It's a slightly medium-term call. The stock is bottomed from a falling pattern, and the low of the pattern is about 180. I don't think that's the stock is going to go below that. So I'm anticipating the stock to rally to fresh 52-week highs from here on. So a stop loss of 180 on Cabra Extrusions. That will be the right stop loss level for it. And the second one is Aarti Industries. The stock had a good rally between January and February, and then it's pulled back in a choppy fashion. And from here on, it's likely to rally to about 520. Possibly higher targets, but I'm sure the stock is not going to drop below 394. So that can be a risk management level, and it could these two are slightly slow movers, but these are interesting stocks for me.
Okay, Siddharth, I want to ask you specifically about banks. And ahead of the results that are going to come, the big two, HDFC and ICICI, I would say if the tone has been set for IT with TCS and Wipro to some extent, it's going to be set by tomorrow for private banks and the whole banking space. What are your expectations?
So yes, Tamanna, I think that's the key sector, especially when the sector's weightage as well as contribution to the economy is huge. So key factors, if you look at credit growth, the systematic credit growth is around 13-14%. That is pretty steady. Deposits growth, which has been a key factor, especially for some of the large private banks where they were lagging behind, that has picked up in the last couple of quarters. And for this quarter, we are expecting about 10.8% deposit growth, which will help the CD ratio to improve to about 83%. NIMS is largely range bound, but we believe that bottoming out of NIMS will be a key factor in the ensuing quarters, and we should see the improvement in NIMS going forward now that with the RBI maintaining a status quo. In that, some of the mid-sized banks, they are better placed both in terms of growth as well as in terms of NIMS. Asset quality continues to remain steady. In terms of private banks, we expect Q4 earnings to grow at about 12% on a low base, plus better contribution from some of the larger banks, the likes of HDFC, which is now started contributing in a stronger way. PSU banks on a higher base, the Q4 earnings is likely to grow just about 2%, but SBI is something that will continue to report strong earnings growth in this quarter as well. So in terms of strong earnings, SBI, ICICI on the large cap side will report strong numbers. In the small finance or small banks, I think AU Bank, that is expected to report a healthy growth as well of around 19-20% net profit growth. So that's the overall view on the banking space.
Since we're talking about the banking space, another piece of news which is keeping the banking space up and about, and let's pull up the bank Nifty, and we were telling you about that sharp uptick, is this report which has come out on the DGFT allowing 17 banks to import gold and silver. Out of them, 15 can import both gold and silver, 2 can import just gold. But this is a major relief for banks, which is why you're seeing that bump up as well. And let me get across Rishabh Bhatnagar, who's joining in for more details on how these imports which were blocked have now been unblocked. Rishabh?
Right. What we have is a notification that is coming from the Director General of Foreign Trade, what they've said. And finally, after a delay of about 17 days, have issued a notification that has authorized about 17 Indian and foreign banks to be authorized to be importing gold and silver. The entire fiasco was the fact that this authorization hadn't come in from the DGFT. It was supposed to come in on the 1st of April. We don't know why this delay happened, but there were clarity that had come in from RBI, but these shipments were stuck at several points, given the fact that the DGFT hadn't authorized these imports. What we're also seeing is the fact that finally this notification comes after about 2 large banks had made pleas to the RBI asking them to authorize these imports. These imports are a major source of course, firstly meeting the sort of demand that India has for these precious metals. Also, it is to keep in check the sort of current account deficit, and these precious metals, gold and silver, with the recent appreciation also do act as hedges against global uncertainty even for banks. So that's what we're picking up. These shipments were stuck since April 1st. The previous list had expired. The previous authorization had expired on March 31st, and banks are required to have these authorizations from DGFT, RBI as well as customs. So that's what we're picking up in terms of this DGFT related blocking of gold imports.
All right. Thanks so much, Rishabh, for getting us those details. So that important clarification coming through, and it's having a bearing on the gold companies as well, because ultimately India is a large importer of gold and therefore price taker. Any implications that you think of with regard to supply chain for some of these jewelers?
Yeah, I think the supply chain will only improve with the easing of the import restrictions. I think that will only help some of these companies and create a better environment. So that's the only thought that comes to my mind right now. I think overall environment will be much better for jewelers, for some of the other companies in the entire supply chain.
Any of the jewelers that you're favoring as we're seeing that uptick coming in, Siddharth?
So yeah, I think we have seen the Q4 business updates from all of them pretty strong. And among them, I think Titan is something that has remained our top preferred idea in the consumer overall consumption discretionary theme, retail theme. And they continue to report strong earnings growth. Q3 was a blockbuster quarter. Despite the high gold prices, demand has been pretty strong. And we believe that Titan continues to benefit out of its superior sourcing strategy, their diversification, both in terms of gold as well as the studded jewelry segments. Plus, they have been reinvesting in a lot of other sub-brands, newer brands, which can become future growth drivers. So within the large cap space, this is one company or one stock which has consistently delivered earnings growth. And even going forward, we are forecasting at about 25% net profit CAGR over the next 2-3 years. So that's the preferred pick there in the space, Titan.
Preferred pick is Titan. Are you liking Titan on the charts? Jay?
Yeah, Titan has got a very, very positive price structure, and it's still got further highs to come through. But the strongest for me is Thangamile jewelry, but it's had a sharp run up, and probably better off waiting for some pullback to come through and then pick up the stock.
Okay, you like Thangamile jewelry as well. Okay, the big story, of course, billionaire industrialist Gautam Adani, chairman of the Adani Group, has become Asia's richest individual, overtaking Reliance Industries chairman Mukesh Ambani, according to the latest Bloomberg Billionaires Index. Sharad is joining in with more details.
Well, right, for Adani Group's chairman, Gautam Adani has become Asia's richest, and this is as per Bloomberg Billionaires Index, and he has overtaken Mukesh Ambani to take the top spot in Asia. Now, Mukesh Ambani slips to the second position as being the richest in Asia. Also, let's look at the numbers. What does it suggest? As per Bloomberg Billionaires Index, the net worth of Gautam Adani is $92.6 billion. That's making him the richest in Asia. This net worth shows a sharp upward move and has added almost $8.1 billion in terms of wealth this year itself. This is the total numbers we are talking about. Over here, Mukesh Ambani's net worth has reflected a decline, and Mukesh Ambani's wealth has declined by roughly $16.9 billion this week itself. And this data is coming in from the Bloomberg Billionaires Index. Over here, two Indian billionaires sit side by side on the Global Wealth Index, and Gautam Adani's ranking is at 19th in terms of the total richest persons in the world, followed by Mukesh Ambani just behind in the 20th spot. But now let's look at how the global numbers stack up. Elon Musk, he maintains a staggering lead as the world's richest individual, and the gap between the first and the second and third is really very big. Now the net worth is $656 billion, more than double of the second placed Larry Page, and that's a very interesting data coming in from the Bloomberg Billionaires Index. Now let's look at the Adani group of stocks, how they have performed. They have grown 11 to 30% in the last 1 month itself. Let's look at the stocks, the performance. Adani Green, Adani Power, Adani Energy, all of them going between 23 to 29%. And if you have a look at Adani Total Gas, Adani Ports and Adani Enterprises, both of these stocks are in Nifty. Both of them have given more than 11% returns in the last 1 month itself. So we can see that is the reason why the net worth of Gautam Adani has gone up, and he has become Asia's richest person.
Okay, so that is the big story, an interesting list coming in there from Bloomberg. Let's get back to what's happening in markets and all the action there. It's actually turning out to be quite an exciting close because there's movement across the board. We talked about banking, we talked about FMCG, we talked about jewelry stocks, but even power stocks right now roaring through as we get into the closing session. Siddharth, if there was someone who was sitting on the sidelines waiting for proof or enough evidence that the market mood is turned, hoping to deploy some dry powder, what would you suggest should be on the buy list?
I think the market is giving the right signals, and while Nifty has been last 2 days showing some pause, I think broader market is showing a lot of momentum, and what we are liking is that some of the core industrial sectors, for example, metals, power, capital goods, defense, I think these are some of the sectors which looks really interesting. From a larger market cap space, I think banking, auto, these are again sectors where we are positive. And NBFCs is another sector where the quarterly results are going to be pretty strong. So one basket I think that one can look at is the energy basket, be it power, renewables, the transmission and distribution companies. I think the entire supply chain, the value chain in the energy segment, that is showing a lot of strength. The electricity demand is pretty strong, and the prediction of a elongated summer, that is also positive for the electricity demand in India. So stocks like JSW Energy, Tata Power, Power Grid, Waaree Energy, I think these are some of the stocks that one can look at in this market.
Waaree Renewables posted numbers today, or rather over post-market hours yesterday, and was doing particularly well because yes, if you compare the year-on-year figure on the margins front, then there is a significant deceleration. But on a sequential basis, they've actually improved 10 basis points better than the previous quarter and well above what they've guided for, which is to maintain it above 15%. Execution seems to have been very strong because you're looking at 130% improvement in the top line on a year-on-year basis. Do you like Waaree Renewables?
So we have coverage on Waaree Energy and not Waaree Renewables, but numbers, it's a subsidiary, so numbers have come out pretty strong. For Waaree also, we are expecting a strong earnings for this quarter, and we are also expecting a strong demand in both domestic as well as international markets for the solar module cell manufacturing, given that the current energy crisis A lot of countries are now focusing or refocusing on the renewable energy sources. So we believe that with a strong order book and better execution, the company looks well set for a good growth of about over the next 2 years. The production is also being ranked up with the project, the execution being top notch. I think the market leadership clearly is with both Premier Energy and Vari Energy, both of which we like as a
Premier Energy and Vari Energy in focus. So is Apollo Microsystems, as the company has received a government license to manufacture arms across 2 categories. Parth joining in with more details. Parth, what's the story?
Thanks, Savanna. So Apollo Microsystems is an Indian defense and aerospace technology company. They design, develop and manufacture mission-critical electronic systems and complete weapons for India's armed forces. Now, the recent development is that the company has received an arms manufacturing license from the Government of India. Now, this approval is across 2 categories of weapons. The first category is guided weapons, underwater systems, as well as countermeasures, which includes missiles, torpedoes and underwater mines. The second category is aerial weapons and systems, which includes aerial bombs and rockets as well. Now, talking about the manufacturing of these weapons, so that will be done across the 2 facilities which the company owns in Hyderabad, where they have a capacity of around 1,000 units for weapons in each category. Another interesting fact is that Apollo had recently acquired a step-down subsidiary called Ideal Explosives, which has expertise in making explosives, propellants and other systems as well. Now, this is directly relevant to the weapons that Apollo has now been licensed to manufacture by the Government of India. The order book of Ideal currently stands at around 500 crores and management expects it to be PAT positive by the first quarter of FY27. So this is a really important step for Apollo Microsystems to enter into the India's defense manufacturing sector, and let's see how it goes for the company in the upcoming years, given how bullish the management has been on their guidance as well.
Absolutely. Thank you for that, Parth. All right, exciting show that's coming up right at 3:30. This is something that we do every Friday. It's called the Editor's Cut, and we invite a guest editor into our studio to give perspective, to speak with all of us. Hiren Ved is our guest editor today, and he's already in our studio. You're seeing him there in our conference room, prepping before the show. So that show starts in about 12 minutes from now. Don't miss it. And you know, some of the important things that it's to talk about today, and we always run out of time on Editor's Cut because everyone has so much to talk about, Alex. But what a week it has been. It's been a week where the mood has very visibly shifted.
Yeah, April, surprisingly, you get so used to being pummeled and beaten down that you don't realize that good things have happened. And I was looking at the numbers just now. We'll talk about this on Editor's Cut as well. We've come a long way. And in fact, you were pointing out that we've actually moved above pre-war levels for a couple
the United
of those.
States.
Oh, for us.
For
but
the
we're
United
not too
States.
far away from...
We're not too far away. All of those details, all of that data on Editor's Cut. So don't miss it in just a short while from now. Jay, good time in the afternoon to get a BTST idea from you. Do you think banks will make it on the list at all, or would you wait to see the numbers first?
I would be a little more cautious when it comes to bank. You know, I would look at something within the capital goods space, different space for BTST. And to me, Bharat Forge looks like a good candidate. So I would use Bharat Forge currently at 1864 with a stop loss of 1855 for it to trade around 1900 tomorrow.
Okay. All right, news coming in from Zentech. Just pull up that stock. It's on your screen as well. The flashes below. They have a new set of orders. They will be manufacturing weapons for air defense and naval operations. They've got an arms manufacturing license from the government for cannons as well. That stock's spiking as we speak. They will be manufacturing cannons and critical weapons systems. Zentech in focus. We were just talking about defense. We're talking about Apollo Microsystems before that. Look at that spike that we've seen of about 7%. Jay, what are your favorites in the defense pack, and how are you looking at Apollo Microsystems as well as Zentech, since we're talking about it right now? Of course, big spike right now. So if you've missed it, you're going to have to wait.
Yeah, see, Apollo Microsystems is a very strong chance. It's got a very good possibility that it's going to cross the 351 high it registered a few months ago. And yeah, like I mentioned just moments ago, Bharat Forge also happens to be in the defense space. And more, if you look at the BSE Capital Goods Index, I'm expecting the Capital Goods Index to hit 82,000 in the short term, and somewhere about 99,000 in the medium term. And most of the stocks within the older BSE Capital Goods Index overlap within the defense space. So yeah, so I'm very bullish on the BSE Goods Index, ABB, Siemens, Thermax. Most of the names are very bullish, and we even discussed Thermax the previous time I was on NDTV Profit, and it's doing pretty well. I'm anticipating Thermax to double from current levels.
Ooh, Thermax to double from the current levels. Interesting, because there's quite a bit that's playing out fundamentally for Thermax as well. And Siddharth, I wonder what you think about this, because in conversations with the management, they've said that the holdover of those relatively low margin products will head into FY27 as well. So if there will be an improvement, of course, but you could well have to wait till the third quarter. Is that fair?
So yeah, I think stock has seen a sharp rally, but what we are also expecting is that the numbers are not that great. There is an overhang because of the legacy projects. There is weak green solution inflows as well as margins dilution from the capacity addition. So overall, we believe that the stock could remain under pressure, but we need to see the delivery in the Q4 and the outlook for Q1. The company is also trying to make inroads into the data centers, industrial products, which are relatively better placed compared to some of the legacy projects that they have had. So I think as of now, there are mixed views, but clearly Q4 could see a damp number, and hence not that excited on Thermax in the entire capital goods space. I think there are much better companies which are reporting good order book as well as good execution, and some of the energy related stocks, for example, we have Siemens Energy, which is doing very well in the large industrial space. Within the mid cap space, Kirloskar Oil Engines, that is consistently delivering strong numbers, expected to come out with good numbers. So I think some of them are better placed compared to Thermax.
What about the defense story, Siddharth? That's actually turning out to be quite an interesting play. I mean, what Zentech has just reported is also interesting. Not just India that is ramping up its defense needs. It's about Indian companies turning into export potentials as even Europe, etc., ramp up defense. What do you think are the companies that still have opportunity over here?
Yeah, Kamal, I think defense as a structural story in India, in US, in Europe, whatever region you are in, you would have to spend on the defense given the current geopolitical environment. We are now having 2 to 3 live wars that are happening in the world as we speak. And Europe, there is the talks of now making a mini NATO without US within Europe, and they would have to spend a lot. So India sits pretty strongly in this environment because of A, their neutrality to most of the parties, and B, India has been spending and upgrading their technology, their manufacturing capabilities over the last several years because of the domestic demand that is there. So I think there's a huge demand from the domestic side, where the Defense Acquisition Council has been giving out strong orders month after month. Even March, we saw almost 2.38 lakh crores of new orders that were delivered. Add to it the defense, the export opportunities that is opening up. A lot of these Indian companies have global tie-ups. They are manufacturing in India for India, plus the exports opportunity that they get. Stocks that we like, the larger ones like BEL, that is something that we like, is a large cap company. Bharat Dynamics is another one where they are setting up long capabilities within the missiles as well as other defense capabilities. I think these are the two companies which we prefer, while some of the others like Bharat Forge, L&T have also the defense capabilities, which is helping them. Just in case Bharat Forge, the growth that we are envisaging FY27, FY28 will be largely driven by their export segments going forward.
Yeah, okay. All right, we're drawing to a close, and the question is really, what should you do heading into next week? Do you take a chance and hold on to your positions, Jay? Do you advise that that should be the case? Because anything could happen over the weekend, right? We're still in that phase.
Yeah, and also from the 22,182 low, now we are heading into a very short-term resistance into a key zone of 24,570. So a little bit of caution, partial profit taking, but the trend remains up. But the market is due for a short-term pullback, but the medium-term remains up. So from a 1 to 2 day perspective, you might want to take partial profits, but there is residual momentum heading into about another 200 points for the Nifty. So depending on the risk reward that you want to play out, you can decide to either book out partially or hold on to it.
Nifty level you would watch out for next week, Jay? Would you buy the Nifty right now? We're closing well above 24,300 comfortably, really.
Yeah, I mean, I already turned bullish in the beginning of April, so I actually don't buy such a large spike. I would prefer to wait if I haven't already bought. So right now I wouldn't buy, but I will wait for a pullback to come through. From here on, the markets are a buy on dip.
Specifically on the bank Nifty, Jay, because there's been a relative underperformance, and we've got two major banks posting on Saturday. Would you buy the Nifty bank or wait for Monday?
Yeah, I would definitely wait for Monday. And the next leg of the rally is probably going to be led by private sector banks. Public sector banks have done their dues before March. So I think the next leg of the rally is going to be led by private sector banks. ICICI in particular, I'm quite bullish on it.
Siddharth, one top idea before we let you go and we close today's trade and for the week.
So I think one stock idea that I would leave with is Tata Power. The company is doing a lot of expansion in the renewable energy space. Plus, in the core business, they have adopted the Databricks platform, which will enable the real-time grid monitoring, better power forecasting, and smarter electricity distribution. This is expected to reduce power losses, improve billing accuracy, and lower operating cost. Plus, as I said, the peak power demand is set to exceed 250 gigawatt. And amid the anticipated El Nino led heat waves, as well as the strong demand structurally from the data centers, from the urbanization, and so on and so forth. Meanwhile, the company's Mundra UMPP is also seeing revival under the revised terms and could improve the cash flows going forward. So we have a buy rating on Tata Power with a target price of 455, 460.
Okay, thank you so much, Siddharth and Jay, for speaking with us this afternoon and joining us on India Market Close. As we close out the markets on a happy note, we'll pull out the weekly chart as well, but you're closing nearly 1% up on the Nifty. I think that's a big deal. 24,364 at the day's high point, if I'm not mistaken, with a very robust advance decline ratio, more than 2:1, 2 advances for every decline. Intraday of the Nifty, let's take a look at it and where we're closing out as we wrap up the day's trade. Yes, you are at the high point of the day. That's fantastic. Nifty contributors next, please, and then we'll go to the heat map where we'll just take a look at what really has helped. RIL has pulled up in the last part of the session. HUL was already there. HDFC Bank and State Bank of India also joining the party. So you have the heavyweights coming in. The others at 114 also tell you that.
Yeah, the rest of the constituents. In fact, pull up the heat map.
Yeah,
the
participation is wide. It is the heat map. It's just a Wipro that is sulking, in HDFC Life, a bit of Sun Pharma, Bajaj Auto, but not that much. HUL, Nestle, JSW Steel, all holding strong.
Yeah, absolutely. It's the FMCG stocks that have come to the party. In fact, I'm very curious to see whether that reflects in the sectoral heat map as well. Let's pull that up next. Because, yes, you've seen some stellar performers. I want to see the sectoral heat map. There you go. FMCG is the top performer with gains of 2.7%. You have energy that's not doing too badly. In fact, a lot of people are talking about that as a theme. You just heard Tata Power is the top pick. Small cap index is done particularly well. Oil and gas on account of Reliance Industries. But you have a defense that has continued to do well more often than not this week. It's been a stellar rally in April, Tamanna. That's the long and short of it. We're actually now within touching distance. I was looking at for the mid-cap index, just about 3% away from 52-week highs.
Yeah, I just want to pull up the India VIX as we close off, because heading towards the 17 mark is a very, very good sign. You're at 5% down on the India VIX. 17 mark is an all is well kind of a mark, and you are closing down towards it after huge turbulence in this one index going forward. So we're closing the week well. I wonder if you can show the weekly charts very quickly. Just want to see how the Nifty has gained through the week. Key indices at least. So look, it's been patchy. Remember, there was one less day of trading, but about 2% at the end of the week. So it's had its ups and downs. It's not been all smooth sailing. The Bank Nifty, Nifty IT are the other ones that we should see apart from the mid cap and the small cap. Of course, the Bank Nifty is up 2.5% this week. The Nifty IT has also not been that great, 2%. But this real story, I presume, would be in the broader markets. Mid cap, 4.5% up. Small cap likely to be even better for the week. That's right, about 5.5% up. I'm glad if people's portfolios have improved their health. I wouldn't say they're completely in the pink of health, but at least gone out of the ICU.
You know, and it's a great deal because you're talking about, we spoke about this, the March data for mutual funds. People have deployed in March. And that means that they've seen that benefit of having deployed when the chips were down.
Yeah, well, let's hope that continues. We'll have to wrap up this edition of India Market Close, but don't go anywhere. We're back after a very short break. Editor's Cut up next. Hiren Ved will be joining us as guest editor as we talk about what the week has looked like and what you can expect over the next week. It's going to be a full house. Join us as well. We'll be right back.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the self-prospectus and the tranche 1 prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show.
Welcome to the Editor's Cut. We're a full house this Friday afternoon with Hiren Ved joining in what he described as a dangle before we opened up the show. I don't quite know whether it's going to be a dangle, but it is a free-for-all and hands-off. Okay, what are we talking about this week? Just to sort of structure it, we're going to talk about the week gone by, second week in a row when markets have closed up, what we could see next week. Let me just start off by saying I think the market is mentally done with the war. I don't know what's going to happen in the next 24 or 48 or 72 hours, but mentally the market's moved on. Fair to say, Hiren?
Yeah, I mean, actually, if you go back and see every crisis, right, the most damage gets done in the first 1 or 2 weeks. And then people get used to it over a period of time because, you know, there is an old saying that, oh, share aaya. Initially, you can get very perturbed, you can get very fearful, but you can't keep scaring people with the same, event because markets have a way of pricing it in.
So in our world, it is post aaya, ek aur post aaya.
Correct. So even COVID, for example, the markets bottomed on the day the lockdown was announced, right? Again, go back to the Russia-Ukraine war. I think in the first 1 or 2 weeks, the markets had done whatever damage it had to do. And then while the war is still continuing and nobody cares now what is happening, the markets moved on, right? So the beauty about the markets is that it has a way to finally price in everything. So maybe initially you don't know the extent of the damage. So there is always an extreme move, and then at the end of the day, all participants are, at the end of the day, human beings. So, you know, fear, uncertainty, you can build, just like during euphoria, you can build any amount of castles in the air. In times like this, it's just a constant hammering of bad news, right? You open the newspaper, there's bad news. And now
Which
forget
means you're reading the
newspapers,
news.
Twitter.
I was just wondering.
Twitter, WhatsApp, whatever, right? I mean, there's a barrage of bad news that comes in. So I think just one more of those events. But what it tells you is that what all the time the markets have been saying the same thing. And I think once again, so-called buying the fear or buying the dip has worked, right? And I think the SIP numbers in March clearly show that the investor is still going after that narrative or planning to say that, oh, if the markets are really very down, let me buy.
So here's the question, Hiren. If in September 2024, it was peak euphoria for India,
that is what we need, we think,
on hindsight.
Yeah.
Is it possible that March 2026 was peak pessimism? Because both from levels, we just spoke that $13 billion sold in a single month alone. Was that peak pessimism?
I 100% believe.
You believe
it was peak pessimism. I mean, you know, people, obviously, actually 18 months means nothing in the markets, but everybody thinks 18 months was a long period, 2 years is a long period. We haven't made money in the markets, and then FIs have been consistently selling. So I just think that, you know, I believe that the last few days of March, the intensity of the selling that we saw almost made me feel like people are just throwing away everything that they have. And they're finally throwing away the towel and giving in, you know. So I do believe that we did reach a point of peak pessimism.
I don't want to make the point because you mentioned SIP numbers, and
if I remember the numbers correctly, 32,000 crore rupees gross level, right? Net would have been less.
Yeah.
But if I think about it, and we made this point last week, but the implications are what I want to talk about. 40,000+ crore rupees net basis deployed into active equity mutual funds, a further close to 20,000 crore into index funds and other ETFs, likely mostly into equity ETFs. Now, here's the thing, if you deployed in March, just at the index level, you're up 9% for the Nifty 50, you're up 13.4% for the mid-cap index, you're up 15% for the small-cap index. And hopefully those active fund managers have given you alpha and your portfolios look sizably better.
Yes.
And so you have been rewarded for buying the dip.
If I look at only that period.
Yeah.
But it reinforces good behavior is the point that I'm making.
But I think to add to this, what I would want to put forth is, it was a momentum market that we were seeing. And with the earnings coming in right now, the narrative is going to shift to earnings plus a valuation-driven market from a momentum-driven market that we've seen in the last 10 to 15 days. And if that is the scenario, for how long will this continue? Because in case you do see a dip in terms of earnings, because the effect of the war is going to come in probably in the first or the second quarter of FY27.
Yes.
Will the markets be ready to look at that aspect?
Good point.
So I think let's put it this way. You had a secular fall in the market and you have a secular rise in the market, right? And for sure, we all have to face the reality of the earnings. But what will happen then is that the action will shift from saying market falling or market rising to companies which really show an impact on earnings. So there will be, a differentiation amongst sectors, amongst companies. Now, one argument was that the markets are forward-looking, so when they fell in March, they were already discounting some of the impact on earnings, right? So I'll give you, because we have done this a little bit more scientifically. So in 2022, when Russia-Ukraine happened, Q1 bore the brunt, Q2 bore the brunt. We almost, between these two quarters, we saw 400 basis point of compression in EBITDA margins for the NSE 500 companies, right? And then Q3, you saw some recovery, and Q4, we recovered all of the compression that we had seen. So it took 4 quarters, 2 quarters of downfall and 2 quarters of recovery. And finally, we reached that point where, things improved. But, one very interesting thing that we saw during that time was that, the supply chains got impacted at that time. And if you remember, for the automotive industry, chips were not available.
Yeah. Not available.
There was more COVID than Russia.
But I'm just saying that what happened is that actually because of the constraint of supply, everybody raised prices. And actually margins for automotive companies went up when the market thought margins would come down, right? So sometimes you never know. You may think that margins may get impacted, but margins can, if you are able to pass it on, and everybody in the industry passes on, you may actually see. So what I have seen, at least historically, and not maybe across everybody, but actually inflationary periods where there is cost inflation, there is more pricing power that some industries have.
Yeah.
Right?
So not all boats are. I would
actually, just that Indian corporates, when they push to the wall, they somehow brings out the best. We saw that in COVID as well, right? The margin picture really went up during that period when the backs were to the wall.
People had moved to a just-in-time model, and so the entire game had changed to bring in more efficiency.
Yeah, so the reasons will be whatever. But
I just wanted to make the point, are we assessing fairly if we are comparing this to COVID. To the Ukraine-Russia war?
No, every crisis is different.
I would argue this is the worst, and maybe that pessimism that we saw in those few days was warranted because we're still seeing the impact of it. And even if we say that both sides are talking about a ceasefire, look at the indicator to watch. I would put forth. One
Oil
is
price.
and the number of ships going on the Strait of Hormuz. We need to look at LSEG every day. There's 3 ships going. Oil prices are still about 97, 98.
Yeah, they are not down to...
Nothing has really moved.
It's more psychology, right?
The fact is that India has suffered more than Dubai, more than United States, more than markets of countries that were involved in the war. We've suffered the most for a reason. And even if tomorrow oil prices, the Strait of Hormuz opens up, at least 2 quarters is messed up for a lot of industries.
I agree.
And because the markets discounts 6 months out, what is the impact therefore? Does the market worry about these 2 quarters, or does the market say, chalo, this is baked in?
No, see, so I would like to differentiate between markets and companies. I think from here onwards, as the earnings season starts, right, the broad discounting will stop. It is a specific discounting that will start. So if a company delivers good numbers, stock might go up. If the company delivers bad numbers, the stocks might not do well. Okay, let's take the example of Wipro today. Okay, not that I own it or whatever. I'm just giving an example, right? Given the horrendous numbers and
horrendous, we're going with horrendous.
Yeah,
okay,
it's okay. And a not so great forward-looking kind of guidance. Now one could argue that there is a large buyback or whatever, but like 2.5% down or something like that, right? It's not like something great. Now that's because the IT companies already took a knock because of AI way before this war started, right? So some of that was already knocked off. And now probably, okay, I believe that even within IT services, because of what is happening because of AI, I think you will start seeing differentiation. Even within IT services now, you will have a few companies which over the next 1 or 2 quarters, if they are able to keep up their growth, because the big debate is that growth will slow down even more. There will be deflationary impact on revenue.
Yeah.
Now, some will show that deflationary impact.
In US, you're saying growth in US.
In US dollar terms, right? And some will be able to show growth. The ones that will be able to show growth, I think there is upside still over there, because you were hammered because of AI. Now, if the numbers are reasonably good, I think those stocks can do fairly well.
But if
so you can't talk about the IT pack as a whole now. I think there will be differentiation that will happen from this point onwards as the Q1 numbers start to come through.
But don't you think, we were just before TCS came in, a colleague of mine who tracks IT closely was just looking at growth of TCS, Wipro, Infosys, and the growth on a quarterly basis, if I'm not mistaken, is almost at a 15 to 16 quarter low.
Yeah, it is.
Right? Now,
it's abysmal.
So, to add to that, the question is, how much are you going to see from here? And this morning, Tamanna and I were discussing whether the price to earnings is absolutely not something that we could look at, and is it the PEG ratio that we should start looking at?
Yeah.
That was the discussion we were having, to then ascertain the price to earnings versus the growth of these companies. And in terms of sectors, then if IT is a downer, banks, I don't know where they are going. It's absolutely stable. And then you have new narratives which are emerging, where you're seeing power as a sector which is emerging, or infra as a space which is emerging with cap goods. So is that the shift in narrative that's happening, where we're talking about AI which is leading that downtick here?
Yes.
But should you leave them aside and then move to other sectors?
No, see, that is more a question of how you want to construct a portfolio. Right? In any sector, wherever there is a narrative plus earnings growth, you will have fantastic performance, which is what is happening to the whole energy, power sector, right? Now, you could argue, should they trade at 80 times, 70 times, 60 times? But that always happens because you need a narrative and fundamentals both. When both are together, you don't know in the short to medium term where PEs can take you.
Correct.
Just like a no earnings growth and a bad narrative could derate your PEs, which may seem unreasonable, there is unreasonable on both sides. So right now, I think what is happening is that, yes, power is growing, and it fits very nicely into the narrative that how do we play AI in India? And the only way, or one of the more efficient ways to play AI in India is to buy power stocks, right? And therefore, they are in a very nice zone right now where you have earnings growth plus a narrative plus a way to play AI. Now, how long this lasts, we don't know. But this is typically how P multiple expansion happens in a sector, and the same thing happens on the opposite side.
It's like a AI ancillary play, which is at the forefront versus AI.
Cooling systems.
Yeah, that's ancillary,
simplified,
right?
you will need a lot of power to drive AI innovation,
Correct.
so then drive the power.
So
stocks.
Infrastructure first for AI and then AI, probably.
And extended cooling systems, all of those things will come into play.
No, so I just wanted to make the point, something we spoke about earlier, and we pulled up this data, our research team actually pulled up this data about how global indices fell in the range of 7 to 24% during the US-Israel-Iran war. Among the key indices, Nifty fell 15.5% in USD terms, third worst performer. And now only two indices have actually recouped the losses, S&P 500 and CSI 300. Two of them are less than 1% away from recouping, that's Hang Seng and Nikkei. We're still about 6% away, which brings me to the point, when the war settles, there's still inherent problems that we were facing earlier, which is why FIs weren't looking at India so positively.
Correct.
So when all of this crisis goes away, then the question comes in, what's happening with your rupee? Where is the AI play? Are you really growing as much as you should at this point?
Correct.
What is your rural consumption coming in like?
And monsoons not looking particularly great.
So,
look, let's accept that we are the bad boys of this cycle. I mean, we are the D-rated market
bad boys
of this.
is not necessarily a bad thing.
Not bad boys. Okay,
Unsuccessful boys.
We are the ones where the narrative is against us.
Yeah.
Right? So...
Gully boys.
No, gully boys are winners.
No, eventually, Apna time aayega.
This FI thing is very interesting. I find it very amusing, and I think Akash wrote an article also on that, and I actually jotted down each of the points that he wrote about, and I think by and large, see, what happens is that people decide on an action, and then you force fit a narrative to that action. Okay, so let's say you don't like a stock, or you sell a stock. We are all intelligent enough to build a very nice narrative why you sold something, and a very intelligent narrative why you want to buy something, right? So this FII is also a human being at the end of the day. There's no one guy, he's also a human. He also buys into narratives, and that is why the market exists, right? That is why it's so interesting. Now, I know for sure, and I've said this, I think, on your channel and many others, is that in 2021, when I used to travel to the US and meet all these allocators, and they would nod their head vigorously and say, China is an uninvestable market, right? Because, the whole regulatory crackdown on the internet companies in China and, the Qi and, all of that, right? Now, from uninvestable, you're telling me the CSI 300 is rocking, right? So 3 years ago, it was an uninvestable market. Today, it's a perfectly investable market, right? Qi is still there, right? So narratives can change, right? So I think we've been badgered so much in India कि तुम्हारे पास growth नहीं है, you don't have AI, it's all bullshit. They didn't find our markets expensive before, because if you look at the historical premium that India used to trade at, we used to trade at a much higher premium.
But here in the counter is that the other markets didn't have growth. Now Kospi, etc. have growth.
So that is what I said, that there is truth. There is some truth. What I don't agree is that they will never come back.
That's true.
Okay.
No, but not making that case.
No. I'm saying that what happened, earnings growth got front loaded in these markets, right? I mean, obviously Korea and all these guys had no, I mean, who cared about chip companies? They used to trade at single-digit P's.
But
in those countries.
So the argument in 2022 was very strong. 2024 in India was very strong.
Yeah.
There was froth in the broader market,
was.
right? But is that argument, can it be made in the US? You had just this week a shoe company that pivoted into AI and went up
That's my
500%.
favorite story of the week.
500% Hiren in one day.
I don't want to.
One stock.
I don't want to paint the entire market because of that one move, but I think that is very specific to, and we were discussing,
Exactly.
right? That let's not forget that AI is a very powerful narrative, right? And today, if anybody says I'm going to do AI, your stock will re-rate. Same thing happened when digital was happening, right? And I was telling her that in 2007-8, Morgan Stanley wrote a report on Reliance, and I'm not picking Morgan Stanley particularly here, so a disclaimer, no disrespect meant to anybody, but they came up with a report that India will join the OPEC because there was so much gas in KG-D6 that will happen, right? So I think these cycles keep coming in the market, and I think that the US markets are doing what they're doing. It's a very large market, so you can't manipulate it. So I refuse to believe that, it's all euphoria and bullshit. I think the fact of the matter is that all the top AI companies are there. And they are putting money on the ground and they are building the capex. Now valuations will correct at some point in time, because at some point and I don't know what that point is, where investors will come and ask a question, what is the ROI on this investment? Not too far back, sorry, I'll just complete.
Yeah, we have 60 seconds on the show and I have one more question. So please finish your point. No, so what investors would want to know from this, Hiren, where is it that Hiren Ved finds value? We have 60 seconds for this.
Value?
Or growth, or where Hiren Ved would want to put in money.
I can tell you one thing, we were buying in March.
Wow, okay.
We were buying.
तो बड़े DI number आपके थे?
नहीं, वो पता नहीं. But we were buying. We were and we, as usual, we keep telling investors that this is the best time to buy. Some listen, many don't, as usual, because there is always that little fear which is there. And and now the checks will start coming because the markets look good and the markets have bounced and it seems like this is going to happen. So I'll tell you what, I have realized one thing that obviously we all have to be counter-cyclical in that sense, but I think we are seeing disruption so often in the last 2-3 years, right? That I think that when there is relative calm is the time to sell a little bit.
I don't know
because
if
you will get again, this is just we're just having fun. But I just feel that when there is relative calm and there is no disruption, which might last for a few months or weeks,
at this point,
until the next thing starts.
It's ours. It's ours.
It's ours or whatever, and then you'll get a next great opportunity to buy. But the fact of I can tell you one thing. I mean, if you said small cap index is up 13.5%,
15% now.
15%, but that's the index. Individual stocks are up 30, 40, 50%.
Yeah.
It was a great time to buy in March. But nobody bought.
No, you had
I
to
don't
have,
know. Maybe I shouldn't say
nobody
bought.
You had to have the courage, the liver for it, the heart for it. So, at that point, not to get impacted. But we are right out of time. Hiren, this has been fantastic. Thank you so much for coming to our studios and joining us on the air.
I love this dangle. It's
yes, exactly.
It was a calm dangle. Next time we'll get even more punchy. Tell us what you think about the show. Write in to us on what you want us to discuss on the editor's cut, and we'll see you next week. Thank you for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
Positive global cues drive the Lal Street today. Nifty settles above 24,300 while broader market outperforms the benchmark. All Nifty sectors end in the green except Nifty IT that ends on a flat note. Wipro shares cracked nearly 3% post Q4. Company's CEO Srini Palya says that despite the global headwinds, investors are still bullish on the IT sector. Crude cools as diplomacy takes center stage. Oil prices fall after Trump struck an upbeat tone on a potential US-Iran ceasefire. Crude hovers around $96 a barrel. With Akshay Tritiya just this Sunday, there's good news for the gold buyers. DGFT issues fresh list of 18 banks to import precious metals. The move comes after several banks temporarily halted gold imports amid the delay in government clearance. Initial probe into the Vedanta power plant blast indicate excess fuel build-up inside the boiler, causing a sudden pressure surge and explosion. Officials also point to maintenance and operational lapses. Probe intensifies in TCS Nashik harassment case. Accused TCS employee Nida Khan is in Mumbai, says her family, but she seeks court relief. Maharashtra Chief Minister Devendra Fadnavis assures justice, says that the government will go to the root of the case. The NSE IPO is gathering momentum. Government is in talks with the top PSU shareholders to participate in the offer for sale ahead of the April 27th proposal deadline, with NSE targeting around 4 to 4.5% stake dilution as the listing process moves steadily ahead. According to the Bloomberg Billionaires Index, Gautam Adani becomes Asia's richest, with net worth climbed to $92.6 billion. Adani is ranked at 19th position globally. Gautam Adani beats Mukesh Ambani to claim the title. Voting on women reservation and delimitation bills in the Lok Sabha shortly ahead of the voting. Prime Minister Modi hails Nari Shakti while leader of opposition takes jibe at the government and says this is not women's bill. Hello and welcome. You've tuned into Profit 360 on this Friday afternoon. I'm Nisha Poddar. Let's take you through the top story that we are tracking today. Well, the stock markets, they stabilized in the later half of the day today, ironing out the early volatility that was seen, and the benchmarks really swung to the positive zone, with the Nifty settling above 24,300 odd levels. And just like yesterday, remember, the broader markets really continued to see strong buying interest, with both the mid as well as the small cap outperforming the frontline indices. Let's take it across to my colleague Jasmeet, who's joining in with all the market action of the day and the week. Jasmeet.
A good day for markets today. Nifty 50 ends in green and gains about 0.5% and ends above the 24,350 mark. In terms of top gainer, we have stocks like HUL and Nestle both gaining over 4% and Nestle gaining over 2%. In terms of the broader market, it has outperformed the benchmark in today's trade, while midcap 150 ends in green and gains over 1%. While Nifty midcap 150 gains in trade for 3 consecutive days in a row, while the top gainers are Gujarat Gas and Colgate, where they have gained over 6% in today's trade. Now, if you look at the weekly image over a week as well, Nifty ends in green and gains about 1%. A good week for Nifty altogether. Now, if you look at the top Nifty gainers in terms of the over the week, we see that Adani Enterprise has gained the most, has gained over 6%. And this marks the second consecutive week for Nifty 50 to end in green. In terms of the broader market over the week, we see that broader markets have performed in line with the benchmark, while midcap 150 has gained over 3.5% during the week. And in terms of the top gainers in Nifty midcap 150, we have stocks like Suzo Energy and NTPC both gaining over 15% throughout the week. Now, in terms of small cap 250, even that ends in green, gains about 4%, and top gainers of small cap 250 are stocks like Shipping Corp and GMDC gaining over 22% in the current week. Now, in terms of the other sectors, all sectors end in green note, barring Nifty Auto, which saw slightly pressure. Now, in terms of the top gainer, we have Nifty Defense, which gains over 6% during the week, a good week for defense stocks. Now, in terms of top gainer, we have stocks like Paras Defense and MTA Tech in Nifty Defense has gained the most, gaining over 16% throughout the week. While Nifty Auto is a worst performing sector, down about 0.5%, while the top losers in Nifty Auto for the week were Hero MotoCorp and Eicher Motors, both losing over 3% during the week. While lastly, in terms of key trend, Nifty IT ends in green for the 5th consecutive week, while Nifty Pharma, Nifty Financial Services, Nifty Bank end in green for the 2nd consecutive week. While lastly, Nifty Realty, Nifty Metal, Nifty Media ends in green for the 3rd consecutive week in a row.
All right, thanks Jasmeet for giving us a roundup of the market action. So stability seen there amidst the Middle East crisis, also reaching some sanity. In fact, let's hear out one of the experts talking about the Indian markets, Mark Matthews, the head of research for Asia at Julius Baer. He believes that India deserves to be re-rated upwards. In fact, in a conversation with us, he really explained that Nifty's relative valuation to the S&P 500, and he drew a picture of how history signals a forthcoming growth ahead. Listen in.
I think India deserves to be re-rated to the upside, and I believe that is happening now. It started, it will continue. I've seen several statistics to look at where India was previously at the sort of levels it's at now in terms of its 200-day moving average or its price earnings ratio or its various other valuations. But I'll just give you one, which is that in the last 20 years, there were only 2 other times that the Nifty's price to book ratio reached 0.6 times that of the S&P. And by the way, there was a 3rd time, it just happened 2 weeks ago. So 3 times in the last 20 years. But those 2 previous times, the Nifty was much stronger over the next 12 months.
All right, let's focus on the IT sector, which was a laggard in trade today. A lot of that really came in from the shares of Wipro, which fell as much as 4% today after the IT company reported an inline quarter. And this could be because while at first glance the financial performance met with the street expectations, but the company gave a cautious guidance of negative 2% to 0% growth for the next quarter. However, CEO Srini Pallia, while speaking to NDTV Profit, said that despite the global headwinds, well, the investors are still bullish on the IT sector. Let's listen in to his comments on the order pipeline that he shared.
So first and foremost, if you look at our current Q4, the results that we have declared, three of the four SMUs have actually shown a sequential growth, whether it's Americas 1, Europe or APMEA, and they have shown 3 consecutive quarters of sequential growth. I think we had a challenge in Americas too, of 2 specific customer issues. One was a client changing the direction. Other one is where we won a large deal, but we have not been able to ramp up enough. Second, if you look at the pipeline as of today, it is very secular across the industries and across the markets. And that gives me a good comfort that, despite the geopolitics that's going on, trade and tariffs that are going on, the clients are being very resilient and they're investing in IT. And these areas are AI, data and cloud, which is very predominant. So to me, the opportunities going forward is not only, leveraging AI for reimagining the client process, but also demonstrating AI in their run and operate and change and transform programs as well.
All right, the street really punished the Wipro's stock today in trade. All right, let's focus on what really did well. Shares of JSW Steel, they ran uphill, gaining over 2% in today's session. And this comes as the company's arm is set to form a 50-50 joint venture with South Korea's POSCO Group. Now, the JV will be building a new 6 million tons per annum of greenfield integrated steel plant in Odisha. As part of the deal, remember, POSCO Group will subscribe to shares in JSW Steel's arm for 509 crore rupees. Now, this partnership combines JSW's local presence with POSCO's advanced steel making technology. So that's yet another joint venture or tie-up, that global tie-up that JSW has had. All right, moving forward, remember Akshaya Tritiya is just around the corner and there's good news for the gold buyers as well. The Directorate General of Foreign Trade, or DGFT, has issued a fresh notification listing 17 banks authorized to import gold as well as silver. Now, this comes after several banks reported blocking of imports and 2 large banks approached the RBI today. Now, this new move, remember, clears the way for smooth imports again, especially before the gold buying festival really coming in. In fact, my colleague Rishabh joins in with all the details on this development. Tell us, Rishabh.
Right, what we have is a notification that is coming from the Director General of Foreign Trade, what they've said. And finally, after a delay of about 17 days, have issued a notification that has authorized about 17 Indian and foreign banks to be authorized to be importing gold and silver. The entire fiasco was the fact that this authorization hadn't come in from the DGFT. It was supposed to come in on the 1st of April. We don't know why this delay happened, but there were clarity that had come in from RBI, but the shipments were stuck at several points, given the fact that the DGFT hadn't authorized these imports. What we're also seeing is the fact that finally this notification comes after about 2 large banks had made pleas to the RBI asking them to authorize these imports. These imports are a major source of course, firstly meeting the sort of demand that India has for these precious metals. Also, it is to keep in check the sort of current account deficit, and these precious metals, gold and silver, with the recent appreciation also do act as hedges against global uncertainty even for banks. So that's what we're picking up. These shipments were stuck since April 1st. The previous list had expired. The previous authorization had expired on March 31st, and banks are required to have these authorizations from DGFT, RBI as well as customs. So that's what we're picking up in terms of this DGFT related blocking of gold imports.
All right, the blocks on gold and silver imports cleared there. Thanks, Rishabh, for all the details. And Sunday is Akshay Tritiya. All right, crude prices, they continue to simmer down with Brent hovering around $96 per barrel and WTI near 91 levels, both slumping over 3 to 4% today. Meanwhile, remember, rupee ended 27 paise stronger at 92 rupees 92 paise against the dollar. Remember, that is below 93 mark as well. That's good news, although it still logged a weekly decline, remember, of about 0.2%. Now, the recent ceasefire signals have offered some relief to energy prices that had really risen over 40% due to the Middle East tensions. And after Israel and Iran agreed to a temporary ceasefire, remember, of 10 days, there are celebrations in Lebanon. But Israeli Prime Minister Benjamin Netanyahu insisted that Israeli troops would remain in security zone in Lebanese territory for the ceasefire's duration. Hezbollah said that it is keeping its finger on the trigger in case of any violation. But the US President Donald Trump says that the US and Iran are very close to making a deal, and that talks could really resume as early as this weekend. In fact, while speaking to reporters at the White House, Trump spoke about the oil prices and the deal with Iran. Listen in.
Stock market is good. The oil prices are coming down, and it's looking very good that we're going to make a deal with Iran, and it's going to be a good deal. It's going to be a deal with no nuclear weapon.
And Washington's decision to really shut the door on Russian as well as Iranian oil waivers has really left India staring at a fresh supply challenge now, and also the price cost escalation that will be seen. Now, responding to NDTV Profit's question, well, Sujata Sharma, the Joint Secretary at Ministry of Petroleum, clarified that government is meeting our domestic needs and OMCs are making efforts to line up the cargoes. She also clarified on reports that Indian refiners are paying for Iran oil in yuan, saying that our OMCs are operating within the rules. Listen in.
Regarding waiver, I mean, we are not the right people to answer it. For us, our demand, we have to meet the demand of our people in the country, and our oil marketing companies are making all efforts to line up the cargoes so that the domestic demand can be met.
All right, moving on to some developments on the corporate side. An FIR has been registered against Anil Agarwal, the chairman of Vedanta Resources, along with the company manager Devendra Patel and other officials in connection with the boiler blast at the Vedanta power plant in Chhattisgarh's Shakti district that, remember, killed 20 workers. NDTV's correspondent Prakash Sahu joins us with all the details from the ground. Prakash.
अभी हम शक्ति जिले के वेदांता पावर प्लांट के गेट पर मौजूद हैं। ये वही प्लांट है जिसने 21 मजदूरों को निगल लिया है और अब तक जो है 15 मजदूर जिंदगी और मौत के बीच जूझ रहे हैं। आपको तस्वीर दिखाते हैं, गेट पर हम मौजूद हैं। यही वो प्लांट है जहां पर जो है 14 अप्रैल को बॉयलर के ट्यूब में ब्लास्ट होता है और जो यहाँ पर एक भयावह स्थिति निर्मित हो जाती है और कहीं न कहीं इससे अब तक जो है 21 मजदूरों ने जान गंवा दी है। सबसे खास बात बता दूं कि यहाँ पर जो है घटना स्थल पर मौजूद बॉयलर मुख्य निरीक्षक द्वारा जो है जांच तकनीकी रिपोर्ट में यह उल्लेख किया गया है कि जो बॉयलर फर्नेस के भीतर जो है अधिक मात्रा में ईंधन जमा हो गया था, जिसके बाद जो है ये जो ब्लास्ट है वो हुआ है। तो कहीं ना कहीं एफएसएल की टीम ने भी एक रिपोर्ट जारी किया है जिसमें ईंधन जो है अधिक हो जाने की वजह से जो ब्लास्ट है उसकी वजह बताई गई। तो कहीं ना कहीं एक बड़ा मामला निकल के सामने आया है और कई सवाल खड़े हो रहे हैं, क्योंकि इस मामले में लगातार जो है प्लांट बंद था, तो आखिर इस मामले में ध्यान क्यों नहीं दिया गया, जिसके वजह से जो 21 मजदूर हैं उन्होंने जान गंवा दी है। और इस मामले में अब मैं बता दूं कि लगातार कार्रवाई की जा रही है और पुलिस विभाग ने जो है प्लांट के जो चेयरमैन है अनिल अग्रवाल, प्रबंधक है और अन्य जो है लोगों के खिलाफ 8 से 10 लोगों के खिलाफ एफआईआर दर्ज कर दी गई है।
All right, that was a ground report from the state of Chhattisgarh. Now, in the TCS Nashik case, well, Nida Khan's husband had been detained by police and is currently being questioned as the probe gathers pace. Remember, according to the special investigation team, Khan had been living in Mumbai for the past 2 months after earlier stays in Nashik as well as Bhiwandi. However, sources do indicate that her husband may have limited knowledge of her activities even as questionings really continue. Meanwhile, Maharashtra Chief Minister Devendra Fadnavis seeking a central agency probe. Let's listen in to what the Chief Minister had to say on the TCS Nashik matter.
देखिए, अभी तो मैं ऐसा मानता हूं कि जो एक घटना टीसीएस में हुई है नासिक में, ये बहुत गंभीर घटना है। मैं टीसीएस को भी धन्यवाद देना चाहूंगा कि उन्होंने भी इसका बहुत कड़ाई से संज्ञान लिया है और उनके जो प्रमुख है उन्होंने भी एक प्रकार से इसकी पूरी निंदा की है, पुलिस को पूरा साथ दे रहे हैं और इसके जड़ों तक जाने की हम कोशिश कर रहे हैं, क्योंकि ये एक वन ऑफ द घटना है या ऐसी घटना और कई हो रही है। ये एक बहुत बड़ा डिजाइन है, इसमें कौन कौन मदद कर रहा है, ये सारी चीजों की जांच अभी हम लोग कर रहे हैं। जांच का दायरा बढ़ रहा है, तो निश्चित रूप से अगर ये कॉर्पोरेट जिहाद होगा तो इसकी जड़ों तक हम पहुंचेंगे।
All right, strong words coming in from Chief Minister of Maharashtra Devendra Fadnavis on the TCS Nashik case. On to an exclusive then. The government is in active dialogue with the top public sector undertakings to participate in the NSE's big IPO offering for sale as part of its upcoming IPO. Now, currently, the PSU shareholders hold nearly 1/3 of NSE's ownership. In fact, my colleague Shrimi shares all the details on the development on the big IPO of NSE. Shrimi.
Yeah, that's right. What we're picking up that the government has reached out to some of the top PSU, which holds chunky stake in NSE, to participate in the exchange OFS. And this is coming just days ahead of the exchange request for proposal. Deadline of that is ending on April 27th. And what we are getting sense that most PSU shareholders are now in the process of submitting their plans to dilute stake as part of the upcoming IPO. And NSE expect PSU submission closer to the deadline, and this is important amid the chatter around weak responses. What we are getting sense that NSE IPO is on track. In fact, they expect 4.5% of dilution in line, and in fact more than what minimum public float, coming at 2.5% as per the SEBI mandate. Now, do remember the fact that this is crucial as it will deepen the entire NSE proposed IPO. And if you see the chart, which clearly says that the total PSU holding is around 31, slightly over 31%. And at the top of that, LIC holds around slightly over 10%, and followed by stock holding in SBI, which is between 3.5% and 4.5%. Now, this is also crucial because now what market will watch that how much actually stake is coming on the table and at what valuation. And when we reached out to NSE for the comment, they reiterated the fact that IPO has been approved by board on 6th of February. And there's no further comment to, make, but this is coming after SEBI NOC in the NSE matter. So we are watching and, closely looking at the story because this is going to be the most anticipated listing in, India stock market.
All right, Shrimi, thanks so much for all the details coming in. Now, billionaire industrialist Gautam Adani, chairman of the Adani Group, has become Asia's richest individual, overtaking Reliance Industries chairman Mukesh Ambani, according to the latest Bloomberg Billionaires Index. Now, Gautam Adani's net worth rose to $92.6 billion, placing him at the 19th position globally. In fact, my colleague Sharad is here with all the details on this development. Sharad.
For Adani Group's chairman, Gautam Adani has become Asia's richest, and this is as per Bloomberg Billionaires Index, and he has overtaken Mukesh Ambani to take the top spot in Asia. Now, Mukesh Ambani slips to the second position as being the richest in Asia. Also, let's look at the numbers. What does it suggest? As per Bloomberg Billionaires Index, the net worth of Gautam Adani is $92.6 billion. That's making him the richest in Asia. This net worth shows a sharp upward move and has added almost $8.1 billion in terms of wealth this year itself. This is the total numbers we are talking about. Over here, Mukesh Ambani's net worth has reflected a decline, and Mukesh Ambani's wealth has declined by roughly $16.9 billion this week itself, and this data is coming in from the Bloomberg Billionaires Index. Over here, two Indian billionaires sit side by side on the Global Wealth Index, and Gautam Adani's ranking is at 19th in terms of the total richest persons in the world, followed by Mukesh Ambani just behind in the 20th spot. But now let's look at how the global numbers stack up. Elon Musk, he maintains a staggering lead as the world's richest individual, and the gap between the first and the second and third is really very big. Now the net worth is $656 billion, more than double of the second placed Larry Page, and that's a very interesting data coming in from the Bloomberg Billionaires Index. Now let's look at the Adani group of stocks, how they have performed. They have grown 11 to 30% in the last 1 month itself. Let's look at the stocks, the performance. Adani Green, Adani Power, Adani Energy, all of them going between 23 to 29%. And if you have a look at Adani Total Gas, Adani Ports and Adani Enterprises, both of these stocks are in Nifty. Both of them have given more than 11% returns in the last 1 month itself. So we can see that is the reason why the net worth of Gautam Adani has gone up, and he has become Asia's richest person.
Right, thanks Sharad for all those details. Now, big development news from Mumbai. Well, MHADA has unveiled the master plan for the redevelopment of Motilal Nagar in Goregaon, one of the city's, remember, largest urban renewal projects. Now, the plan aims to transform the area into a 15-minute city and complete with also schools, playgrounds, civic amenities, and also improved last-mile connectivity, and with rehabilitation as a top priority of this particular project. Now, MHADA will retain ownership of the land, while the Adani-linked private partner will bear the development cost for this. All right, that's all we have today on Friday afternoon on Profit 360, but do keep it with NDTV Profit for all the news and views coming up again later. Thank you so much for joining in.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakur.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest KYC companies, and also if there is any story or alpha to be made, we get you those stocks as well. But before that, I would like to give you the entire picture about a company, and that company, there are some hints. Try to guess this company. Of course, it's a small cap company. It's a Hyderabad based IT company. Let's give you another hint if you can try and guess that. Second hint is the company deals with AI ecosystem. So a lot of companies are there from Hyderabad which are in software, which are in AI. But let's get into more details about it. The company's stock is down 31% in the last 1 year. So there is a little bit of concern for this company. But what's this company all about? Let's talk about that. And the company in focus is Kelton Tech Solutions. Let's get that on the screen to show you this company which we will be getting in our KYC show. And also there are some questions to be asked where we'll ask the management how things move, but there's a caveat to it. Most of these questions won't revolve around the numbers as such, because there is a silent period for the company. So just an update for you, there's a new AI tie-ups the company is having, and what does this mean? Any incremental benefits which can be seen especially in the numbers, that's what we'll be targeting. The second important question for Kelton Tech Solutions is going to be the exact moat and business model of the company. What does this company actually do? What is the AI element to it, the agentic AI which the company claims, and what's the benefit like going ahead? Is there any agility at play, or is it different than the legacy IT businesses? Understanding the billing cycle and the architecture of an AI company, how are they doing that? Have the revenue started accruing? That's one important question to be asked. And also the rating agencies recently have started upgrading the company. That means there is an upgradation at play, especially on the operational and the financial parameters. And generally these are the initial signals where the stocks start doing well. And of course the stock has seen a correction. Another important question for Kelton Tech is definitely going to be the new acquisition plans. Company does have a cash balance, and in case they are looking for acquisitions, which are the areas the main focus should be? So that's what the important question would be. And of course the AI Gigafactory initiative, what it is all about, that's what we'll go deep into it and try to understand. And largely our discussion is going to be on strategy, and Niranjan Chintam, the executive chairman at Kelton Tech, will give us the view forward for the company and the industry as a whole. So that'll be pretty much interesting on the show to have a chat with Mr. Chintam. But let's give you the entire details about the company. Ye company karti kya hai? Let's get into details. What are the overall, parameters where we will be looking at the company, the consulting company as they call it, and they have a global deliverability capability as well. That means you can see the way the GCC expansion is happening. Maybe that can be a benefit given to the company as well. Now they're delivering solutions across cloud, data, AI and enterprise platform. So that's something which we'll be watching out for. Apart from this, looking at the partnerships, this is a very decent partnerships coming in. The larger players are there. This of course includes Microsoft, AWS, SAP and Snowflake, to name a few. So definitely they are having strong partners, especially in the North American markets. 50 plus Fortune 500 plus clients the company is having. And if we get into more details about it, let's see what else is there about the company. Largely we see overall they have an agentic AI platform as well. So that's something which we'll definitely talk about with Mr. Chintam. And what's the growth ahead? Because agentic AI we have been hearing a lot, and how much does it actually fructify? That is important. Recent acquisitions is definitely there, which was announced. Kumori Tech, the company's name. That is where it's an enterprise platform, to put it in a simplified version for you. And the credit rating upgrade was also there, coming in from ICRA for Kelton Tech Solutions. So that itself is an important trigger or a point of inflection, if you can call it. Recently they partnered with Future Agent AI Labs as well. So this is important as well. But partnerships are there, but AI will definitely take time, and if that benefits come, then we need to wait it out. But let's see how the revenue by geography split is there. The US still contributes the majority of revenue, almost 82% of that coming in, minor revenue contribution coming in for India and the European markets, but the focus is on the US market. It's very much important. If you look at the segment also, the digital transformation takes the bulk of the revenue contribution, almost 83% of that coming in. But apart from that, there are other solutions also. This includes enterprise solutions as well. But why the stock is out of favor? Is there any value here? The first is there's a lack of analyst coverage coming in Kelton Tech Solutions, and that is why we come and get you these companies in KYC to understand whether they are investable or not. There's a lack of institutional support. If you look at the FISDI, so concerns are definitely there on the stock. But let's see other reasons why it is out of favor. There's no major financial performance which has come in from the company yet. So we need to see a good up move or a growth coming in, and that is how the market will award a company. At the end of the day, we need to see the earnings growth as well. The rapid transformation is happening in AI. So there is a boon as well as a bane if you are totally into AI, and each time some larger players comes up with any kind of an update, this definitely scares the smaller players, which Kelton Tech is also there. So both sides, it's a sword when it comes to AI. Also, apart from this apart from these key reasons why the stock is out of favor, is the flows. The flows have also actually come on the lower side. So I have given you the entire picture for Kelton Tech Solution, but let's understand the rating parameters where we judge the company in KYC. This is the traditional format which we follow, and largely we do not change that. Income statement, balance sheet, cash flow, these are the original numbers to look for in the company, and of course we'll get the Q3 numbers. Remember, the Q4 announcements of this company has not been there, and there is a silent period, so the management won't be talking a lot on the numbers and the outlook, but nevertheless we'll try to take out as much as possible. Return ratios is there, and also the street trade shareholding, something which we talk about. Valuations, we'll try to compare it with itself. We haven't got an apple to apple pair, and the outlook for the company and the industry as a whole. So this is how we'll be judging Kelton Tech Solutions overall, giving us totally 8 rating parameters. But apart from that, on the show is also very much important, and the management, if we talk about, we'll speak about that. But the first thing would be the income statement. Over here we see the revenue, EBITDA, these are all single digit 3-year CAGR growth. So there's nothing great about it. I mentioned you why the stock is out of favor for the street. But net, let's see how the Q3 numbers have shaped up. Is there any bigger change? And yes, there seems to be a marginal uptick coming in the majority of the metrics, and of course the margin also going past that 12% mark and coming in at the 13% mark. So net, it's neutral when it comes to the overall setup, and it has come back to its that 12% margin trajectory as well. But that's not enough. The company needs to come with something more superlative performance, because the growth numbers need to be seen. If that happens, then we see the EPS contribution coming in. So net, it's a neutral rating, I would say, when it comes to Kelton Tech Solutions. But let's also point out the balance sheet. What's happening here? Largely balance sheet is stable here. Even if you look at the equity and the book value, and the debt front isn't so much, because the company itself is an IT company. Debt ज़्यादा इनका होता नहीं है, cash balance रहता है, या तो कभी acquisition करते हैं या तो कभी buyback करते हैं. But definitely we'll see what this company does. It's a small cap company. That is why it is something to take everything with a pinch of salt. Just look at the levels which I spoke about, and it's almost stable. So it's a neutral rating when it comes to the overall balance sheet. But apart from income statement and balance sheet, let's also talk about the cash flow, how things are moving, and that's also pretty much important overall in the market, how the things move. And remember, there is some sort of, you could say, a little bit of seasonality also at play, and that's what we can see over here. So company needs to show, see in FY25, the cash flow from operations was on the lower side. PAT has been strong. So there are some signals, but it's still mixed when it comes to the cash flows. So we'll try to understand this structure also in the future about how this structuring happens of the cash flow. But right now it's a neutral rating when it comes to the cash flows. Apart from cash flows, let's talk about the return ratios. And return ratios is strong. FY23, the return ratios is roughly 14%, and that is where we see the growth coming in at 16%. It's actually sustaining in FY27 as well. So the ROC numbers and largely the ROE numbers also have shown strength for this. So I'm going to give this a strong thumbs up when it comes to the return ratios. Also, apart from return ratios, let's talk about how the shareholding has moved, and there's a concern coming in. Of course, the shareholding drop has been there, but no participation has come from FIs and DIs, and of course, looking at the market cap also, largely FIs, DIs in the overall midst of uncertainty in the small cap, mid cap have actually shied away, but nevertheless, no participation has come. So net, the shareholders also, you talk about it, retail has gone up, but institutional support is not there. That's a big overhang of the stock, and that's why I've given this a strong thumbs down. Apart from this, let's talk about how the things are moving when it comes to the overall street cred. Street cred means how much percentage of returns have been made, kiska paisa bana, and abhi tak paisa laga nahi hai bana hai. It's been year to date basis, stock is down 21%, 6 months stock is down 35%, and even 1 month basis you see the stock is down 11%. So definitely concern is there. Over the last 5 years, just 6% of returns has been made. So definitely there is a big concern. If you are an investor, you might be trapped in this counter, and there might be some reasons also why it's out of favor, but we'll try to understand the other side of the story from the management as well. But as of now, street cred, I'm going to give this a strong thumbs down as well. Apart from street cred, we talk about the valuations, and valuations are quite cheap because of a significant correction happening. In the 5-year peak valuation we have taken out is 28 times, and compare that with the current numbers, that's coming in at 9 times. Even the 5-year average numbers, if you look at it, it's at 14 times. So the valuations are dirt cheap. Because of that basis, if you are taking any decision, then it's a strong thumbs up when it comes to the valuations as well. So we have done 7 rating parameters for you, but the last one is very much important, the outlook parameter. Over here, the credit rating upgrade has come in. Maybe that's an initial sign for a reversal of fortunes for this counter. The second outlook which I have taken, that's also very much important. Let's pull out the second outlook as well for Kelton Tech Solutions, where there is a bullishness coming, and especially because the revenue visibility is becoming better and better, and that's what we had read in the rating agency report also. Order flows are also coming in, and the moment that starts coming in, some certainty is given to this counter. The promoter participation via share warrant recently was there, so a little bit of conviction is there in the counter, but we'll wait for something major from the company itself, because announcements are coming a lot in AI, but how fruitful are they? What are the exact numbers? That is why the street is still confused regarding this AI related announcements, and maybe for the stock as well. Company is focusing on agenting AI platforms. That is important as well. But how things move, it's a very, very developing situation. So net, it's a neutral rating for the outlook. But let's understand the total KYC ratings of the company which we have given. What are the numbers looking like? Largely, your income statement, balance sheet are largely neutral. Of course, balance sheet management is strong. Return ratios is good. Anything above 15% for an IT company is something which an investor should look out for. Shareholding, lack of institutional participation, and street cred. The stock has not made money for a short term, medium term, or even the long term investor, and that's a big concern. That's why I've got this company in KYC to see whether any alpha comes. Is the stock making a bottom? And of course, the valuations are very much interesting because of the stock fall. And outlook, it still seems neutral because the AI related announcements is there, but we need to see the growth in earnings. That's the first and foremost important thing, and largely it's 4.5 out of it, largely in line with what our research is, but we'll get in more details as well. And of course, joining in would be the Niranjan Chintam. He's the founder and chairman at Kelton Tech Solutions, and I'd like to give a little bit of snippet about him, and we'll just take a break as well, and we'll give you the entire picture. 30 years of experience coming in, but he has led several Fortune 500 companies and government agencies in US and India as well. And also another angle is that he's an MBA from Wharton School of the University of Pennsylvania as well. But do hold on for a break. After this break, we are going to be speaking to him. He's the founder and chairman of Kelton Tech, so stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stock
Presented by Canara Bank. Together we can.
Welcome back to KYC, and joining us is Niranjan Chintam, the Executive Chairman at Kelton Tech Solutions. Good afternoon, Mr. Chintam. It's always a pleasure to talk with you, but just give us a total sense about the exact moat and the business model of the company. The street seems to be confused regarding what the company actually does. Is it an IT company? It's a service company? It's an AI-related company? What it is all about?
Sure. Thank you, Sharad, for having me, and thank you for giving me an opportunity to talk about our story. Okay, so we'll talk about Kelton, how is it different from the competition that is out there. Let's start with that and we'll go from there. Kelton has been born digital, right? We were born in 2009. Unlike others where they had legacy, we don't have the legacy. So we have strong engineering depth when it comes to cloud data and the modern platforms. So for us, is that AI, is something that is another tech for us. Even though it's just latest and greatest and it's all cool, for us it's another tech. It's an emerging tech, and we believe in using these kinds of technology to build platforms and solutions for our customers.
Right. So we understood a little bit about the company, but there has been recent new AI tie-ups which have been there. What does this actually mean for the company? Are these just announcements, or are there any incremental benefits to it?
Okay, so for us, any of these new AI, let's call it LLMs, right? Be it OpenAI or Claude, is just another tool for us to provide a solution to our customers. Talking about the agentic AI, agentic AI is nothing like, it's behaving like an agent and performing certain tasks assigned to it. You typically have a master agent, which we call the orchestrator, that orchestrates everything behind the scenes. And then you can have multiple agents running or specialized agents running the solutions that are required to do a specific task. Once the task is complete, it could call another agent, or it could conclude and say, I provide the solution, give it to the orchestrator. And then the orchestrator decides what next to do it. So all of these put together provides a solution to our customers. So what that requires is, very deep engineering expertise is required, because you need to know when what agent need to be called. And also we need to have a domain expert. So if you don't have the domain expertise, I'll just pick an example of, let's say, travel and hospitality. If what happens once you book a ticket, or you want to book a package of let's say you want to have a travel plan or a vacation that you have, what could be a package for a family vacation or a pilgrimage vacation versus, let's say, for instance, somebody wants to go on their honeymoon. So those kinds of things are all orchestrated behind the scenes based on what the question and the answer is provided.
Mr. Chintam, you explained us about the AI front, but the question remains is how is the billing and the overall architecture looking like for these AI companies? We need to understand the entire cycle, how things plays out. Your views on that?
So the billing cycle, typically is outcome based. So what we have seen is, unlike the traditional model, when it comes to AI-based solution, it is an outcome driven. People have gone away from time and material to an outcome-based one when it comes to some of these AI, led solution offerings. There are still customers of ours who say, okay, hey, we don't need you to provide a solution. Give us, in some cases, an AI engineer that could do certain tasks. So that requires deep expertise, right? It's not like you can just train somebody for a few months and then say, okay, he's an AI expert, but he needs to have all the engineering skills that are required and be able to ask the right questions for these AI tools, be it like I said, the ChatGPTs or the Claudes. Ask the right question to get the right answer. In some cases, right, people have to keep talking about, it's not like a traditional normal user where you ask a question, you get a response. In our kind of a question, it's almost like a 3-page question before the answer that we are looking for comes out. Okay, so that requires a lot of expertise.
Right, and Mr. Chintam, apart from this, the question definitely is on the improving credit profile of the company. That has been increasing, and that's a precursor for the good financial health of a company, to just put that perspective. Your views on that?
Sure. So the credit rating increase is primarily driven by two things. One, the cash flow that is coming in. The second is the margin improvement. These two led to credit rating and also the pipeline that's seen. What is the pipeline that we have? The credit agency looked at that, then looked at what the competitors are looking, and they came back and said, hey, your rating is much better than others, or comparatively, it has gone up. We used to have BBB. Now we went to the A family of thing. So that it becomes easier for us to get credit now or reduce our interest obligations when to come to the banks.
And Mr. Chintam, is there any new acquisition plans as of now? And if yes, any sectors which are looking good, or you'd like to wait it out, seeing the current market conditions?
See, at this point, there is nothing in the pipeline as such. But with that said, right, we're always opportunistic. We believe that we acquire for two reasons. One is either we want to penetrate a certain geographic region and or a certain skill set that we don't have or we have less of, then we go buy a company. Example is the Kumori acquisition that we already announced. I can talk about that. Is primarily we acquired it for the ServiceNow space that they are in. To get to that particular level of partnership that Kumori has, for us, it would have taken us 18 months to 2 years. Even though we had all the credentials and the certifications, but to get that partnership level, it would have taken that long. So we felt that, ServiceNow is a growing space. We want to be in that space. Some of our customers are asking for that kind of expertise to be provided. We went and bought Kumori. Now we have a ready-made certification and partnership level at ServiceNow. Now we can cross-sell and upsell to our existing customers and or the acquired customers of our other solution offerings that we have.
Right. And Mr. Chintam, what is the AI Gigafactory initiative? The company has spoken about this also, but the longer scheme of the things, what benefits we can get from this?
Sure. We partnered with a company based out of Hungary that has been tasked to come up with a European-wide AI Gigafactory. Basically, it's nothing but coming up, just like you're seeing that that Google has come up with a data center solution in Vizag. Similar to that, they want to build an AI kind of a data center there, and they're using us as their implementation partner when it comes to the AI Gigafactory. And that is a work in progress. We have a MOU that we signed with them, and we should start seeing revenue coming in shortly.
Well, we have discussed a lot about the company itself, but I want to take one step back. A 20-year-old who's watching KYC right now wants to start in AI services from India. What can he or she start with?
So today, building let's say a software has become so easy using something like LLMs, cloud code. That's what primarily everybody is using, cloud code. What they should be focusing on, just not building that particular software, but it should be driven to a certain outcome, right? Nowadays, every customer of ours is coming and asking, what's the outcome? Yeah, building software means nothing. Can it scale? Is it secure? Tomorrow, can I fulfill end-to-end solution? And you're not only looking at end-to-end solution, you also need to talk about what kind of data that you're going to get. How good is the data associated with that? It is as good if you don't have good quality data specific to your particular industry or the solution that you're trying to offer. You will not get what we call garbage in, garbage out, right? If you need to have the right amount of quality data, curated data that is fit to that. So that is what is required. 20-somethings are much easier to adopt these kinds of new technologies versus, let's say, let's say 20-year experienced person. So all the 20-year-olds, I would urge them to start thinking of solution offerings, and they should be looking at building platforms of the Googles of the world. We need to start coming up with products in India that could scale up. Because remember, building for, let's say, 10 users to 100 users is easy, but how do you scale it up to 1 million users? That is where your skill set comes to. And that is what Kelton has.
Well, thanks a lot, Mr. Chintam, for that. And you've given us interesting views on your company, clarified the business model and the growth outlook ahead, and a very important statement for a 20-year-old starting in the AI services. Thank you very much, Mr. Chintam, for that. And that's the management of Kelton Tech Solutions we're talking about. And they did clarify the business model, their growth outlook, despite not sharing a lot of numbers, because of course it's a silent period. But definitely we have found some value in this company. And for interesting companies like this, keep watching KYC and I'll get you interesting stories where you can make alpha also. Stay tuned to NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only.
Presented by Canara Bank. Together we can.
I've heard a number of alarmist statements over the past few months. Here are some of them. India is too expensive, not a place to invest in. The Indian market has still got valuation multiples at 25 times, and foolish retail investors continue to lap it up because they've been convinced that SIPs will make them rich. If you're not investing in global markets, you're losing out. India's demographic dividend is finished. Mutual funds, and by extension retail investors, simply exist to provide an exit to foreign institutions. Depending on which phase of the market we're witnessing, you'll hear a number of narratives. In this case, of course, over the last few months, it's been negative, and so the narratives have matched that sentiment. But now, more than ever, these ideas get magnified very quickly because of social media. How much of this is true? And what should you do? Join me today on MoneyWise is Devina Mehra, who actually needs no introduction. And I say that because you're on this program as well. We've been looking forward to speaking to you. And you've shared this book with me, which I intend to read, Money, Myths and Mantras. So you wear various hats: investor, advisor, educator, author. So I'm going to ask you to don a few of those hats through this conversation, Devina. Let's start with maybe busting a few of those myths or busting a few of those narratives. India is not a market to be investing in for the long term. Is this correct?
What I find amazing is that both retail investors as the so-called experts, everybody drives looking backwards.
Yeah.
I had posted, I actually used AI to generate a caricature of somebody driving looking back. So because that's what people do. I mean, how many people told you in 2024 that India was an expensive market? Because India's PEs were definitely even much higher compared to the rest of the world then. And nobody even told you that consumption was slowing in 2024. I think I was the only person who was saying that in 23-24, India's consumption growth was at a 21-year low. But till the market was running, nobody pointed it out. Only end of the year when the market started to fall is when you started to see this logic. In January, you had investors putting in more in gold funds than in equity.
Yes.
Last year, March, April, the gold inflows were hugging the zero line. So everybody looks backwards. And actually, we did this, that if you systematically invest in whatever has done well in the last period, you will equally systematically underperform.
What time frame did you take?
I mean, we looked at 1 year and 6 months. And I mean, actually, 1 year was mostly what we worked on.
That's the tendency that people
Yes, and even funds. I mean, this was done by a fund house recently, that they looked at 5 categories of funds, large cap, flexi cap, small cap, etc., across 8 3-year periods and rolling. And they said that if you invested, let us say, if you invest in the top quartile, the top 25% of the funds in a particular category, in the next period, 80% of them would not be there. That's the statistic. Between 60 and 100% move out of the top 25% in the next period, an average of 80% plus. So that's what you're looking at. And also, I mean, global investing. I mean, I'm the one who's been propagating global investing for the last so many years. Yeah. I mean, First Global was the first Indian company to go global.
Sure.
And not just in investing, in financial services overall. I mean, RBI did not have a category for a subsidiary, or overseas subsidiary for anything other than banks. This is back in 1999. So we became the members of London Stock Exchange in 1999. We were not just the first Indian, we were the first Asian members, ex-Japan. And the next year of NASD. So I have been propagating that you must globalize your portfolio because India is less than 5% of the world market cap. There's no reason 90% or 100% of your portfolio should be in India. But now it is a knee-jerk thing that last year India didn't do well. So now we have so-called global investment experts sort of sprouting everywhere.
Sure. But so
you have to be sensible. I mean, you have to be sensible. That's the whole point.
You have to be sensible. And the kernel of truth in this, which is ultimately the truth that will lead you to success in your portfolio as well, is that you cannot rush after or run after success. And you wrote about this in a column that you shared with me recently, which is the secret of success of Rakesh Jhunjhunwala. Why was he successful over the course of his career? And you write that it was not all of his ideas that worked. It was a few stocks that made him... It was a very few stocks that made him money. You're talking about Titan, you're talking about Crystal, you're talking about Lupin.
And one or two others. That's it.
So therefore...
And it's a very similar pattern for Warren Buffett also.
So, but what is the secret here? What is the learning? If you look at Rakesh Jhunjhunwala, there are so many ideas that say that this is a man that was a maverick investor. He, of course, was ahead of his time and he stood apart from the crowd. There are so many adjectives that are used to describe him. And he was great. He was great. Please don't get me wrong to say that I don't believe that he was great. But then this is a man that he himself would say, look, there are periods when I have not made money. So what is the learning from Rakesh Jhunjhunwala?
See, one is the learning from Rakesh Jhunjhunwala, and the places where I agree with him and places where I don't. But the part that I agree, and he was one who was 100% in equity, which is not something I recommend, and who made a lot of money, of course. But I think his superpower was not investing. I mean, every time you'd meet him at a party, he would be touting some stock with equal passion. And, so many of them went nowhere. But I think his basic thing was he understood how lumpy equity returns are. That equity markets are such where you will get a 10-year return in a 3-year period and get nothing for 7 years. So he said that's the part I have quoted. I mean, there was a whole book on him where they talked about his stock picking, all that. Yeah. And for me, there was only that one line that was a key takeaway where he says that I made money in spurts. I made money in 89 to 92, 2003 to 2007. 2003 to 7 is a period when the market went up six-fold,
yeah.
But after a 9-year zero return. So that's the part people forget. And then he talks about one more period, I think 2009 to 11 or something. And he said in between there were even 5 years where I didn't make money. Sure. But of course, my recommendation is that as an investor, never be 100% in equity. Not even if you are 25 and in a good job, because that's the sort of question I sometimes get, that I'm 25 and in a good job, should I be 100% in equity? No. You must have an asset allocation precisely because of this, that equity returns are not predictable. So equity should be money you don't need to touch for any reason whatsoever for at least 7-8 years. That's the thing. The second thing is that manage your risk well. Don't be on either end of the risk spectrum. Don't be in 100% safe assets like fixed assets, fixed deposit and PPF, and don't think you will become a day trader either. So, do a sensible asset allocation, then don't tinker around with it too much, and don't miss out on global diversification. And the caveat to global diversification is that the US is not the globe, which is the other thing. People think, one NASDAQ ETF or one S&P fund is enough. It is not. US is not the globe.
We'll get into some of these aspects, but I find what you said interesting about the periods of underperformance and the fact that there are periods of significant outperformance, but it can be followed by protracted periods of underperformance. And I think that the reason why we're dealing with so much pain and angst right now for the regular investor, Davina, is that they haven't experienced it.
A lot of them are new.
A lot of them are new. A lot of them climbed in after the COVID-19 crash, which was very, very short. And so this 2 years of underperformance of the Indian equity markets has been painful to the extent that they can't believe that they've gone through this. So therefore, what is the kind of message in that the tendency is to lose that gumption and to lose that disciplined nature. And a lot of people have kept their SIPs going. But equally, there are a lot of people who've cancelled and who've said, look, this is not for me. My SIPs have not made money. So what is the right path here?
The right path is to have the discipline. In fact, this is one of the areas which has interested me a lot in the last decade or so, which is not just the financial or investment analysis, but how many ways your own brain trips you up? How many, biases, randomness, how many things are there in your brain? Your brain is not set up to optimize your investment portfolio. It is set up for only two things: survival and procreation. And it might actively be working against your portfolio.
Give me some instances.
So that's the whole point. See, I mean, the time that you should at all think of booking profit or stopping the SIP is when things look very, very rosy. I mean, in middle of 2024, not just retail investors, I had family offices coming to me and saying, I don't have unrealistic expectations. I'll be happy with 30% compounding. I'm not making it up. It is.
And that must have been scaring you.
And I said, that is an unrealistic expectation because then it appeared that the money was there for the taking. Every stock you buy is doubling. So that time, no one wants to hear about risk management or being conservative. One of my RMs came and told me that people are saying, yes, we like listening to your ma'am, but she talks like Mother Teresa. This is not how it works. Launch a small cap scheme now. This is the time. So so actually, I mean, this is not my opinion. This is research studies show that sentiment is a contraindicator. Oh. So the time when you are scared to be in the market is when you should be in the market, because then the next period returns are better than average on a probability terms. And it is when things are look too easy is when the next period returns are below normal. So that's why, I'm saying that a period up to September 2024, this excess buoyancy was there. And then you had a somewhat of zero return.
Sure.
And same thing you will see that, this is the reason, I never make index projections, not in January, not in Diwali. But this year I've been saying that in probability terms, 2026 should be a better year than 2025, simply because for the first time I'm seeing my fellows in the business talking about risk, enumerating risks. Otherwise, everybody was only selling quote unquote India growth story. Well, the very fact people are talking.
So therefore, and this builds into to the point that you were making earlier about the percentile of funds that have outperformed, in that they've had their time in the sun. It's the probability of the next period being against them is higher than for those people that have actually been a little bit of a laggard.
Yeah.
The possibility that they will kickstart their leg. So don't rush after the gainers. Just build into this, because at this moment, a lot of people have actually gone through the last 3 months, right? And you've had at the index level as well, pretty deep cracks. Of course, we've come back last week. But having said that, a lot of people did deploy in the first week and a half, 2 weeks. So whatever they had, Davina, because people said buy the dip, they actually went out and did that.
Right.
And then they don't have ammo. They don't have the dry powder to deploy any further. They're
That's
spent.
okay. They can stay on. It doesn't matter.
So
whether
it doesn't matter.
Yeah, deploy more or you just stay on. That's all. I said don't tinker around with your asset allocation too much. On the other hand, I'm not saying buy the same stocks and hold. One of the big myths I've talked about here, buy and forget does not work. There is nothing like that.
Fill it, shut it, forget it.
It does not work. All the examples you hear that so-and-so's grandfather bought Hindustan Lever, or someone's father or mother bought whatever, HDFC Bank, and this is how much money they've made. These are all, you're talking the successes and you're forgetting the failures. Even, a narrow thing like banking. Okay, HDFC Bank and Kotak gave those kind of quote compounding. But you've forgotten all the other banks that got licenses around the same time that
did nothing.
Yeah, did nothing means went bust. Global Trust Bank, the Times Bank, Centurion Bank, so many of the public sector banks. Yes Bank went through such a problem. So you forget all that. You look at the original Sensex list, and those were not fly-by-night companies. Those were companies with decades of
track
record. And look at the industries at that time. It was textile, paper, shipping. There were companies like Premier Automobiles, Hindustan Motors. There were all the JK Group and the Mafatlal Group, and everybody who's Thappers, who all passed into history. So that's how, those were the blue chips there. Make no mistake, they were the blue chips. Out of those 30 companies, only one had a relatively short track record, which was Indian Hotels. Every other company was around 40, 50, 70 years.
And so therefore, how many of the 50 stocks on the benchmark today could potentially not survive?
Yeah, not survive or become irrelevant.
Sure.
You know, like for example, when we started covering the US in the early 2000s, the tech majors meant Dell, Motorola, IBM, Cisco. People forget at one point was the highest market cap company in the whole world. So they're still around, but they are not the companies you think of as tech majors. I mean, the only tech major then, which is still a tech major, is Microsoft.
Sure.
That's it. The whole list has changed.
So the argument, for example, that people are making that IT companies in India are now, probably facing their last leg is a relevant argument to make?
I think the obituary of IT services has been written too many times. I mean, starting from Y2K, that after that they won't have anything to do. The cloud came, the digitization came. I am not of that view. I mean, they may not be it's more a macroeconomic question, because IT and related services were the direct and indirect driver of employment for the whole economy. I mean, that's the 25-year story of India is employment by this sector. And because of that, you have of course, you have the real estate and the retail and the driver.
In certain pockets, yeah.
Yeah, all of that. So it's a multiplier also of other people being employed. So I think they will be able to pivot this. That I have no doubt, because see, whatever AI does, no enterprise is going to hand over the keys to AI. There was a research paper recently called Agents of Chaos, that what happens if you allow the AI agents free rein. I mean, they've wiped out databases, they've wiped out systems, they've lied about it, they've been security breaches. So there will always be need for an intermediary even to manage the AI. So that's not going away. I mean, NASSCOM itself, even on employment, expects a J curve that for some time there might be a little decline, and then and that's the history of technology over 300, 400 years. Every time a new technology comes, you say that this will, wipe out employment. Look at banking.
Sure.
I mean, I was a student, but I'm old enough to remember that all the banking strikes when computerization came in. And they said, this will take away employment because...
There was an RBI study that the deputy governor of the RBI quoted at a monetary policy that I attended, not the last one, the one before that. And she said that there are studies that suggest that employment actually gets a fillip.
Always.
When you have a disruption in technology.
Always. I mean, that's what I'm saying, that since the Industrial Revolution, that's the history. That every time any new technology comes, that, these many people will become unemployed, which, at the first order effect, it does happen. Automobiles come in, yes, everybody connected to the horse went out of business. But ultimately, it drove higher employment. This is true even of whatever spinning technology, weaving technology, that always, and today in banking, you have many more people employed than were employed before computerization.
Equally, Davina, I saw a meme the other day which said that the horse does not lose its job on account of the car. The horse loses its job if it doesn't learn how to drive. So there is an out. But having said that, you have such a keen focus on international markets, as you pointed out.
Right.
But equally in your argument, you've said that the best performers tend to underperform later. If we're talking about relative performance and valuations as things stand right now, and just the global landscape at this moment, you've seen the US markets perform a certain way, you've seen Japan, you've seen South Korea because of certain pockets, right? There is concentration in those markets as well.
Very much. Taiwan and Korea are extremely concentrated in markets.
And so therefore, if somebody's listening to this right now and listening to you to say global diversification is important, how should you incrementally do that? It doesn't make sense to go whole hog, right?
So, I mean, globally also the leadership changes. I mean, people think that US drives the whole global, the direction of the global market. People forget that after the 2000 crash, NASDAQ did not cross that high for 15 long years. It took till 2015 for it to meaningfully cross that. And in between, there was this period, 2003 to 2007, that we said in context of the Indian markets, that was actually a golden period for the entire emerging markets. The entire emerging market index went up 3.5, 4 times. Brazil went up 10 times. India went up 6 times. And US, which was not coming off a high, which was already in the doldrums post the tech crash, still hugely underperformed. That's when people said, the stories always follow. So, whatever is happening in the market. So that's when people said, oh, now the century of US is over. Now the baton has passed on. That's when BRICS was coined.
Yeah.
And then US started to outperform again. You forget the stories.
Sure.
So that's the history. So we don't think it is like a very easy thing that you can do an allocation one time in terms of the countries and let it be. So, and because this is a cause for me, I think Indians do not diversify globally. We actually have a product that invests across the globe, except asset classes, starting at $10,000, which was 7.5 lakh rupees not very long back. Now it's 9 lakhs plus.
I get it. I get it. But having said that, even that product, okay, there are a lot of people today that are watching even this program, Davina, that will be able to access that. But let's face it, a lot of investors, a lot of retail investors in India do not have that capital or the ability to deploy that kind of money. So for those people, with a restriction that is in place in the mutual fund industry, to say that you can't.
I read somewhere of some Gift City product that
Yeah.
invests in a global index.
Sure.
So that might be the simplest thing if you can access that.
Yeah.
Otherwise, LRS money, sending LRS money is very simple. It takes just a couple of days.
To set things up.
Yeah, it doesn't, it's not a very onerous task.
In terms of asset allocation, and you mentioned that 100% equity is not the way to go, right?
Not at all.
And for good reason. We've seen what gold has done. People, of course, have gone the other way to add 30-40% of gold to their portfolio.
Which is also not right.
To their detriment.
Gold, this also people do not realize, because we are very, very data driven. So gold in dollar terms is a more volatile asset than equities. Just in this whole gold boom, I'd seen a headline saying gold has not seen such a rally since 1979. I said, go forward from there. Now what happened? So 1980, it made a high. Yeah. That high was not crossed till 2007. 27 years it took. And even nearly 2 decades after that, it was still down 60%. In 1999, the price was 60% lower than the 1980 price.
But what is the probability of that happening now? Considering
No, the second high, it's not an aberration. That I said it crossed in 2007. It again made a high. From that high, it crossed, it fell 40%. So it's not that it was a one-time thing. That's the whole point. It is an extremely volatile asset. In rupee, it looks like a decent chart. And our grandmothers were not wrong in buying gold for two reasons. One main thing is that the rupee depreciates.
Correct.
And number two, earlier you could not invest in overseas markets. You could invest that this was the only asset you had to give you a currency hedge.
Sure.
So our Dadi Nani were right to buy gold because, but now you have a choice. Now gold is not the only asset you can. So, normally we in our multi-asset funds, whether it is India or global, we do have gold and silver, but both together, we've never crossed into double digits.
Fair point. And for the Indian retail investor, the average investor, from your lens, and this is not necessarily a one-size-fits-all solution.
Right.
What is the kind of exposure that is appropriate to international markets?
If you ask objectively, it should be very high. As I said, India is only 5%, not even 5%.
What is
less
the
than
definition
4%.
of very?
Huh?
What is the definition of very?
So I'm just telling you. So, I personally would have more than 80%, but I would say over a period of time, have 30-40% at least in your
equity portfolio.
Of your equity portfolio. Because that's, when I started working, the dollar was 12 rupees. So that gives you, when you are talking of long-term financial planning for goals which are 10, 20, 30 years hence for your retirement and so on, you cannot forget that this is how the rupee behaves. Look at people now say that, okay, my child probably US is not such a good place to send children. Let me send them to Europe. Just in 2025, your bill went up 20%. The rupee depreciated against the euro 20% just in 2025. So that's what you're talking about. So, as I said, objectively, because you already have exposure to India, you have your house here, you have your career here. So it should be even proportionately less, but I'm saying at least get started.
And
so this came home to me. And why did we go global in 1999?
Yeah.
One main trigger was the Asian crisis of 97,
the currency
98.
crisis.
Yeah, currency and markets both fell. And between the two, all those markets in dollar terms fell between 50 and 90%. Taiwan fell 50%, Indonesia fell 90%, and South Korea, Philippines, Thailand were between this 50 and 90. And that was the like kind of a wake-up call for me that this is the danger of being in a single market. And that's how, next year I went global, because I said, this is not good enough. And I had spent a few months in Indonesia during my Citibank days, so it was very, close home. So I said, like, if I was an Indonesian, 90% net worth would have been wiped out in a year. This is not a sensible chance to take.
Yeah. So, okay, but tactically, and this is now we're drawing to the end of the conversation, Davina, and it's already been insightful, fascinating. Just bases the conversation we've had so far, and we're talking about a situation where people are not positive in India at this moment. And just from a sentimental standpoint, that should tell you that it might be a good idea to double down. Is that wrong?
Yes, that's what I was saying. I mean, all research studies, and this I'm not just talking India and US, talking Portugal, Brazil, wherever this study has been done, it's the same conclusion that sentiment is a contraindicator. So it's when the voice in your head is screaming, get out, is when you have to hunker down and stay in.
And this is that moment?
Yeah, and when everybody says that, sell everything else and put it into equities is when you should stop and think about it.
But in your opinion, is this that moment for India?
No, I'm not saying, as I said, I never make a 1-year projection. That is something called objective ignorance, things which you not only don't know, but you cannot know. So in 30 years, I've never made an index projection. But as I said, in probability terms, this looks like it's probably a better time.